Hey. Welcome, everybody. Next stream is up. It is here. It is time for our afternoon stream. We will start with Wallstreet Global Trading Academy and the man who runs that room, David Green. David, how was your weekend, sir?
Excellent. How was yours?
Good. It is time to get the show on the road. I'm going to see myself out. I'm going to bring on your charts, and let's do this.
Oh, I was digging that, man. All right, good afternoon, everybody. I loved what you and Peter had to say during Saturday's boot camp. How does one become part of your trading room and not just get the course? All right, we're going to get to all that. So let me thank Spencer again for giving me time to spend with you guys. We've been together a few weeks now, and I want to give you guys as much content that's going to actually help you with your trading as we can in the short time that we have together. So for those of you who don't know me, my name is David Green. I've been trading for about 35 years. I retired from the Florida New York Stock Exchange at the end of 1999. And basically I've been trading for myself, concentrating on day trading with some swing trading and options trading thrown in there. And for about 11 or 12 years now, I've had my own very small private trading room where I trade the markets live all day long in real time, posting every trade before we get in them, stop orders and profit targets. And we have recently curated a course, myself and Peter Tuchman at Wallstreet Global Trading Academy, that basically encompasses every single thing I do every day in the room all day long, from the language of the stock market through our chart setups, reading our charts, 5 different trading techniques, options, swing trading. So really a one-stop shop for all your trading needs. I just want to say thank you to Spence and Aaron again. I will make available to everybody that is with us today, if they would like, a 5-day free trial into the Green Room, greenroom-live.com. I have had a great response from the Benzinga people coming in and hanging out with us for 5 days, and more than a handful have decided to stay with us and sign up for the room and buy the course. And I don't think anybody is unhappy that has done that so far. So what I want to do today, if we can, is talk to you about some actual trading techniques and how we can apply them into our trading. And if we have time, maybe we can talk about a little swing trading. So anybody who has any questions at any time, please pop them up there. I can see, I'm watching. So everybody knows, and I've had this conversation with everybody a million times, that money management is by far the most important part of trading. I could fill this room with 5,000 people who can pick the right spot to buy and sell a stock, and 4,999 of them go broke because they don't know what to do once they're in a trade. So we keep our losses small, let our runners go, have stop orders on every single trade that we do. We never turn a winning day into a losing day. And that's basically, I'd love to hang out. I'm limited to 3 days to offset the cost of the room with day trading. And Jason, we can talk. Anyone who has a problem, with the room or getting into the room, you get in touch with me and we'll talk. You'll find that I'm very amenable and fair as far as that is concerned. So everything that we do as far as our trading is concerned is based on technical analysis, okay? 90% of what we do, about 10% of what we do is based on me having seen this movie about 50,000 times before and kind of know how it's going to end. We can talk about individual stocks a little bit later on, Han. What I would like everyone to do, okay, is maybe take out a piece of paper and start taking some notes. We're going to talk about a couple of trading setups that actually happened today that I can show you. I'm going to explain how we got into the trades, why we got into the trades, and what kind of technique it was. We have 5 trades that we look for during the day that basically encompass anything a stock can possibly do. So we have a trend trade. I'll just give you a quick look at one so we can take a little example of what it looks like. If we look at Tesla today, basically for the whole day, from the right after the opening, the stock has been going up. So that's what we call when a stock is in a trend. Trend trade are the ones we want to make the most money on when we get into them. We have earnings coming out in the next couple of weeks, which is really a great time for us and a good time to be learning how to trade, because usually when earnings come out in a stock, when they're bad, it stays bad. And when they're good, it stays good. So this is an example of an uptrend in a stock. I can't get into actual talk about how to enter that trade. It's not really a great setup. Then we have what we call a base trade. We have a regular moving average trade, double top, double bottom, and a far from moving average trade. That's it. That encompasses everything a stock can possibly do. If it's going up, we want to trend it. If it's going down, we want to trend it. When a stock is up trending, we want to be long. And when a stock is down trending, we want to be short. I'll show you a little Intel here. As we can see now, Intel was just zooming along today until news came out that NVIDIA was eating their lunch a little bit. But this is a beautiful example of a downtrend in a stock. Stock is going down, right? And if you'll notice, every time the stock pushes up and hits a little resistance level, what does it do? It stops going up and starts going down. When up here, hit a little resistance level, stop going up, starts going down. When stocks are in trends, they're going to usually respect our 9 and our 15 EMA. So let's talk about the EMAs for a couple of minutes. And these are the ones that we use, and it works best for what we do. We have a 9 EMA, a 15 EMA, 65 EMA, and a 200 EMA. The 9 and the 15 are the weakest of the moving averages. I will only use them to get into a trend trade. The 65 and 200, we'll be looking to get into regular moving average trades if we hit those levels. So we need a stock to move significantly to get to one of our levels in order for us to make a trade, and that's how we put the odds in our favor of all of our trades working. Last month, we were about 88%. I don't keep track because I don't even like to talk about money in my room. I know for everybody out there, if you have any experience with trading, it's a kiss of death, right? Once you start doing well and start counting de Monet, that's usually when things turn around and you start doing poorly. So I don't let anyone talk about money in my room, okay? We take what the market gives us every day. We do have losing trades and we do have losing days. Anybody who tells you they don't is full of you-know-what. But by using our technical analysis, we're going to put the odds in our favor of every one of our trades working. Doesn't mean it's always going to, but I'd rather be in something where the odds are in my favor than against me, right? We all know when you go to a casino, everybody's going to lose because the odds are against you. And most people are trading and they really have know what they're doing. Hey, Alexa, how are you? This dude charges $4.99 a month. Ridiculous. Well, I'll talk about that for 1 minute because I really want to get the content. Most of the people in my room make that in one trade or a couple of trades. I am with my guys for 60 hours a month, all day, every single day. I help them with their trading accounts. I walk them through every single trade that we do. And, you know, I'm sure I have some people in my room who are here. You get what you pay for. You know, it works for some people and it doesn't work for some people. And if it doesn't work for certain people, that's okay. But for what we give you during the month, which includes my monthly boot camp, where I do the entire course live, trust me, it's well worth the money. But again, to each his own. That's fine. All right, so I want to talk to you guys about one of our trades that absolutely set up beautifully today. I'm going to show you how to execute and how we exactly got into it. All right, so the first trade that we're going to talk about is what we call a base trade. Eager, most people do. And Igar just said, if you join, you think I'll make 500 the first week. It depends on how many shares you're trading at a time. We are not home run hitters. I can tell you that right now. Okay. I try to make a couple of bucks on average every day. That adds up to bigger amounts at the end of the week, the end of the month, and the end of the year. I have people in my room that start out trading 10 shares of stock. And as they get more comfortable, they start trading more and more shares of stock. And they get to the point where they're doing okay. About 50% of the people in my room are making a living trading. We have, in the last 16 months, I think we had one break-even month, and we made money every single month after that. So, you know, again, it's to each his own. I do not actively seek members of my room, period. This is the first time I really opened this up because I love the guys at Benzinga. I love Aaron, and I love Spencer, and it's just a great collaboration. Otherwise, nobody has ever heard of us, and I don't care. I only care about the people who are in my room. And again, I'm going to give everybody an opportunity to come hang out for 5 days. It doesn't cost you a nickel, and then you'll make your opinions after that. All right. So let's talk about a base trade. So what is a base trade? Okay. A base trade is when a stock is going sideways. And we will see this a lot. We'll see it a lot during the day. You'll see it. It could happen at any time, but it's basically when a stock is going sideways. And you can see here, and I'm going to show you a couple examples of this. Okay. A couple examples of this. We have Intel basically trading between 68.08 and we'll go a little higher, 68.20 and 67.80. And it is in this range for 5, 10. These are all 5-minute candlesticks. So for about an hour, okay, 1 hour Intel is going sideways. And what a base is a time in a stock where people are deciding whether they want to buy the stock or sell the stock. And nobody knows. They're watching, they're deciding whether to buy it or sell it. And it's a period of time when there's not much movement. Okay. We want the base to be no more than 50 cents. And what I mean by that is from the top of the base to the bottom of the base, we don't want it to be more than 50 cents. And I'll explain the reason for that in a minute. I'm going to show you exactly how to get into this trade now. So when we have a stock trading in a base and going sideways, when it breaks the base, and in this case, it broke it at about 67.80. Okay. And this is a trade a bunch of people in the room did. 67.80. When it breaks the base, this means that people are deciding which way they want this stock to go now. All right. This got a little help because something came out right around 12:15 about NVIDIA that they're doing very well in their chips. But I wanted to show you an example because it's just a beautiful example. And then I'll show you another example. And I'll try to get to as many of the trades that we have, guys, today. I'm going to give you our trading techniques. Okay. So once this stock, the theory behind a base trade is when it breaks the bottom of the base and it's going down, we get short. I can't pick the exact price it's going to break. So here's how we actually enter this trade. The second that this breaks the bottom of the base by 5 cents, 67.80, okay, 67.80, we enter with a market order. Now it's telling me which direction it's going to go in. So we get short this stock probably around 67.75 or so. First thing we do, like we do with every single trade that we do, is put our stop order in, and it goes at the high sale of the base. If this goes back up, right, it was a false breakdown, and it's probably going to go back up to the levels that it was. So I'm in at 67.80. My stop is 68.30. I am risking 50 cents on this trade. And in a base trade, we're looking to make, this is our profit target, between 25 cents and $2, depending on the price of the stock. So every trade that we get into, we have a target for that trade. And the way people make money by trading these things, it depends on their size of their accounts and their experience. But let's say we sold 100 shares at 67.80. So my target in the $67 stock, if I make $1 to $1.50 on this, I'm very, very happy. So let's say I did 100 shares at 67.80, and we can see, I mean, the stock right now, it went down to 65.50. That's $3 that it went down. And it really hasn't recovered from there because now it's in a downtrend. So here's the trade. We get short right here at 67.80. And we try to take, this is what I always tell everybody in my room. And this is what tell me if any of you guys have problems with this, not making enough on your trades. Type in a number one. Type in a number one if you're not getting the most you could out of your successful trades and you're losing more than you should on your bad trades, right? That is one of the biggest problems that most traders have, right? They'll let their losers go forever and they won't get enough out of their winners. And if you don't have a plan for every single trade that you do, that's never going to work. Think about it, okay? Because even when I say we were 88% last month, that doesn't necessarily guarantee that we made money. Think about it. So some people who will post these ridiculous percentages, or I made 8,000% on an options trade, or I'm 90% on all of my day trades, doesn't necessarily mean they're making money. And guys, I will always tell you the truth about everything. I don't bullshit anybody, okay? And here's the reason for that. Because the losing trades are swamping the winning trades, right? So if I'm looking to make 100 or 150 bucks on my 100 shares in this stock, great, I did it, I made the trade. I can't have my next losing trade lose $300 and lose $500. And that's what a lot of people who don't really know how to trade or are beginning traders don't understand. And I know this is a difficult thing to do. I know it is, especially when you first start trading, because as soon as you see a gain, you're going to want to take it. And as soon as you see a loss, you're going to say, I'm going to get that money back, right? Give him a like. Over 300 of us watching, only 49 likes. That's okay. Don't sweat it. Let's get some information out there. More people will like me then. All right, so that's the key to this is having a plan on every single trade that you do. And if I make a buck and a half on my 100 shares, I made $100 or $150. But think about when you have a little more experience and you do 500 shares or 1,000 shares, right? So if you did 1,000 shares of this, it took 10 minutes to make $1,500. 10 minutes to make $1,500. This is one trade. So, you know, a lot of people are saying, oh, $500 for your room is a lot of whatever. Trust me, it's not. And again, it takes time to get there. Okay. I always tell all my beginning traders or traders who have been struggling for a long time, 3 to 6 months. That's the God's honest truth. This is not a get rich quick scheme. Okay. Nobody can teach you how to trade in 1 day or 2 days or 3 days. We had the Benzinga boot camp, which was spectacular. It was. And anyone who hung out got a lot of great information out of that. But it's like any other business that you're starting, okay? It's not going to work right out of the gate. It's not. It's not going to, right? So let me show you another example. And again, guys, for this to work for you, okay, everybody that that's in my room, we're all looking at think or swim charts, okay? And we all have the same technical analysis in it. So real quickly, I'll give you guys what it is, okay? I'll give you guys what it is. We use a 9 EMA, a 65 EMA, a 15 EMA, and a 200 EMA. Those are our moving averages. And then we have pivot points and our relative strength index, okay? Pivot points and a relative strength index. That's all we use as far as technical analysis is concerned. That's it. I don't have a million lines and stuff in my chart. Try to make it as simple as possible. So 9, 15, 65, 200 exponential, pivot points, and relative strength. Now, it pays to have the same ones that we're looking at. And again, listen, everybody has different technical analysis. Everybody has different technical techniques, right? So whatever works for you, but have a plan no matter what you're doing, okay? Finding the right stock to trade is the biggest challenge. It is. It can be. It absolutely can be. Well, so what we do with that is, as far as that is concerned, every morning, and I'll just get off track for 1 minute. Every morning when I come in, the first thing I look at is my movers and shakers. This is the stocks that are moving the most by dollar amount. And this is the first thing I look at, and we'll go see if we're going to have any action there. Then we go to our regular stocks that we trade every day, our Apples, our Babas, our Netflix, our Facebook, our QS, our Riot, our Mara. You know, we probably have 20 or 30 stocks that are just on our list that we know are going to be in play every day and that we know will give us some action at some point. So I'm looking at GameStop right now. Not a bad little base here. I would never do GameStop for a base because it's too wide, right? We had a low here of 139 and a high here at 146. That's a $7 base. No, thank you. But now that the stock has just broken down and I'm looking at my 5-minute chart, and I'm always starting on a 5-minute chart for every single trade that we do. Okay. Always looking at a 5-minute chart. If I don't have a support or resistance level on that 5-minute chart, that's when I'll expand my time frame and try to find something. You got it, Miles. Yes. Interactive brokers, Alan, is where I get my movers and shakers. Interactive brokers. So I'm looking at a 5-minute chart of GameStop right now, and I have a pivot point down at 117.68. Right there. Everybody can see it. The beautiful thing when you're using the moving averages, it tells you the exact prices where we might want to get in and make a trade. There's no guessing. I'm not saying, I don't know where GameStop's going to go from here. What I am saying is if it gets to 117.68, I am a buyer for a day trade. But I'm kind of thinking we might have something in between. Okay. So I'm going to go and expand my time frame now. So this is when we have to expand our time frame. And what I mean by that is I'll go from a 5-minute chart to a 15-minute chart and see if I have anything in between. I open my room up every day at 7:30 solar. We start with our morning meeting every day at 8:30, and we start trading when the markets trade live at 9:30. Sometimes we'll trade pre-market and after-market if things are setting up for us to do. Dotted lines are pivot points, Mandy, and you can find them in most of your charting platforms. For those who have a question about it, Think or Swim, to me, is the best for charting. It does not cost anything. Anybody can open up an account with Think or Swim and get live trading. Okay? You just got to go through the process of opening an account. You don't have to put any money in, and you'll get live trading. So that's why I like it the best. All right, so I have nothing on a 15. I have nothing on a 30. I have nothing on a 1 hour. I have nothing on a 4 hour. And daily, look at this, guys and gals. So let's look. We are coming to a daily level in GameStop of 133.86. That is not too far away from where we're trading right now. That is a daily support level, 133.86. We'd be down 3 days in a row and hit that. And then weekly, we got 132.06, even better. So GameStop, on a weekly level, we have a support level at 132.06. Now, we know that GameStop can go up and down that quickly in a heartbeat. So, again, my 5-minute chart shows me nothing, but I'm putting an order in to buy some GameStop. And room, guys, 132.06 GameStop. Do it small. If it holds, we can add to it. It would probably be a far from moving average trade down there also. So I'll go 132.10. I'm going to go a little bit above it. And you'll see me put an order out to buy 50 shares. And there it is. Every trade that we make in the room is posted before we get in it. In a stock like GameStop, I'd probably give it like $1 stop and try to make $2 on a bounce day. And I put it in wrong. I put 123. It's 132. Duh. And I put my order out. I leave it. If the stock goes down to 132.10, we will get into the trade. And I can tell you this, okay? Just looking at GameStop right now, we're in the middle of nowhere. It's setting up for a downtrend now, so I'd probably want to short it if it got up to my 9 or my 15. But the odds of the next move from here, I can't predict. I don't know. It could bounce up. It could go down. But what I do know is if it does go all the way down to my daily support level, the odds are that the stock is going to stop going down there and start going up for a trade. Okay? All right. So let's leave it out there, see if we can go down $4. Look, Alex, that's a great thing, right? I have a lot of people in my look. Here's what I always tell people, okay? If you're doing well, keep doing what you're doing. Gegensint, right? Keep doing what you're doing. But I'm doing this 35 years, okay? And I'm still learning stuff. And if someone comes into my room or someone I happen to come across that tells me, hey, Dave, I'm using this and it's working for me, and I'm using that and it's working for me, I'm all in. There is no ego here, right? No ego whatsoever. None. So, yeah, everybody could always make a little more money. Exactly right. Do longer-term entries trump shorter-term entries, or are they independent of each other? They are independent of each other, Alan. Sometimes when we get into a swing trade, I'm really going to look at my daily and weekly levels. You know, this GameStop just happened to be setting up for both. It could come down and hit our weekly support level, right? And this is a trend. So this stock has been in a major uptrend for the last, 2 months. And if you look last time it came down and hit our 15 EMA, what happened? This was about 118. And the next week, the stock climbed up $100. $100. So I would think we'll get a bounce if it spikes down to this 132 level. So let's see what happens. Hopefully it does. Now, longer term, where I think GameStop can go also, okay, is $56. And again, I'm not telling anybody, I don't recommend anybody to buy and sell stocks. Everybody trades at their own risk. But I'm looking technically. And if this thing breaks 132, I don't see anything between that and first spot 70. So that would be our 200 EMA on the daily chart, $70, which is, not unrealistic for this thing. Stock was in the $20 range for the longest time before any of this happened. Okay. Our growth, I have all my faith into one stock. Igor, that's never a good idea to have all your faith in one stock. Ever. Whether you're investing or trading, right? And look, we are talking about day trading now, right? This is how half the people in my room make their living, by day trading. We all have our longer term stuff that we want to work, and we want it to work forever. And as long as you're young, it will work. All right. Let's show you guys another example. I am short the market right now. Someone asked me if I bought more VXX or SQQQ, and the answer is yes, I bought a little more. I am short this entire market for a trade. I'll explain to you why. I just think that, and I hope it goes higher first before we go lower. But I just think if I look at a daily and weekly level of the spiders, that we're getting a little stretched out. Okay. And again, this is just a trade. Daily level, we're up 9 days in a row. We have a 70 relative strength in the spiders, which is high for the spiders. And when I go to the weekly chart, we're up now 4 weeks in a row. We're 15 points above our moving average. And again, we're getting a little high on the relative strength level. Again, these are just trades. I'm thinking at some point in the next month or so, maybe we get a little pullback. We might not. We got earnings coming out. That's good. That's going to be a big key as to whether we get another leg up in this market or we get another leg, a little bit of a correction. I just did, Mandy. I just talked about why I'm in my SQQQ trade. SQQ is the opposite of QQQ. So when QQQ goes up, which is the NASDAQ, and I'll look for a minute, I'll show you guys why it's the same thing. It's the same chart. Okay. I'll go to a daily chart of the QQQs. And it's the same chart. I just think we're getting a little stretched out. We're up 1, 2, 3, 4, 5, 6, 7, 8 days in a row. So I think we're getting a little stretched out. And again, this is just for a trade. And I don't mind if we go higher from here to add. Because if we go higher from here, then we're just getting really stretched out. This could be a double top in the QQs. The all-time high is 338. We went down to 298, down 40 handles. And now we're coming back up there. So that could be a double top, right? So let's talk about what a double top is for a minute while we're here. I would give GameStop, if I get hit at 132, at least $1. Okay, at least $1. No, I don't even mean that, Michael. When I say a pullback, I'm talking just a pullback to our trend lines. That's all. Not even a correction. If these things pull back to their trend lines, the QQQ and the spiders, we'll make, 15 or 20, 25% on the trades that we just did. Just fine. That's what I'm looking to do. And again, this is just my personal opinion. So let's talk about a double top for a minute. All right, this is a pretty easy trade, not that difficult. We'll see this a lot during the day. GameStop made a double bottom this morning and then busted through it and got absolutely crushed. So I'll show you that one also. So when I'm looking at a double top, I'm looking to short a stock. And very simply, when a stock makes a high, in this case, we made an all-time high in the QQQs. And as long as it goes down a good amount from there, and there's some time in between, when the stock goes back up, and makes that second high again, chances are you're going to get a little bit of a pullback again. That's what a double top is. So if this was to go all the way back up to 338, we would short it, have a stop order above, and try to take advantage of a pullback in that. That's what a double top is. And I'll show you GameStop this morning because this thing worked for 3 different trades today. I didn't trade today. I didn't get back into the room until 1:30 today. So I didn't really trade today. All right. Let's look at GameStop. So it made a low this morning of 139.13. Okay. Back here, it made a low of, no, right here. In this bar, it made a low of 139. And in the same bar that it made that low of 139, it went back up to 140.70. So it gave a nice $1.50 trade on that when it first made the double bottom. Basically right there. You can look what happened when it broke that. There's no such thing as a triple bottom. And we broke 139 and went down $4. Okay. All right. We've talked about a base trade. Let me show you another example of a base trade. And then we're going to talk about a regular moving average trade. Basically, going to try to give you guys all 5 of our trading techniques in 1 hour. Now, keep in mind, there are a lot of nuances. Okay. A lot. There are a ton of nuances in trading. I wish it was just black and white, and every time we had a line, right, a trade would work. But, you know, that's why it takes so long to learn, because there are nuances. Let's look at Mara. All right, this is a beautiful one in Mara. Okay, this is a base trade. Look at how long, guys and girls, this stock is going sideways. Look at this. 5, 10, 15, 20, 25, about an hour and a half. And we're trading between, let's go to the low, 51.10. Let's go to the high, to about 51.50. So we're trading in a nice little 30, 40 cent range, right? 30, 40 cent range. So the low is 51.30, all right? Here's how we execute. It broke 51.30. We get short. Stop order goes 50 cents above at 51.80. We look to make, and again, in a $50 stock, if I make $1.50, I'm very happy. So we're short at 50.20, and we can see the stock has done nothing but go down since there. And, you know, we're up $1 in the trade right now from 50.20. So that's another example of a base trade. And how we execute it, as soon as it breaks the base, we pick the direction it's going in. Boom. I'm stuck in Highland, SOS, and EBON. All right, listen. Well, I'll talk about these stocks for a minute. SOS and Highland and EBON. I went on TikTok for a little bit, and I was probably on there for a couple months. And the reason why I went on is because I would invite everybody on there to come and hang out 5 days in my room. Every single person. And we got a crap load of people that came into the room and hung out. The reason I did it was because there was so much crap being shown on there by people who have no idea what they're talking about, and just getting beginning traders, of which we had millions of, excuse me, millions of since the pandemic started, and getting into these ridiculous, and I'm not saying you're in ridiculous ones, but getting into these hype stocks. And the only ones making money are the first people that get into these things. Nobody else is making any money, right? And some people thought these things were going to go forever. And they ended up blowing up many trading accounts. Yeah. Any tips to recover 400,000? It was over 90% of my account in the last 7 weeks. I had 275,000 and Neo took it all. That's another stock, Ken, that I'll talk about. All these stocks, all right? There ain't no great get-rich scheme in trading. There just isn't. And if you're lucky enough to get in on these stocks, you got to take your money out. That's the most important thing. I'm not adverse to getting in. I'll trade GameStop all day long if it sets up. I'll trade Neo all day long if it sets up. I'll trade all of them at any point, okay? But what I'm not doing, and what I'm not letting anybody who I've ever taught to, and again, I can't physically stop you, but I am not letting any of people in my room get into any of those stocks. ever. And I don't care if I miss 200 points on the upside. It's okay. Most people not only miss the 200 points on the upside, they end up losing money. So just not for me. Not for me, not for anybody who goes by my teachings. Okay? It's not. So what do I look up for a setup to go long and short? Well, we just talked about one of them, KH. We just talked about a base trade, right? We just talked about that. That's one setup that we talk about. When a stock is going sideways and it finally breaks below support or resistance. Let me get Intel. Better example. Stock is going sideways. It breaks below. We get short. That's one of the setups that we look for. We just talked about a double top, a double bottom. That's another setup that we look for. So I want to share. All right, let's take a look at Intel now. Pivot points. Pivot points. Yeah, we'll trade NVIDIA. Well, all right. I should preface that by saying I don't trade NVIDIA. But hold on. I'll look at it for you in a minute. So I'm looking at Intel now. It's trying to break this little downtrend, right? We're above a little bit. We're at 65.17. Okay. So I'm going to talk about the next trading setup that we have. It's called a regular moving average trade. And the reason I call it a regular moving average trade is because I will not use the 9 and the 15. Those are not regular moving averages. The only time I will ever use a 9 and a 15 EMA is to get into a trend trade. Otherwise, they don't exist unless I'm getting into a trend trade. So now I have to look for resistance in this stock where I might want to short it. So KH, I'm going to answer your question, okay? My chart tells me where the next resistance is and where I might want to short the stock. So when a stock is going up, I'm looking for places to get short for a trade. And when a stock is going down, I'm looking for places to get long for a trade. Support and resistance. Support and resistance is the basis for all technical analysis. That's it. Where do I buy? Where do I sell? Where do I short? That's what technical analysis is. And it's just a matter of putting the proper tools in there to help you find the right trades and where to do them. So my next real resistance in Intel is right here at 66.44. That is my 65 EMA. This would what we call a regular moving average trade. There's a couple of criteria that have to be fit for this, okay? Number one, we need a stock to move at least 50 cents or at least $1 to hit one of our resistance levels before we get short. So if a stock is sitting, at 65.15 and there's a resistance level at 65.20, I'm not doing it. I need the stock to move a significant amount so that the odds are in our favor of when it hits this line, it's going to stop going up and start going down. And if something only moves a few cents and hits a line, it's not a trade. When this stock, if it does, go from 65 to 66.40, it would not have gone up $1.50. That's a big move in Intel. When it gets here, I can expect between a 25, 50, 60 cent reversal. And that's all I'd be looking to get out of Intel. So this was something I'd be a little more aggressive in. I do like 500 shares and try to get 30, 40 cents and make a couple $100. So I will put an order out exactly where it tells me. Going up, that's resistance. Short at 66.44. I'm going to put an order in. I don't cancel this because that ain't happening. Go to Intel. And I am using Interactive Brokers for my trading. So here's my market maker. Sell 100. Pick my price, 66.40. Submit, and there it goes. If Intel goes to 66.40, I will sell 100 shares to get short the stock. So every single thing we do, okay, is purely based on technical analysis unless something wackadoodle's going on. And then, I'll give my opinion. And that would be a regular moving average trade. So I want to show you a couple more of these. Between a regular moving average trade and a trend trade, ladies and gents, that's about 70% of all the trades that we do. So these two are the biggies. And when someone was talking earlier to me about $500 being expensive, okay, you can buy our entire course for $500. It's 6 hours of information. This is what I'm talking about right now. 6 hours in the course, and it comes with continued mentorship. Every Thursday night we get together. And that's for people who can't be in a room all day. And it's in great detail, and that's everything that I'm talking to you guys about right now. That's the course. For those of you who would like the live trading experience, that's greenroom-live.com. Okay? greenroom-live.com. And everybody's entitled to a free week. And then I do the entire course once a month live in my room, included in your mentorship. All right, that's it. Okay. Do you think industrials and materials start leading the market again anytime soon? Great question, Michael. And you know what my answer is? I don't care. I don't care. And I'll explain to you why. I'm not a long-term trader. Look, I have my 401k. I have my Roth. That takes care of it. That's taking care of itself. You know, this market has done nothing but go up for 150 years. So if you're anywhere under the age of 60, 50, 40, whatever, just leave your money in there and forget about it. And when we get those crazy moves, correction, crash, whatever you want to call it, that is a time to be adding to your trades, not subtracting, right? That's it. You want to be adding to your trades when people are panicking, yes? You know, you sell when people are greedy and buy when people are needy, right? That's Warren Buffett. He's done okay over the years. But this is for trading, okay? This is for trading. So, I don't care past when I wake up at 8 o'clock in the morning and I go look and I see what's going on that day. I let my long-term investments take care of themselves, okay? So that's a regular moving average trade. I'm going to show you one that's set up in GameStop. You know, we were talking about GameStop. And ladies and gents, I am not going in and putting these lines in after things happen, okay? Thank you, Alex. SR, yeah, that's the gig, all right? It is, guys, this is so hard to do, all right? It's certainly not impossible, and it's not rocket science. It's not. Again, I told you the truth. It's going to take you 3 to 6 months. But there is so much shit out there, and pardon my language. And you got to just stay away from that. You really do. Look, I know people who spend $20,000, $30,000 trying to learn how to trade at Online Trading Academy, right? And have spent thousands and thousands and thousands of dollars on courses, okay? And they're nowhere. You know why? You need the mentorship. That's what you need. And look, some people come into my room, like Alex was saying, and leave after 2 months or leave after a month even. And then they go and they trade on their own. And I say, God bless. That's what I want. Okay? God bless. So it is what it is. We'll talk about individual stocks in a couple of minutes. Let me just show you another regular moving average trade. And then we can take questions for the next, I think we got about 15 minutes. All right. So I'm going to show you GameStop right here. And again, I'm not going and putting these lines afterwards, right? Look what happened when GameStop went from 139 and hit our 65 EMA at 146.80. Stock went up $7. How did it pick this line to exactly stop going up? And in the next 5 minutes, we went from 147 to 143 and gave you a $4 trade. Now in GameStop, if I make $2, I'm good. $3, I'm good. That's beautiful, okay? But here is a big, big mistake that a lot of traders make, all right? And here's why people in my room make more money when they're in good trades. All right, let's say we shorted 100 shares at 147 to make things easy. I know I want to make a couple of bucks on this trade, but when it goes down $1, I'm going to cover some of my trade because I want to put money in the bank. On every trade that I do, I want to put money in the bank. So if I'm short at 147, I'm putting a limit order to buy half of it at 146. Now I have covered half of my trade. I'm in a profitable trade, and I will never turn that into a losing trade now. So I'm not going to let this go back up and go higher and lose money, which is what a lot of people do. So once I have taken, and guys, write it down, every trade you get in, take some profit. And I'm not saying to make 10 cents or 20 cents, but if I make $1 on a trade, I'm taking some of that profit off, and now I can't lose money on that trade. Impossible, okay? So we're short at 147, immediately down $1, I'll buy half my trade, and in the next 5 minutes, the stock went down to 144. All right, here's where we get out of the rest of it, right in here. So I made $1, and I made $2 or $3. That's how you get the most out of your winning trades. And especially do never turn a winning trade into a losing trade. What a lot of people will do, they'll short it here. It'll go down. It'll go down. They won't buy it. It goes back up. They end up losing money. So again, every trade that we do, let's put some money in the bank. Before I left this morning, okay, that's a good question to Anthony. And while I'm talking about it, let's go over it. On the regular moving average trade, how do you know whether to get short or long at the 65 or 200? That is a great question. If a stock has moved enough and hits our 65, I'll do it. So in other words, if a stock moves $1.52, that's still giving us room on the 65 if that's what we have there. All right, Anthony? So I'll use both as long as we have enough movement to hit either the 65 or the 200. I hope that answers your question. So, we're looking at GameStop on a daily, right? Weekly, whatever it was. And that would be plenty of movement to get down to 132. But let's say I had, my 65 at 134. Then I'll use that one. So we use whichever one lines up and fits the trade. So again, regular moving average trade, we need at least $1, $1.50 movement. It can hit either the 65 or the 200, Anthony. That's your answer in a nutshell. Either one, I'm good with that. Okay, NVIDIA. Yeah, and look how beautiful NVIDIA, even now, just gave us a little bit of a trend trade, right? This stock, look at it for the last 2 hours, okay? It has not gotten below the trend. So here, okay, Steve, I'll get you into the room. Don't worry about it. We'll talk about it before I go. Look, if you guys can post greenroom-live.com. That's it. Or write it down. greenroom-live.com. Okay? greenroom-live.com. You got to follow the instructions. Use Green 15. Follow the instructions. You should not have a problem getting it. All right. So here's NVIDIA. This is beautiful. We're watching it. It's in an uptrend. So look what happened when it hit our 9 EMA around 597. 597. Guys, this is at an hour ago. Stock's in a nice uptrend. It pulls back, hits a support level. We buy. So we're in at 597 on this trade. Thank you. Thank you. Thank you. That's the link to the room. Use password green15. Download Webinato and come into the room. I'm going to get to that. I got your question. It's a good question. All right, so we're long the video on a pullback to 597, and the stock went up to 613. That's 15 points. We're going to take now in a trend trade. I want to stay in this trend trade until it breaks the trend. So if we got in this at 597, okay, I'm certainly selling half of it at 600, 602, 603, 604, but I'm going to hold on to the other half until it breaks the trend. And as long as it stays above this trend line, okay, I'll stay long the last little bit of what I have. But look, guys, if we get in a trade of 597 and it goes to 604, I'm selling half of my trade. It's $7. Look what happened just now. Again, the power of a trend trade. It pulled back to our 9 EMA at 608. 608. Look where it is now. 611. It just went up $3 after hitting our 9 EMA. How about if you have a little experience and you're trading 500 shares? Right? Number one, 500 shares, pick how much you want to make. If we made 6-7 points on it, you just made $3,500. If you just bought 500 shares at 608, it's trading at 611. That's 3 points. That's $1,500. And again, I can't buy 500 shares of NVIDIA. I don't have the buying power, right? I'll show you guys what I'm trading with. I don't have the buying power. I could trade 50 shares or 100 shares, but that's okay. 50 shares, you make $3 in 6 minutes. What the heck's wrong with that? It's $150, right? Now, someone said, yes, Cal, decide what you're willing to lose and then put your stop order in and slowly scale up. That is beautiful advice. Practice taking small trades until you learn and then slowly scale up. Someone had a good question that I want to see about losing money. And how do you overcome a big loss and the anxiety of taking a trade? That is a great question. That's a great question. All right. if anybody has listened to my money management skills, my money management course, right? Nobody should ever have a big losing trade ever again. Shouldn't happen. So let's get rid of that right out of the gate. If you have a stop order on every trade that you do, you're never going to have a big loss on a trade. Okay? So let's take that out of the equation. Gone. All right? Just don't do it. Don't average into stocks and have a stop order. Now, as far as the anxiety of getting into trades when you're first starting out, okay, the only way you're going to get over that is by trading. And that's why you start very, very small. That's it. The only way you're going to get over the anxiety of being in a trade, and I have this with a lot of beginning traders. They're afraid, right? They're afraid because they're going to lose money, or they think they're going to lose money. And that's why they don't let the trades play out, and they'll never make any money. So it's just a matter of repetition, okay? The more you do it, the easier it's going to be for you. When I'm in my room and when I'm posting trades from my room, okay, every one of the trades I post is going to be a winning trade. At least that's how I'm going at it, because I know I've put the odds in my favor using my technical analysis. So I can't wait to get in my trades. Though some people in the room, when we start, Dave, it's getting close. It's getting close. Yeah, I don't want close. I want to get in the trade, right? I want to get in the trade. And that's a difficult thing to get over at the beginning. You know, do as many trades as set up and just have the plan once you get into the trades. So this is my Interactive Brokers account. All right. I have $27,900 in it. So 28,000 times 4, it gives me about 120,000 in buying power. Buying power is different than margin, right? We pay commissions and stuff, and any retail brokerage account that you have, okay, you need to maintain a minimum of $25,000, and they'll give you what we call buying power. You can use up to $100,000 of their money at any point during the due to make a trade. I'm going to cancel Intel because we ain't getting there. I put a trailing stop. The market comes down, takes my stop loss, and the stock runs up each time. You're probably not giving your stop. And we're going to take some questions now, guys, because I only got about 5 minutes. You're probably not giving your stop orders enough room. You can't be in a trade in $100 or a $200 stock and have a 10 or a 15 or a 20 or a 30 cent stop. So I find with a lot of traders that are doing that, you're not giving the lot. You got to give it a little more room. Okay. Don't have such a tight stop that you're going to get stopped out every time you do a trade. Think about it, right? You're trading NVIDIA. It's a $600 stock. You can't have a 50-cent stop. That'll happen in less than a half of a second. So depending on the stock that you're trading, that depends on how much room you're going to give it for a stop order. JR, yes, absolutely. Yes, JR, we will trade leveraged ETFs. There isn't anything we will not trade if it signs up for us to trade it. Yeah, matter of fact, we're looking at Labu, which is the biotech ETF. Yeah, I mean, even with long-term investments, stop loss. First of all, I don't recommend anybody day trade Tesla. It's too expensive. And the reason I don't, KH, is because you have to have like a $5 stop order. I don't want anyone getting into any trade where we have to risk $5 on it. So you just stay away from that. You don't do it. That's it. So Logan is in the process right now, starting to test his trading strategy, keeping myself for seeing setups and not entering. Yeah, Logan, do 1 share. I don't care what you do. Do 10 shares. But do every single trade that you think is setting up for your techniques. Every single one. What's going to worse to happen if you trade 10 shares of stock? You're going to lose $10 if you lose $1, right? So I want to talk to you guys about swing trading, but we'll save that for next time. Labu's a stock that we're looking at, and we did a swing trade in this the first time it hit our weekly level. I'll show you guys. We did a swing trade in Labu the first time we hit our weekly level. Stock went from $185 to $70 and exactly hit our 200 EMA. Again, I'm not going in and putting these lines in afterwards. Isn't this insane? 185. How did it know to stop at $71? And most of the people took 20 or 30 bucks out of that trade over the course of the next few days. That is a swing trade. Now we've broken that level in Labu, and I have no support on this chart anywhere. So the next thing we'll look to get into Labu is we can get our relative strength smacked down to about 20. That'll tell us that the stock is done going down and we'll start turning up. But we're not close yet. We're not there. All right. Any other questions that people have? I think we got about 5 minutes left. So let's take some questions. Again, the most important thing about any trading that you're doing, guys, is money management. That's it. You know, people ask me all the time, and it was just mentioned in here a couple of times, you know, how do I avoid big losing trades? Well, never average into a trade and have a stop order in every trade that you do. Isaac, let's talk about that for a minute. I love it. I find after a bad trade, I chase like a noobly and blow out my rules before I catch myself and clear my head again. Yes. That is, and it's worse with the more experience you have, to be quite honest with you, Isaac, right? Our tendency as traders, okay, is to gamble, right? And I don't gamble. Everything I do is based on my charts. If my charts don't set up, I'm not trading. There are sometimes a day goes by, we don't have a trade. Sometimes, okay? But once you have a bad trade, our tendency as traders is to run back in to try to get that money back, right? I got it. Just let me get that money back and then I'll stop trading today. 99% of the time you do that, you're going to lose more money. You're going to lose. Almost guaranteed, right? Shri, I do not have a blog. I don't have a Twitter. I don't have a this. I don't have a that. I got my trading room and the course that we just curated for Wallstreet Global Trading Academy. I don't actively seek out people. So that's a story. What is your biggest challenge as a trader? That's a good question. All right, let's talk about it. Let me get the SPAC first. What are the pros and cons of buying a short ETF like instead of just shorting QQQ? Price. SPAC. Price. You know, QQQ is very expensive to short. It's $335. If I want to do 100 shares of that, I got to invest 35 grand. Right? If I want to buy SQQQ, okay, it's trading at 11 bucks. So I can buy 1,000 shares of that for 11 grand. Right? So that's the difference. What I will do at times, okay, I'm not going to get into this today, is sell upside calls in QQQ when it gets stretched out. And what that is, it is a options trade where I don't mind getting short at a certain price if it keeps going up, or I'll just collect a premium if it goes down. So sometimes I will do that if I don't mind getting short a stock at a certain price. That's a story for another day. That's options, which we also teach. All right, I see a bunch more questions. So in my trading room, they actually trade with you. Yes. Most of the people in my trading room will do every single trade that I do. The best part about the room, guys, is that everybody posts trades that they see and we all work together. All day long, people are posting what they're looking at, and I'll go in, I'll say, yes, I like it. People trade on their own in my room all day long, and they'll post before they'll get in, and they'll say, Dave, this is a regular moving average trade. I'm getting in at this price. Boom. And then I'll go look, and we might all get in. My room has less than 100 people in it. I know somebody posted before that, you know, whatever it was. My room will never have 150 people in it. Never. I'm keeping it small, okay? Because I don't want to have 200 people or 500 people or 1,000 people in my room. It can't work. You can't have 500 people in the same room doing the same trade. And I'll tell you what happens in a lot of those rooms, and I will not name any names. A lot of those rooms with a lot of people in it, the people who are running those rooms are getting a position in a stock before they post it. And then they have 500 people trying to buy the same stock. What do you guys think is going to happen? What do you think is going to happen? If I buy, 100,000 shares of a stock, and then I tell 300 people in the room to buy it, who's going to make the most money? I am, right? And everybody who gets late into the game is going to do nothing but lose money. So every trade is posted in real time. And again, it's never going to be a room that has a lot of people in it.
David, how we doing? We make some good trades this afternoon?
We did a lot of good learning this afternoon. Nothing really set up to trade.
Oh, well, that's what we like to do, Good
Yes.
education. What about, did you have fun at the boot camp on Saturday?
That was great. I listened. I found myself listening most of the day.
Really?
Yeah, it was great. There was a lot of good information.
Well, that's awesome. I'm glad you were able to join. I'm glad you and Peter were able to join together.
It was our pleasure.
Alrighty. Well, thank you again for joining us this afternoon, and we will see you maybe on Wednesday, maybe next Monday. Either way, we'll be seeing you.
Whatever works for you guys. Maybe one day this week we can do a live when the market's a little more active. 9:30 to 11:30 is the greatest time. I know I came on one time at 10 o'clock and we had a really good time. So we'll see what happens.
Let's do that again this week sometime, maybe 10 a.m. if that works for you.
It works for me.
All right, beautiful, David.
All right, guys and girls. So a couple of things before I go real quick. Greenroom-live.com. Come hang out with me for 5 days. And Wall Street Global Trading Academy. Trust me, guys, best course that you'll ever see out there. And you get mentorship with you every Thursday night. And thank you.
Beautiful. All right, David. Enjoy the rest of your afternoon. I'm gonna make sure that link's in the description, by the way. All that Green Room Trading Live, it's in the description. I'll throw it in the chat as well. And we've got our next show waiting here, so got to get going. But David, enjoy the rest of your afternoon, and we'll see you back next time.
My pleasure. Thank you.
No problem. Bye now. All righty. Let me get our next, let's see if we're ready to go. And our next guest ready up. What's up, y'all? Full screen. Terrible Trader, how we doing?
Pretty good, man. How you doing?
Let's bring Hopped on. Hopped, how we doing?
Good, man. How you doing?
Good to see y'all.
And you too.
Good to be here.
So what's on the agenda today? I know I'm gonna kind of dip out and let y'all take over the stream. So let me know what we're gonna be talking about.
Ed?
On the agenda today, so we're gonna maybe chat quick. Stock was running. I've had a position in it for about 2 months now, so that's good to see.
You cut out, Ed. Can you see?
Yeah, which stock?
Was it?
Nvidia, sorry.
Okay.
Oh, it's a good day to talk about Nvidia.
Yeah, have you guys been chatting about Nvidia today?
I've been watching it all day because I freaking love Nvidia. But I remember last time we were on, we were talking about there has been outflows, what we said, from like bad stocks to good stocks. We're like, well, Nvidia's doing fine, and so what I'll do here, I'll get the chart pulled up for Nvidia for y'all real quick. So have you been trading Nvidia today, Ed, or?
No, I've had a long position ever since the higher rates get out of tech narrative started. As something I came on and chatted about that, how it's not a narrative. Seen it play out many times where the mainstream media and everybody tries to get you out of these really good tech names and try to get you into some value names, and it just doesn't work out. But yeah, I'm just long Nvidia, and I'm just still very bullish the stock and the company.
Well, the big thing for them is they're trying to get involved with Intel's game, right? So they're trying to do like business servers. They're trying to take over that space, I guess. Is that right?
Yeah, they came out with multiple news. I read one headline that had 5G, cybersecurity, and AI in one sentence. So it's almost as if NVIDIA was just using a bunch of trigger words. The thing about NVIDIA, though, is if there's a company out there that can put all of those trigger words together and actually mean it, it's them. But they released a couple of things today, and the stock was running. NVIDIA, though, has been consolidating for the past 7-8 months with the rest of the large cap companies out there. There was a big consolidation in large cap, and that's when we saw the Russell really popping off, and SPACs and other, mid cap names. And now we're kind of getting the complete opposite, where large cap is running, and we're seeing a pause in small cap. So, producer AB just popped out. All right, later.
It's me and you, bro.
All right.
All right. So the rationale here.
Sorry, there's the printer's going off in the background, so I didn't know if that was coming through my mic or not. My printer over here, so.
No, you're good.
All right.
Keep that printer going, by the way. Need JPOW to start printing this economy back into being. Logan Reed says, I was expecting more energy from the meme. Excuse me, bro. I haven't even gotten started yet. Can you give me a break? We're laying out the agenda here for the next half an hour. We have Nvidia, and then you wanted to talk about a rotation from small cap to mid cap, or small to large cap. Is that right?
Yeah, small mid cap to large cap. I mean, when you look at last week's rally in the indices, the stocks that really carried that were the Microsofts, the Googles and the Amazons of the world. And so we finally got the big boys, step up their game, and that's what took the indices even higher. And nowadays we're getting a market that's kind of like a mixed bag. So, I feel like this trade where everything under the sun goes higher is kind of dying out. And now having a little bit more of like a tactical approach is making a lot of sense.
Yeah. I mean, look, here's the problem though. From what I understand, it seems like we're going to get ready to go into another mergers and acquisition period where a lot of these big companies are going to buy up smaller companies. So I don't think this is the best time to get out of small cap, believe it or not. I think you're just going to see a consolidation amongst small cap, either with themselves or merging into larger companies. So again, like you have to almost like kind of fade some of these narratives that are getting played out in the market. Another good example of this would be like Palantir. This is everybody's favorite stock. I hate this stock a lot, but this stock has like collapsed over the last month. Kathy Woods has got to be pulling her hair out. This is the one stock that besides Tesla, she's probably the most known for being bullish on. And I never understood it. To be honest with you, I always thought Salesforce was a better Palantir. But, anybody that's been giving like a narrative has been kind of proven wrong 2 weeks later. It's like as soon as you think you have this market down, it changes it up on you within like a 2-week time period. And you just have to be on your toes. This is a good time for investors to kind of like really do some deep due diligence. And it's a good market to be a trader in too. You're seeing like these swings that are happening intraday. The big frustration I had last year was that all the plays would happen after hours. So like it would gap up overnight, it would gap up pre-market. The changes right now in direction are happening intraday. You look at GME as an example today, it languished 7% down pre-market, but it ended the day, or it's ending the day at like down 15, 20%. So this is a good day to be on your toes. Like people that are in chat right now, if you're watching the market, you're actively engaged. There's never been a better time for you to be getting in and out of positions. This is not a horrible time to be a day trader. These guys think trading is real. What do you mean by that, Reed? What do you mean by that? Who else is here? Is the meme lord still on Palantir? I'm still short Palantir. I actually bought a put that went up 100% on Friday, or from Friday.
Oh, really?
Yep.
I think I like the thing is, maybe I'm a conspiracy theorist in the market in this sense, but I think Palantir is still very overcrowded, and I don't see why market makers are just, I don't see why market makers and everybody else wouldn't want to make the average retail suffer and really question their Palantir position. I think everybody knows that Palantir will probably go higher, and they're heavily investing in growth. I mean, that's what Kathy was talking about. That was her big bull case when she was on CNBC a couple weeks ago talking about it. She said, oh, we want companies that are kind of getting into large debt and investing for that growth. Because Kathy has this like winner takes most market mentality on all of these like tech names. So, I mean, the cat's out of the bag on the fact that Palantir will go higher. The question is, the market is a place where, the patient, the emotionless get paid from the people with emotion. So in terms of Palantir, like I want to see a lot more panic. I want to see people freaking out. I want to see people yell about why it's irrationally lower before getting in.
Yeah, but here's my thing: is I actually think it deserves to be lower. I think it deserves to be. I don't know if it's going to go much higher than where it's at. At its all-time highs. Where is it all-time high at? Like 26, 27 bucks?
No, the all-time high was like in the 30s or 40s, right?
Really? Okay, yeah, that's the other option I was thinking of. Okay, so all-time high at around 40 bucks. I don't think it's going to get much higher than that. I mean, what's the rationale? It's already got a market cap that's ridiculous for its revenue stream. The contracts it gets are underwhelming. I don't understand its model or how it moats itself away from Salesforce. This is one thing I was watching last night. We were watching some guy's YouTube video, and I don't understand their moat beyond something that I can get anywhere else. And so, this huge move, I don't think is like indicative of some like flash in the pan. I think this really huge move to the downside with Palantir is totally rational. And I expect it to go further down, actually. Like I'm looking at like an $18 price target before I potentially add more to my really small position.
So, Huff, you're not trading it on the way down. You're just looking to re-enter at a lower price point.
I have a put or a couple puts at a 22.50 price or 22.50 strike price that expire at the end of this week. So those were up as of this morning 100%. That's probably tapered off a little bit since then, but that's what I'm in it currently. So I'm short. I'm net short currently, but I have like 2 or 3 shares. I'll add more to Palantir if they get down to like 18, 19 bucks a share. But for the time being, it's like I just don't. This is not a good time to be in these types of positions.
Are you saying just in long-term growth positions in general?
No, this one specifically. Long-term growth is probably going to do pretty well, I'd imagine, as like an asset class. But there's specific secular reasons why I think Palantir doesn't deserve its market cap, doesn't deserve its hype, and is promoted by like all the wrong people, to be honest with you.
Interesting.
Well, look, and I mean, so we're looking at Palantir right now on the screen, and you can see that revenue 1-year growth, 47% growth. I mean, the market's obviously going to be attached to that year-over-year growth for the remainder of probably the stock's existence, I'm assuming, until it grows into its multiple. I want to chat now. You brought something up. You said growth, and if that's still the play. So, Jerome Powell was on 60 Minutes last night, and he didn't say anything new. Is that the Fed is going to support the market until they get that full recovery. So they're not going to wait until they get inflation. They're going to wait until they get inflation for a couple of quarters. They're not going to wait until employment is low. They're going to wait until until they're literally at maximum employment. And so we know that the recovery from the pandemic was, they talk about a K-shaped recovery. So what's really happening is all these tech companies are thriving, and they're thriving under this low interest rate, easy access to credit environment that aren't. So the companies that are like direct to consumer, they haven't really recovered yet. And so what's interesting is that the Fed has made it clear that until these businesses that have been affected by the virus recover, then they're going to start even considering taking their foot off the gas. And so not only are we seeing like a massive transfer of wealth into the future, like sectors, but it's going to stay that way until these other sectors catch up. And so the question is, how far can tech run? How far can it overextend itself while central banks around the world are letting these smaller businesses catch up, like the cruise lines, for example?
Yeah, that's what I was going to say.
The restaurants.
But here's my point. So the Fed is really, I don't think it's officially a government agency, but it's like directed by it's pretty much a government agency, right? Like, so they're not looking at like growth stocks. They're looking at the fundamentals of the economy. So the perception has been that what they're doing in order to pump up the economy is going to be the benefactor of growth and tech stocks, which it has been. Printing money inherently, frees up access to credit, which inherently benefits people with really high multiples. Not people, but companies with really high multiples, companies with, super maybe low margins, but really high revenue streams. That's the whole point of the tech boom that we've seen, the growth boom that we've seen. But I think that the what's going to end up happening is the real reality of why the Fed is doing this is going to start to play out in the market, where you're going to see some of these recovery plays like the cruise lines, like, retail, even like Macy's, as an example. Start to recover at a pace that I don't think was baked in early on in the pandemic. So I do think those types of stocks are going to be the benefit. Now, you wouldn't consider those growth stocks. Some of them are, but I don't think that, like, for example, Uber today is up pretty tremendously, but Palantir is down. You'd have to explain to me why that's the case.
Well, go ahead. So I didn't want to cut you off.
No, I'm done.
Yeah, well, okay. So Uber is another name that that it's been a great day for me and my old man that I help him manage his IRA. We had Baba went crazy. We've had a position in Baba for a while. Our average is like 270. So Baba's up 10%. Uber's up 5% because they pretty much pre-announced. They said that they had the best bookings this month or last month in terms of actual rides that they've had. And you had a company like Nvidia that also rallied as well. And that's, again, what I was talking about earlier about that mixed bag market where we've kind of transitioned away from that easy money market where everything under the sun is rallying. Now we have some names that are fairly priced, some names that are overpriced, underpriced, some names are a little too crowded like Palantir, some I don't think a lot of people are as bullish Uber as they should be. I mean, we're talking about a company that it's using the Tesla game plan in the sense that Wall Street and everyone backing it, they know that they're unprofitable. They want them to be unprofitable, and they keep on giving them all this access to capital to expand. So they bought that, I think it's called Dizzy. They bought Dizzy to sell you alcohol. Now they're talking about selling you weed. They're going to be giving you prescription drugs. Like, I think there's a lot of names in the market that have growth that nobody is looking at. And so these are the names that are rallying, the ones that aren't overcrowded.
But Uber's
like
real.
Uber.
Do you get what I'm saying? Uber's real. Like, yeah, don't get me wrong. It shares in common with Palantir that it has a ridiculous PE ratio, but Uber also is something that like people use and people know about it and people have taken advantage of its services. I don't think the same can be said for a lot of the stocks that have run up. As an example, Palantir is probably the chief of them, but there's other stocks that we can talk about that haven't, that don't really have as big a place in our lives as they do in the market, or at least in the market news. And I think you can get in a bad spot here if you listen to the wrong narratives. To me, the only narrative that really matters that seems to be playing out in the market, it's not growth versus value. It's not tech versus consumer staples. It's just bad stocks that are meaningless versus stocks that actually provide value to people, companies that actually provide value to the population that they're serving. And I think that's kind of playing out. Now, don't get me wrong, Uber's got its problems, right? Like, Uber's not a perfect company. I mean, just yesterday I had a really bad experience with Uber as a consumer. But all that being said, I don't think that if you're worried about growth, or I don't think that if you're bullish on growth, Palantir is the way to go. That's all in that little tirade there.
Interesting. So you just think that Palantir is basically being grouped into growth stocks without itself really being one, essentially.
Yeah, and I think there's a lot of companies that get grouped into that little circle of, I don't know how you'd call it. It's almost like the rat pack of stocks. You got Tesla, you've got Uber is probably participating a little bit in that, but Palantir, these are stocks that exist in like a public zeitgeist of like they bounce around between Cathie Woods and Elon Musk and all these people that have kind of been in the news lately. And I don't know if it's now some of them have value, but a lot of them don't, and I don't really buy some of them. Like GME is an obvious example of this, but Palantir to me is probably the worst example of the stocks that are in the public sphere right now that aren't really providing any value.
Got it. Understood.
And then you have Microsoft that's like actually getting Department of Defense money that Palantir only can dream that it would get. And their multiple is not nearly the same. So that's all. I just feel like at this point, especially at this point in the game, you can get really caught in the bad spot if you just follow the wrong people.
Yeah, well, I mean, that's probably always going to be the case. To be frank, like, I don't know much about Palantir, and I think that's because of what you said. I don't really see what Palantir is doing the same way I see what Uber's doing, and that's why I've been long Uber. Very happy about that because I actually have an NVIDIA chip, and I can see it working for me. I saw some people in chat. Somebody said these guys are dopes. I'm out. I saw when you audibly laughed there, Hoff. I heard you laugh in the middle of me talking. Somebody else said this guy's pumping stocks on the green day. Like, just for a disclaimer, chat. I'm pretty much long-term investing, and I'm not looking at stocks as these that go up and down or whatever. I'm looking at these as businesses. So when I buy Uber, when I've been buying Uber, I feel like I'm buying the business. And same thing with companies like Take-Two and Fiverr and so on and so forth. I think there are amazing investments to be made in companies that you don't use and you don't know. But also, I was watching a video of Peter Lynch from like back in the 90s where he talked about how a lot of people throw away their edge. So maybe they work in some sector. Let's say you work in like the media sector, and you're very knowledgeable about what companies are thriving, what shows are doing well, but you don't take into the market. So what I try to do is I try to actually use, and yeah, I'm going to miss out on a lot of companies that I don't use, like, or understand, like Palantir. But at the same time, my goal is not to be in the number one stock at all times. My goal is to make money and not lose money and have my money get put to work.
Well, somebody was saying like day trading never makes money. They're probably right over the long term. That's something I've seen pretty consistently, or I think all the stats that I've seen on that have been pretty much unanimous that you can't really make money long term by day trading. But there are certain pockets of time where day trading might work out. And when you're kind of range bound, like I think we're going to be for a little bit here, that's a good time to be, day trading. It's not the worst time in the world to be doing that. So if you guys have, I know people are giving me a hard time because I didn't know what Palantir's all-time high was, but it's really the business model more than the technicals that make me bearish on Palantir. I don't really care what the price is. I don't like their business model, and I've seen their PE ratio, which to me is really just kind of tells the tale of that company. Palantir, by the way, Palantir has been around for 18 years. So it's not like this is a new company. It might be new in the market, but it's not a new company. So if there was a time for them to actually become profitable, you would think that time would probably be while they're private as opposed to when they're public, but that doesn't seem to be the case. So yeah, that's my spiel on, I guess, like growth versus tech or growth versus value. I really don't think that the movements we're seeing have anything to do with that.
I see Super Trooper in the chat saying, "Hope this has a replay." Yes, you'll be able to go back and watch this on YouTube after we're done streaming. You can watch it as many times as you like.
Save it.
Save it. But yeah, I was actually speaking about this last week on Palantir, and I was saying how I'm not like a big moral investor or whatever. I was on here talking about how I thought CXW Core Civic was like undervalued, which is a private prison stock just based on their financials. And so I'm not like, some high ground moral, but I'm like, if I don't like Palantir's business model, or I don't think, not that it's not sustainable, but that there might be a pullback from it just in general, not even just from investors, but from their clients and stuff. We've seen Google now like walking back their data scraping of users because they realize how kind of it doesn't look good to consumers. So now they're, like these companies will follow the money basically. So if a company gets bad press for getting a contract with Palantir to do data scraping or whatever it is, then they'll stop doing it as much. And that's just, long term, I don't think some of those business models are sustainable.
I take a little bit of a different approach. Like I'm not super ESG, but now this is me personally. I'm not saying that doesn't move money. I definitely think it could move money, like people's perception of the moral culpability of a stock or a company. But me personally, like I don't mind investing in evil companies. I hate to say it, but it's kind of true. Like there's investors in Philip Morris. There's people that buy companies that they don't necessarily agree with the business model of the company. For me, the problem with Palantir isn't that it's necessarily evil. In fact, all the companies that all like Hershey's as an example, Hershey's came out and did a press release and made it a center focus of their website when they partnered with Palantir. And what was that contract? The contract was to see if weather patterns had any effect on consumption of chocolate. That was the big contract that Palantir was tasked with. And they accumulated all the data sets. They made software around it, as a way, I guess, for their analysts to interpret it. So companies seem actually pretty eager to work with Palantir. It's just the way in which they format over that company doesn't always make sense to me from a profit standpoint. Like anything that Palantir can do, it seems like Salesforce can do better.
Interesting.
That's just my perception of it. Yeah.
Yeah, that brings it into a different light. It's like, if you're done, they're just doing Hershey contracts and maybe they're not as evil as everyone says, but then they, they're doing some location tracking, whatever it is.
Yeah.
Uber, I think it's like going back to Uber real quick. I think it's really interesting because obviously it is people see it as a long-term growth play with other technology stocks. However, people are also kind of maybe playing it as like a reopening play. Like, people are going to be traveling more, going out more. People are going to be Ubering more. Obviously, we just heard, as we mentioned, that they said their last month was like highest bookings ever. I don't know if you guys, Hoff, I know you said you just had a bad experience with Uber. I was out like last weekend here in St. Louis, where I'm from. I'm vaccinated, don't worry. But we were like trying to get an Uber, and it was like $100 for an Uber that normally would have been $20. And it was just like crazy. And I was talking to these drivers, and they was like, they're like, it is just nonstop ding after ding after ding. They pick someone up, ding, another one's going. And they're like, they're like, it's crazy, but we don't want to stop because like there are surges, they're getting paid more.
Yeah.
So I already was kind of like thinking, you know, before this big spike today, like, oh, that might be something interesting to watch out for in the next, you know, week, 2 weeks, kind of see what it's doing.
I think they're going to have record profits, Ed. Is that right? I think you said something like that.
I don't think they've ever had profits.
I'm not.
No, they're probably going to have record bookings. They continue to push back when they want to reach profitability. That profitability is actually, they can decide when they want to be profitable. Like they didn't have to make a lot of these acquisitions, and they can definitely scale back on their growth to get that profitability. But again, the playbook in this market, and this goes back to what companies like Tesla and companies like Palantir is, you have a world where it's very cheap to borrow money. Why wouldn't you borrow that money at practically 0% interest and invest for growth? I remember when I was in college in my first year that we had this project where we had to like make a computer company. It was all digital. And the team that came in first place was the one that spent the most money and went into debt the most. And that they ended up beating the class because that's a legit strategy in economics and finance where you spend all the money now to get all the money in the future. That's what Kathy's been doing. That's how she made her money. In terms of Uber, though, because you said it's like a reopening in play. Uber is like this is why I love Uber so much. I'm Uber bull here, but it's a double-edged sword. So if the world goes back into lockdown, let's say the strain from Brazil or the strain from the UK is out of control and the vaccines don't cover it, the Uber Eats business, as of like August last year, made more money than their actual driving. And so they were able to spend a lot of human resources on building that app. And I don't know if you guys have used Uber Eats in the past 2 years. That app is constantly evolving. It's just getting better and better. Then they're doing things like Uber Eats Pass, where the CEOs mentioned that people who pay that $5 subscription to get discounts, their frequency on how much they order goes up drastically. Then they got the groceries. Like I said earlier, they got the weed and the alcohol, whatever. But it's a double-edged sword. If the world opens back up, people are still going to use Uber Eats, but they're also going to take Ubers around. And if the world closes, then Uber Eats is going to continue to flourish. Again, it's that winner takes all. Get Uber, just like Tesla, is following that playbook, and you see it play it out in the stock, and it's going to $100 in my opinion. Within the next 2 years, this will double. Again, this is $100 billion market cap company. We're not talking about a 10, 20, $30 billion market cap company. Like you're not going to get 500, 600% gains in the next couple of years. But I think it's very rational to see this stock double, maybe go to 200 billion, just even for their logistics alone. Like, let's say you get a company like Tesla that gets fully self-driving approved on the streets in California and all their fleets are out. There's a lot of value in all of the data that Uber's already collected. And this goes back to Palantir as well. Like, we live in an era where back in the day, people would be mining for oil. Well, now people are mining for data, and companies are using this data in smart ways to make even more money. So I think Uber is well positioned for the future, even though they don't have the self-driving cars. They have the logistics and they have the data. They have the platform. They have the brand. And the stock is a reflection of that. I mean, we're $4 away from all-time highs, and the stock's been pretty much consolidating since the IPO. It IPO'd and it dumped, and then Corona happened and it dumped, and now it's up here. So you've had a lot of digestion, a lot of growth in this equity, and so long the market doesn't collapse, I mean, you heard it here first, Uber will go higher.
$100. That's terrible price target. We only have like a minute left, but Adam Smith says in 20 years, $10,000 invested in Palantir will turn into $2 million.
Jesus Christ.
That's a bold prediction. Well, you guys can save this video and you can save that comment. We'll see who's right.
Yeah.
So it's funny because it's already been 20 years for Palantir, right? So it's been 18 years, and the results have not been good.
Speaking of moral investing, Logan Reed says morally I can't invest in Uber. I don't know. I mean, I know there are some questions. Like Jim Chanos is kind of a famous short seller, and he talks about Uber's like biggest asset not being their technology but their labor force. And I mean, I don't know. It's an interesting argument because he talks about basically. I mean, obviously, every time something comes up where they have like a thing where not union talks, but where they were talking about classifying their workers as employees instead of independent contractors. And that was like a bill that was up in California, and it didn't get passed, and it was great for the stock, great for the company. But there's some scares that like some of those stuff will keep arising until something happens. All right. Well, yeah, we do have to wrap up. Wow, that flew by. I had no clue. It had already been half an hour.
Well, time goes by when we're having fun. So
Yeah,
Exactly.
my energy levels are low. It's Monday, but it's always a good time. Thanks for having us, man. Really appreciate it.
yeah, thanks for having us. Appreciate
Yeah,
it.
of course. Well, yeah, we'll see y'all back next Monday for more terrible trader on Benzinga, and who knows, maybe he's not so terrible after all. Calling
No, he's
Uber
all right.
out to 100. I guess we'll check back on Uber next week. Check back on Palantir.
Yeah, somebody said easy to talk about Uber after today's jump. Like, stick around. You'll see some good calls. Take Two is going to the moon. So there you go. I'm telling you that before the jump.
It's actually harder.
Take
It's
two.
real-
That's
it's
one
actually
for the
harder.
road. We got one call
Yeah.
for the road. All right, y'all.
Later, brother. Thanks again.
Take it right.
All right, it is time for pre-market prep at the close.
3 consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
All right, Joel is in the video, Buddy is on vacation. So I brought in my man, Chris Kachi, with this fancy new background.
Look at this. Look
I'm
at the blue
digging it.
screen. Look
Blue
at that.
screen, blue shirt, blue wall.
It's a blue day. It's Monday. So yeah, what's going on, Spencer? How you doing today?
Not much. I confess, Chris, I complained about this a lot last week, and I want to complain again. I'm a little bit bored. I think this is the third or fourth day in a row now that there's not a single sector in the S&P 500 that is up or down 1%. Everything is just sort of blah. I mean, I'll pull my chart here so you can see what the SPY is doing today. We are down about 50 cents in the SPY, which is nothing, really. We're down 0.12%. Who cares? We're down a little bit more in the NASDAQ, but not by much. Same thing with the Russell. Boring. Oil, up 0.5% or 0.2%. Bitcoin, that's fun, up 3%. Everything else, though, is just boring. You seeing the same thing I am?
Yeah, that I've seen that on Twitter from a couple of people too, just talking about how today, there's just not a lot going on. Not a lot of big movers, not a lot of, news stories out there. Obviously, we had the Microsoft acquisition announced this morning, but otherwise, and no SPAC deals announced this morning. So, merger Monday, I thought I would wake up. I thought we'd see some of those rumors come true and we'd get some deals announced. But just not a lot of activity out there.
I mean, we had the big Microsoft deal that was announced this morning with Nuance, and there's been a couple headlines. I mean, we had NVIDIA had their big investor day today. There's a bunch of headlines out of that. GameStop is, I guess, looking for a new CEO, so that's interesting. But by and large, I'm underwhelmed, man. I cannot wait for earnings season. I guess that starts on Wednesday with the banks, but I cannot wait because give me some action. You know what I mean?
Yeah, Spencer, so you just brought up GameStop, looking for a new CEO. I have to tell you, go ahead, pull up Benzinga Pro, because what is that new headline that we are seeing? I just watched a segment on Fox Business. So GameStop now could be looking at crypto and NFTs. They have a job posting out wanting someone with experience with the blockchain, with crypto and NFTs. So guys, everyone predicted this was coming, right? GameStop, NFTs.
So let me guess when the tweet hit.
I bet you can guess from that chart.
Right there. It's a 1 minute chart right there.
Yep. So it was 3:23, a tweet from Liz Clayman. She's a host on Fox Business.
Yep.
So, she even mentioned on air shares were down about 11%, and then they went to down about 6% immediately. So GameStop, let's see if this thing moves higher. Now it looks like it lost some of its momentum, but
they're they're already fading it.
Yep.
I mean, this was a pop that over the course of 4 minutes, 3 minutes. So it's already fading a little bit.
You know, Spencer, it was a real short segment on Fox Business. So I'm wondering if people thought, hey, that there's actually going to be some sort of announcement or there's going to be, you know, some talk of it. It was real fast. It was just saying, you know, that they're looking for a new CEO, but they also might be looking, you know, to get into NFTs based on that job posting. And that was pretty much it. So the tweet that was out was all the information. So
you said you had something to say on GameStop. I thought what you were going to say was that you're throwing your hat into the ring.
No, this is literally, I saw this news and I was like, holy cow, we got to talk about this on the show, you know? So the ultimate meme stock now getting into NFTs could just be like the most 2021, you know, move. So,
oh gosh. Okay. So to be clear, Chris Cacci not throwing his hat into the ring.
No shares of GameStop here. No plans to do it. So, yeah.
All right. That being said, though, Chris, we don't often get you on in the afternoon. You know, later in the day, maybe different perspective on some of your SPACs. And, you know, now that they've had the day to trade, are there any SPACs that you've seen today where the action is interesting or otherwise?
Yeah, I'll for sure. So MUDS, MUDS, let's start there. So this is the SPAC that's taking Tops public. So I talked about this on SPACs Attack. I have an article out on the site. So, you know, Tops, with their investor presentation on the SPAC deal, they said, hey, we've already done NFTs for Garbage Pail Kids, for Godzilla. We plan on, you know, launching more NFTs this spring and summer. Yeah. And they came out with the news today that they partnered with Major League Baseball and Major League Baseball Players Association, and they're launching, you know, NFT packs on April 20th this month. You know, so huge news out, and that stock, you know, ripped on that news. This is one I've been watching since they announced that deal. I don't know if you ever collected cards, you know, as a kid, Spencer, but Topps, a very well-known brand there. And, you know, they're getting into digital and, you know, NFTs along the way now for growth.
Yeah. I mean, I collected baseball cards as a kid, but I mean, that was back in the 90s, man. That like, I cannot get excited about, so I'm signed up for like a couple of like evergreeny like career sites that, you know, I get spammed, you know, like job listings like every once a month or whatever. And sometimes I look just because I'm curious. And for the last year, I've been getting spammed with this Topps thing. Like Topps is hiring. Literally like the same job posting for like a year. And I'm just like, really? Does anybody want to work at Topps? No offense to Topps, but like, does anybody want to work there for a baseball card company?
Yeah, you know, so we had Gary V on the other day, and we talked about sports cards, right? So sports cards are seeing a lot of growth, especially some of your older cards, you know, the ones that are graded. But Topps is actually having a really strong financial year, according to that, you know, SPAC investor presentation. Yeah. And part of that is, you know, the e-commerce side of things and their digital offerings. So they have like Topps Now, where they issue moments for like a, you know, baseball player's first hit, you know, that goes on sale for $9.99. You can buy it. They even had Bernie Sanders, you know, Topps Now cards with him with the mittens on during inauguration, you know, just a digital collectible. So, you know, natural progression here to get into NFTs. And they're kind of going the NBA Top Shot route, which has seen success, right? So they're going to sell them as packs. So they won't be video moments like Top Shot, but you're going to be able to buy packs of cards starting on April 20th, where you'll get those NFTs, and some will be numbered all the way down to a 1 of 1, and it's just luck of the draw, right? You're not bidding on like an NFT, you know, at Christie's or Sotheby's, where it's going to go for $69 million. Yeah. You're buying a pack, so you have the same odds as someone else, which I think, you know, is going to help the collector side of things, but also pull some investors in. And the other thing with Topps I really like is not only do they have the baseball and, you know, the other sports partnerships, they also have a good relationship with Disney. So they have, you know, some Star Wars cards they've done. And Michael Eisner, right, who was the CEO of Disney, he bought Topps. He's attached to Topps. So he knows the Disney brand well. And if they could ever get into, Disney or Star Wars related NFT cards, I think that would be a catalyst as well. So Topps is one of my favorite SPACs here, and obviously now becoming an NFT play too. And when we talk about NFT plays, I want to find the ones that, they're not just throwing the press release out there, and basing their whole business off of it, but it's a cherry on the top for them, right? So it's not banked into the revenue projections.
I think it just comes down to asset price inflation and assets. Every asset is seeing inflation, right? Whether your asset is stocks, whether it's your home, or whether it's collectibles, right? People just want a place to put their money, and assets are going through the roof. Asset prices are going up across the board, whether they're quote unquote like legitimate assets like houses and stocks and those things, or newer alternative assets, right? Like baseball cards, for example, or digital baseball cards. Just asset price inflation across the board. So I think Topps would just be a part of that trend. I did want to look at space here quickly. Virgin Galactic is not having a great day, and I think it's because Blue Origin announced they're gonna. Here, let me pull up on the news feed here in Benzinga Pro. There's a report on Sunday that Blue Origin, which is of course owned by Jeff Bezos, is being given a launch window for one of its rockets. So I guess this is a competitor to, I know it's a competitor to Virgin Galactic, and shares down about 9% today on that headline. So interesting. We haven't been talking about space too much, but it of course was was it like the first quote unquote modern SPAC? Is that?
Yeah, SPACs have been around for years, but this is probably the one that, in 2019 was really at the start of the major trend. And, so down big today. I do own shares of SPCE. That Blue Origin news out, isn't great for them. But again, space is growing. The big thing for Virgin Galactic is, are they just going to be a passenger to space company, or are they going to be able to get some of those, government contracts? They do have a contract in Italy with the space, department there to take some astronauts up. But otherwise, so far, those last couple test flights they've done have had issues. So you have that negative news. And then, of course, you had Chamath selling shares. So not a lot of positive news right now. So this is just kind of another one of those news pieces that, send shares down. So, they really could use a positive catalyst at this point and get one of those, space test flights, to really show, hey, we can do this.
Yeah. It's so like this is like an old SPAC, but it's like so early in this company's history, is it not? I mean, when I don't even know the timeline. When's the timeline for Richard Branson going to space?
So it was supposed to be in the first quarter of next year, I think, where he's going to space. But that was if everything, met its goals. So, so far they're not there. And he's going to do, of course, that first major test flight before they send up passengers. But they have a decent amount of bookings. But yeah, ultimately it's not revenue until you're able to get those people to space. So the timeline has definitely, been pushed back. And, they just shared a video of this, awesome looking spacecraft for the future. They've got some Under Armour, space suits, but ultimately, it's just flashy until you can get, the flights up to space to actually be completed. So
I'm just curious, who was it in chat? Jay Rice in chat. So the ARK Space ETF launched, was it on the 30th? Let me look here. When did ARKX, right? ARKX. That launched on the 30th, right? So to go back to space, I'm just curious if there was a trade there. No, there really wasn't a trade there. To coincide with the ARK launch. Okay, never mind. What else am I seeing out there? I want to talk NVIDIA. This is your big gainer of the day. They had their analyst day / chip whatever you want to call it. It was like a big presentation for them. They announced a bunch of things. They announced their first data center CPU. They raised their guidance, even though their current quarter is not over yet. They said NVIDIA's got a weird fiscal calendar where their quarter ends in May. So they're like about halfway through their Q1. But they said they already know that their Q1 guidance or the Q1 revenue will be above what they had guided for. So they raised their guidance for the first quarter. They announced a partnership with CLDR. So Cloudera is up, or at least it was up. It did spike up. It's not up now, but that spike there was on that NVIDIA headline, the partnership there. But NVIDIA getting a lot of love today for their event, and in a relationship, punishing the rest of the chip stocks, right? So you look at AMD, it's down 5%. You look at Intel, it's down 4%. Let me think of other ones. You got Qualcomm, right? Let's go to Qualcomm. Texas Instruments, all down today as NVIDIA is expanding into data center CPUs. Xilinx down. All sort of down on the same NVIDIA headline today.
Yeah, and it's interesting because I just actually wrote an article about Intel. They, of course, acquired Mobileye not too long ago, and Mobileye signed a big deal with an autonomous company, to power those electric vehicles. And they had that news out, and then it looked like Intel was also going to serve, as a foundry for the chip shortage. So to me, some positive news, and then it got, hit. Because, NVIDIA out with their big news, their big guidance in that event. So, bad timing for Intel, with those news items out. But yeah, all those competitors, down on that news from NVIDIA. It looks like they're just trying to push further and further, with that market share lead there.
All these headlines. I'm going to ask a really, really dumb question. Don't laugh at me, okay? Don't make chat. Do not make fun of me. But, there are things I don't know. Chris, what is a foundry?
So a foundry, I think, is just where, the chips are made.
Is it?
Yeah, that's what I've always thought.
Someone help me out. I'll be honest with you. I'm pretty ignorant when it comes to like chips and manufacturing of them. I'm not technologically savvy. I just want someone to explain to me what a foundry is. So Chris is saying that's where they make them. Cool. It's just a cool word. And I never bothered to actually look up what it is. I just hear people talking about foundries all the time. And
yeah, let's see what people in the chat are saying. That's what I've always thought. So maybe I'm wrong.
Yeah, they're saying it makes the chip. Great.
Yeah,
it's such a cool word, man. Foundry. Yeah. It sounds like something's going on in the foundry. We got to go down to the foundry.
It's the place. It's the place you want to be. I mean, it's the place NVIDIA wants to be too. Because look at them, killing it on chips today, and that's been one of the big stories, right? Chip shortage. So, a lot of these chip stocks, impacted by that, but NVIDIA just out with, lots of positive, news. So right. Not a place you ever want to work. Okay. I take it back.
I guess so. Yeah. All right. So yeah, produces the metal castings. Logan Reed says, for semis. All right. There we go. For those watching, we did just turn green in the S&Ps a few moments ago. There is a sell imbalance of about $800 million. That'll definitely change in the next 12 minutes or so. But we are now green for the day, at least for the moment, in the S&Ps. Still slightly in the red in the NASDAQ and the Russell. But as I mentioned, we are coming off on the close, and there is not a single sector that is up or down 1% today. Everything else, every sector is either up. The most is discretionary, which is up about 0.5%, and the worst is services XLC, which is down about 0.2%. So just not a lot of action, no real overarching theme or trend to follow today. It's just a continuation of what we saw last week. We're just gonna end up probably closing higher and just steadily marching on this march to new highs. This is just what's been happening, and it looks like it's what's going to continue to happen here. Let me just check real quick. Let me make sure there's nothing on the earnings front for tonight. I haven't checked that yet today. I doubt that there is. Let me just check earnings tonight and tomorrow. No. We do have Let me see here. We do have Fastenal reports tomorrow morning. That's interesting, but that's pretty much the only thing, the only one of note. Only earnings report and an organogram OGI for your cannabis traders. Speaking of cannabis, Cannabis Insider up at 4:30 on this stream. I also want to mention we're debuting a new show in about 10 minutes. The weekly short recap with Edwin Dorsey. This is a guy that publishes a lot of, he publishes a newsletter and he covers the short seller industry and what short sellers are doing, what the shorts are reporting themselves, how they're positioning themselves, what they're talking about. And he's going to talk to us about what exactly went down last week in Shortland. And he can also speak to more to like how that process works, like how these famous short sellers, whether it's Jim Chanos or whomever, or Melvin Capital, whatever, how they go about, their research and positioning themselves short and then releasing these reports. And so we don't talk about that enough, I think, on our stream. And Edwin covers the space really well and has a really good feel for who's shorting what and why. So that'll be at 4:00 here at the close. Chris, was there anything else that you're watching today? Anything else on your radar for at least for tomorrow? Because like I said, it's just really quiet out there, it seems.
Yeah, so the big story, and I know you talked about it earlier this morning, Coinbase IPO this week. So I mentioned on SPACs Attack last week 3 SPACs to watch based off of that, and one of them moving today. So VIH. So VIH is up about 6% today. So they're taking Backed Public, which is a unit from the ICE. So they launched the first regulated Bitcoin futures exchange and also the first fully regulated options contract for Bitcoin. So this is kind of a crypto exchange play, and it's going to be similar to Coinbase. So, it's a sympathy play here. It's getting the love today. And then FTCV, which is taking eToro public, was another one I mentioned. Those shares are actually down today, but they did have a good run up on Thursday and Friday. So FTCV, eToro, which eToro, they have Bitcoin, they have crypto available. They're more of a larger player in Europe than in the US. But I think that could be a sympathy play. And then also GWAC, so Guac. They are bringing Bitfury, a Bitcoin miner, public via SPAC. So I think you're going to see some of these crypto plays, some of these Bitcoin plays, and the exchanges, trade higher depending on how that Coinbase IPO goes. The other one that I shared months ago that, hasn't really done much or taken off yet is BBVA. So this is a banking company.
I was going to say, that's a bank, bro.
Yeah. So what's interesting about BBVA?
Why?
They own a share of Coinbase. So it's less than 5% because it's not, listed in the filing. But they bought into Coinbase back in like 2013, 2014 when it was valued, $250 million. So I'm curious to hear if they come out and they talk about, what that stake is worth now. And of course we had Gary V, Matt Higgins on SPACs Attack. They both bought into the Coinbase IPO in 2014. So they're super excited, to see shares hit the market this week because, they got in at a much lower valuation too. So
interesting. I didn't know that. All right. Yep. It's always good to know, like, for example, I remember when Spotify IPO'd and they also did a direct listing like Coinbase is going to do. And there was a company, oh God, what was the ticker? It was like was
it GSV?
Yeah. Well, not gold. Maybe it was GSV.
So GSV is no longer. GSV is now SSSS.
Okay. Well, oh, wow. Okay. When did that happen? When did that happen? But B, GSV, or at the time GSV, had a pretty big stake in Spotify.
Yeah.
And it's good to know those relationships.
Yeah. So it's funny you bring that up because I was actually going to say that. So GSV, they were invested in Spotify. They were invested in Twitter and Facebook and Uber, prior to IPO. So this one became a Palantir trade. This company, they own part of a stake in Palantir. So if you look at the chart, when that thing started going up, that was based on the Palantir IPO. And then also, I think 2 weeks ago, Spencer, when was the Coursera IPO?
Was it last week? It
was either last week or the one before. So Suro Capital, one of their largest holdings is Coursera. So this is another sympathy play, right? You could own part of Palantir and part of Coursera, and they own part of Nextdoor and some other companies. So
interesting. I also want to mention Chris and Midge did a great interview today with Jeff Arnold, who's the founder and CEO of ShareCare. Ticker FCAC is the SPAC that is merging with ShareCare. I'm not going to ask Chris to summarize his interview because what I'm going to do is I'm going to re-air SPAC's Attack today at 6 p.m. in between After Hours with Ryan Rozbiani and Making Bread with Cheds, our crypto trading show. So I'm going to re-air SPAC's Attack from today that includes our interview with Jeff Arnold, the founder and CEO of ShareCare, the company that is being bought by FCAC, Falcon Capital. So, Chris, great job. I wanted to say that before I forgot. But I'm not going to have you tease it because, well, maybe tease it. Tell people what.
Yeah, well, thank you, Spencer. And the thing I'll tease is, ShareCare, not only is it a digital health company, but it's a reopening stock here too. They have a new platform that they launched, and they had some news out today with the city of Los Angeles. They're going to help bring cities and, arenas and hotels back, with their ShareCare platform, out of the pandemic. So you'll hear more insight if you watch that interview with Jeff. So that's the teaser I would give. Okay. Another stock, if you want to bring up, Spencer, that I saw pop up today was Signet, SIG.
Signet, do not tell me this is an NFT play.
It is not an NFT play.
Thank God.
You know what it is? It's jewelry, and they actually they shared new guidance today. So if you scroll down, Benzinga Pro, they issued new guidance for the full fiscal year, and it's ahead of consensus. And the other thing, if you scroll back to April 6th, is I saw this pop up. They actually acquired a rental subscription platform. So think getting jewelry by mail and renting it, which I thought was an interesting move. But they call it part of their plan to grow their services, right? So not only do they want to sell you jewelry, they want you to come to stores to get it fixed, to have warranties, right? Because that's where their margins are. Right. But this one was very interesting because, it dropped. And it is starting to come back to life, with that new guidance.
Seriously, good luck, okay? This is a 12-year chart, 13-year chart. Good luck on SIG. Everyone, seriously. I wish you the best.
As someone who used to work in a restaurant inside a mall, we saw all the jewelry stores, right? And Signet owns most of them, right? They got Kay, they got Zales, and they got Jared. So interesting to see what they can do here. It looks like they are closing some underperforming stores, and I wouldn't be surprised to see them, keep closing some stores and really try to push more of the e-commerce direct-to-consumer, marketplace, rather than all the in-person stuff. But ultimately, can jewelry be that type of trade? When it's so expensive, do you really want it coming to your house and not picking it up in store? So as long as I've been at Benzinga, that stock is underperformed. So So I was surprised to see it jump so much today just on that guidance, because it was one of those stocks where I figured their guidance wouldn't be great, but they raised it. So
all right, last thing I want to say before I bring on Edwin Dorsey here to talk shorts is Benzinga is starting up a new YouTube channel. So what happened was we got a lot of people that were like, you guys post so much stuff that we cannot. It's a mess. We cannot keep up. It's just way too many videos, way too much content. So here's what we're going to do. We're going to keep all of our live streams, our live shows up on the Benzinga channel. Okay. For the other channel, where we're going to put all of our clips, all of our highlights, all the short form stuff, that'll go on a new channel. And I actually want to ask what people think. For the moment, the channel is called Benzinga Briefs. Now, I don't know who came up with that name, Benzinga Briefs. I think it was Luke Jacoby.
I was going to say that's got Luke written all over it. So,
but I don't know if we want to call our new channel Benzinga Briefs. Chad, if you have an opinion on this, Jason's here. Jason has some opinions on this. I don't know if we want to call our new channel Benzinga Briefs. Why not Benzinga Shorts? You know, if we're going the short route, why not Boxers? What's up, Jason?
For me, nothing clarifies the clarity. I'm confused.
Sure.
Is it a different channel? So is it something not under the Benzinga YouTube channel that has like 86,000 subscribers? Are we starting a new channel from scratch, or are we using Raznick family that has 30,000 subscribers? Like what is it?
Yeah, it's going to be a new channel that is just for the clips. It's not going to be. It's going to be independent from like the Benzinga YouTube.
So let me ask you a question. So if Chris Kaji, he's on here right now. I see him. I like his background. Chris, how are you, man?
I'm good. How about you, Raz?
Yeah, good. I'm sorry we don't talk. We should talk more often. But just real quick, I know we have Edwin coming up. But my question to you is, if Chris has a thing with Mark Cuban, okay?
Yeah.
And it's about SPACs, and he's on the live show. If I want to see, like, if Cuban has like, Cuban says this NFT is going to go to $1 million, okay? That's a highlight, a 2-minute clip. I won't find that on the Benzinga straight YouTube, is what you're saying?
Right. That's the plan.
Got it. Okay. And we're doing that because the user feedback about like the
I'm doing it for a few reasons. One of them is user feedback. The other is the Benzinga YouTube channel performs really well for live streams. Like YouTube knows us as like a live streaming channel. It doesn't know us so much as like a clips channel
for the algorithms.
The algo. So
okay, got it. So what I have a call with a YouTube executive tomorrow at 3. But the name that I just thought, I know you talked about this before. You told me to come on.
Yeah.
Someone, Happy Muhammad, I think you should join Benzinga in some way. But Benzinga Clips is cool. Benzinga Highlights is cool. Benzinga Highlights is cool because like I want to see the highlights of the day. And I would like it. And I mean, and it's, by the way, it's a way to experiment, in some respect, because if it doesn't work, we can go another thing. And we need a BZ network. Yeah. Isaac Mooney, we're working on it. Spencer is working on Fubo TV. I think get a call on Friday with them. And then I'm working on Direct TV right now. So we'll be on Gas Station TV. We're working on it. If someone wants to join here and do business development for syndication of networks, please do. It's just a question of getting to the stuff, We can't, I wish we can clone us, but it's hard. I don't know. We can figure that one out.
Yeah.
By the way, I know I'm changing subject, but Chris, I talked to Gary Vee this weekend on DM Twitter.
Did you? What did he say? Did he like coming on the show?
Nice stuff. First time he's gotten back to me. So yes. So,
well, maybe we made a good impression on him then. So
yeah, I think so. I think so, and I think more updates and I had a revelation on SPACs and what stuff that you're doing, like some cool stuff that I try to get Luke initiated on, because there's so much cool stuff that like you just don't know that's out there. And a lot of it, and you talk about it all the time, Chris, I'm going to give you credit, but it's the people behind the SPACs. It's the people. And there's going to be huge winners, which you're in that one that Gary Vee is involved with. What's the symbol of that?
So the symbol is OCA, Omni-Channel Acquisition.
Okay, the worst part about all this is it's impossible to find symbols. You have to it's like I wanted to find the op loan symbol today, and I had to go do 4 searches. That Gary Vee one, I wanted to buy it on Friday or Thursday, but I forgot the symbol, and I was going to message you, and that's something we should solve for too. So
yeah, I'm working with the developers on the SPAC page, because it definitely needs some work to get all the symbols there, get the key people listed, the amount of money that they raised, and then the important dates for the calendar.
But even if the company didn't convert, so the op loan is, I think, Financial Endeavor something. You may not know that one, but you type in op loans, the ticker, the company should come up that hasn't converted yet.
You're talking like OpFi?
Yes.
FGNA, FG New America.
You passed the test.
Chrisopedia is the nickname that the chat has given to me on SPACs Attack. Right?
All right. So my question is, if I type OpFi into the search, does that symbol come up, dude?
That symbol won't come up. No, if you type it into bz.com, you can get the article, but the symbol.
I know, but if we solve for that, then we solve a huge problem. I already forgot the symbol you told me for Gary Vee. I have no idea. So what's the symbol for that?
OCA.
Benzinga bites, by the way. What do you think about that one, guys?
I think anything is better than Benzinga.
Yeah, Raz, I don't think you answered. What about Benzinga briefs? Is that one just completely out the window?
Yeah, Benzinga briefs does not make this. I don't think Luke understood. Benzinga
Was
showed
that
me the
Luke?
money.
Are you saying right now that was Luke who came up with that name?
Because Benzinga briefs is a new product Luke is launching on the news site. Okay,
Yeah,
you'll see it. I don't
the videos.
think, not for videos. Yeah, for news. So people do like highlights. Benzinga highlights make sense. I think Benzinga highlights makes a lot of sense. That's what I like.
Okay.
Yeah.
All right. This was good. This was informative.
You've got a new show. You can kick me off. Thank you, Spencer.
Hey,
good
Chris,
to see you, Raz.
Will you ever come downtown?
I want to come check out the place. So
yeah,
let's make it happen.
We'll get you, if you and your wife want to come, we'll get you a hotel. Now that places are open.
Are you going to get a babysitter for the kids too, or?
By the way,
Jason is the babysitter.
By the way, if I'm like Spencer said, if I am the babysitter, but my words, I meant it. Anything that can help someone with their life here, if it's me getting you a babysitter, I will get you a babysitter. I'll go to care.com. I'll pay the babysitter. I'll pay for daily and nightly, but I know you probably don't want to use care.com at this point. But yes, the answer is yes. Whatever makes your guys' life easier when you're like sweet at Benzinga and you're awesome and you like impact the outcome, I'll do whatever I can to make your life easier.
Well,
honestly.
Thank you. You got me this nice video equipment, this nice color background behind me. So
where are you right now? That's what I want to know.
So I'm in the same room, but we completely redid it, and it is all set up, ready to go now. So.
And then one last thing for the before Edwin Dorsey it kicks it. One of the producers here, he was getting Smile Direct. He already paid for it, the full amount. He already paid for it. I think it was like $1,700 or something like that, $1,800.
And you could have gotten him a discount.
No, it's not even done yet, Chris. I did get him a discount. I got him 50% off.
There you go.
So the $1,700, he was on a monthly plan. I got him 50 off, and that's for people at Benzinga. If you're impacting the outcome, I'll do what it takes. And by the way, I used up a favor to do that. Like, it wasn't like I can't get unlimited 50% like that. It was definitely a favor that I used up from it. And I don't like S-favors, but if it's someone for Benzinga, do whatever it is. Anytime there's a struggles or anything, I will find a way. If you want to go on a trip and it's booked, I'll get a hold of the GM and get an opening. I swear. Like I just don't, because that's just what it is. Benzinga tokens we should create, by the way. I don't know if that's the name of that.
We should.
No, 100% we should.
Yeah.
I don't want to stock whatever. Executive at a company that does this stuff, they said that they think we'd sell the shit out of it. So
for sure.
Wait,
our fans would love it.
So
look at the chat. I'm sure they're gonna say right now that they want it.
Do you know anything about tokens then, Chris?
I know crypto, but like as far as like some of the coins and the tokens, I mean, I don't go very far beyond the big ones.
If you do know anyone that would, that's funny. Make Benzinga Briefs logo merch. If you know anyone that like knows the coin stuff, I would create a coin. Why not?
Yeah.
All right. I'm going to say goodbye to both of you. And I'm going to
thank you, Spencer. Thank you, Raz.
All right,
love you guys.
All right. Edwin Dorsey was 8 minutes delayed there, and I apologize. But we got a lot to get to, so let's get to it. Edwin, how are we doing today?
Spencer, I'm great. I'm excited. Thanks so much for having me on. And we have a lot to discuss.
We got a lot to discuss and not a lot of time to do it in. So let's jump right in. What are you seeing? Give us a recap. If you want to share your screen, great. What happened last week on the short front, on the short seller side of Wall Street?
Absolutely, Spencer. There were 4 big new activist short reports. We're going to go through the 4 big activist short reports. This is an area I'm passionate about. I read all the reports. I spend a lot of time with activist short sellers. So we're going to go through the reports, kind of talk about what I see, how I go through them, and maybe it's going to help inform people's opinions. The first report I want to point out, and probably first let me share my screen. The first report I want to point out, and probably the best one, was a report by Hindenburg Research. Hindenburg is a well-known activist short seller. He tends to take a more investigative style where he'll do deep dives into companies, almost acting like a journalist. He'll hire private investigators. He'll take photos of factories. He'll do a lot of stuff that goes beyond the normal type of reporting that some other activist short sellers do. He wrote on eBang, which is a China-based cryptocurrency company. The ticker is EBON. They're about $1 billion company. And what he highlighted is that since going public in June, they've raised about $375 million from U.S. investors by issuing stock in a series of stock offerings. And usually when companies issue stock, they'll use the proceeds to fund their business, to grow their business, or something to further their business purpose. Hindenburg highlighted that actually might not be the case with eBay. In his report, he highlighted that $103 million that the company raised from investors went into bond purchases from their U.S. underwriter, AMTD, which is kind of seen as third tier and has been previously accused of fraud and self-dealing and penny stock pump and dumps. So that was like one odd use of cash. Why did this company use $100 million to loan that company money? Yeah. Hindenburg also highlighted that the company directed $21 million to repay related party loans to eBay's chairman and CEO. He also highlighted some other company issues about the substance of the company. He highlighted that before going public, the company twice tried to list in Hong Kong, and both times was rebuffed because the regulators didn't accept them there. eBay claims that they have a big cryptocurrency mining business and a big business cryptocurrency exchange, but he found that that very few people actually use the platform, despite them claiming to have hundreds of thousands of users. And his report overall, I thought, was outstanding. Here he talks about the lapsed listings, and he highlights that a lot of people can't seem to figure out like how they're claiming to have so many customers. One of the most important things for any company that's being accused of fraud is its auditor. Who's auditing the company? Who's determining whether the books are accurate and the statements from management is accurate? My favorite thing to do after an activist short report is to go to the PCAOB website, the Public Company Accounting Oversight Board, which will tell you who a company's auditor is and give a lot of other useful information. So anybody, if you have a ticker, in this case, EBON.
This is a great resource, by the way. Keep going.
This is an outstanding resource. Some advanced hedge funds don't use it, and this is what any individual looking at a company should do. You go to the PCAOB website, free public website. You go to their auditor search feature, which is right here. You type in a ticker, EBON, and it brings up your holding, eBay International Holding. Right away, you can see the auditing firm is Malone Bailey. You probably haven't heard of them because they're not considered, a tier 1 auditor. The best auditors are called the Big Four auditors. That's Deloitte, KPMG, PwC, and Ernst & Young. If you see one of them there, that's a pretty good sign. That doesn't mean there's no fraud. It doesn't mean the company could still be overvalued. There could still be problems, but those are seen as the tier 4 auditors. Malone Bailey isn't one of them. Something I like to do that's somewhat advanced is the PCAOB website also tells you the specific person from the audit firm that is conducting the audit and looking into this company. In this case, it's George Quinn. So you can click on him here. This is the person that's auditing eBay's books. And you can see his past audits. What other companies is this guy doing? And I think it gives you a 3-year history. And one thing I like to do is just quickly see, are the other companies he's auditing successful, or are there a lot of failures and a lot of other alleged frauds kind of in the mix? So he audited, eBay's auditor also audited China Media. Let's see how that one did.
I got to say, I never actually went that far. I never looked at an individual before.
And I think it's super helpful for when you're trying to look into these activist short reports and determine whether or not there's actually substance there. So China Media went to 20 cents and is now delisted. He also was the auditor for New Water Technology, NEWA. That company, also China-based, seems to have gone down a lot. That's not a good sign. He was the auditor for MTC. MTC also went down a lot, also China-based, and he's also the auditor for EBON, which we know that's the company, and Vaso. Let's see how Vaso.
I'm going to pull my chart. Wait, what was this ticker on the last one?
Vaso, VASO. It's over the counter listed, and it's basically gone to zero.
All right.
So you got 4 companies that this guy previously audited that each fell a significant amount. So when you look at that and you look, it's a third-tier auditor, allegations of fraud, previously tried to list on other exchanges and didn't get that listed. That's a pretty bad sign. So to me, this was a really good report, and there could be a lot of issues with this company.
Wait, can I address a question from Logan Reed here? Is it easier? Oh, not that one. Is it easier getting listed on the NYSE than other exchanges? No, not necessarily. Really, there's two exchanges in the U.S. for stocks, right? Two main ones, at least. There's NYSE and the Nasdaq. And the companies that Edwin was just talking about trade on OTC. That's not an exchange. It's a different. In the eyes of regulators, in the eyes of the law, it is a different entity entirely. It is not technically an exchange. The requirements to trade on the OTC markets are very different, right? To trade on the NASDAQ and the NYSE. NASDAQ and NYSE require certain regulatory standards, certain financial standards. You have to pay them, obviously, right? To list on an exchange. The OTC markets does not have as much stringent requirements as the exchanges do. So in the sense, it's easier for companies to not list on an exchange and to list on OTC markets. However, that is not necessarily indicative just because a company, as we all know, just because a company lists on an exchange like the NASDAQ, the NYSE, does not mean they're not full of crap, right? And just because they list on OTC markets does not mean they are full of crap, right? A lot of companies, a lot of international companies list on OTC markets. They just choose not to list in the U.S. And a lot of crappy companies like Luckin Coffee, for example, list on exchanges in the U.S. and turns out they're a total fraud. So I just wanted to interject with that comment from Logan. Now proceed.
And I'll just jump off that a little more, Spencer. It is somewhat tougher to get a U.S. listing on the New York Stock Exchange or NASDAQ. It's also important to see how did they get that listing. Some companies will IPO, which means they'll file a bunch of prospectuses with the SEC, file a lot of documents with the SEC, raise capital from investors, and start trading on the New York Stock Exchange or NASDAQ. That's kind of seen as the gold tier way to go public. The second or third tier way is either by going public through a SPAC, where you might not be subject to the same scrutiny that weeds out bad companies, and kind of seen the low quality way to go public on the New York Stock Exchange or NASDAQ is to reverse merge with like a cash shell or some other small entity that'll like bring a company public. Now that's seen as a poor way to go public and generally should be like a red flag or cause for concern if you're looking at a company. Let's look at some of the other activist short reports. Muddy Waters published 2 opens letters on Solutions 30, a French tech services company. This is kind of odd because usually Muddy Waters is known for putting out big reports, and here they were just publishing open letters. Solutions 30, French tech services in the financial industry. A few months ago, an anonymous short report came out and accused the company of like money laundering and having a lot of ties to criminals and inflating their books. The company, in response, launched an independent investigation led by Deloitte. And then some of the results from the investigation were coming out. Muddy Waters sends an open letter to the chairman of the company, and he says, to put it bluntly, we think you're in on the wrongdoing. He said the report did nothing to dispel our concerns about S30's multiple and persistent ties to individuals associated with organized crime and money laundering. And then Muddy Waters highlights some smoking guns raised by the Deloitte report. He highlights that the CEO's 6 months of his emails went missing, and the company said it was an IT error.
What?
It's like 6 months of communication went missing, and that's not a good sign. I believe the Deloitte report also said management was misleading Deloitte about some accounting issues that were relatively small. And then Deloitte confirmed that one of that S30 made this acquisition of like a shell company and later sold it for a much higher price. And there was something odd going on there. And overall, I thought it was a pretty compelling letter. And if you look at Solutions 30 stock over the long run, it's done really well, but it started to take a hit as people have like started questioning the things The one problem is, the one thing I always keep in the back of my mind is sometimes you can have real issues. You might have a criminal activity, but that might not reach the scope of making the whole company worthless. It sometimes is a huge issue and could mean the company's worth zero. Other times it could be limited to 5 or 10% of the company. So really at this stage, I think it's too early to say what's going on, but I wouldn't want to be long the stock. He published a second open letter that raised other issues. We don't need to talk about that. The third report that came out was from Spruce Point Capital Management.
We know them.
Porch Group, PRCH, $1.5 billion company, I believe, that went public through a SPAC, like Home Tech Services. I didn't like this report. And Spencer, I got to be honest with you, I'm not always the biggest fan of Spruce Point. They tend to just write tons and tons of words. Their full report was about 15,000 words long, and that's like too long, I think, for anybody.
Nobody got time for that, man.
Nobody has time for that. And then I always like reading the summaries, and you can barely understand this. Like they're just, it seems like what you don't want to do is just like mudslinging and raising a lot of random issues that don't go together in a cohesive way. He said like Porch's CEO left off, a negative past experience from his biography to investors. That's not a good sign, but it's also like not huge because some people have 10 past experiences.
Yeah.
He said that there was an executive compensation issue that might not have been fully disclosed. And then he jumps to like a price target 40% lower without making it super clear to me how he reaches that. So Spruce Point, I think, tends to be hit or miss. Sometimes they do great stuff. I couldn't even follow this report that much, and I didn't love it. And then the last one, a really interesting company, is GSX. I assume your users, a lot of them have probably heard of GSX Tech EDU. Yeah. It's a Chinese online education company that has been accused of fraud by like every activist short seller under the sun. I'll just read to you some statements that have been said about GSX.
Yeah.
Marcus Aurelius Research called GSX a complete and utter fraud. Citron Research called GSX the most blatant Chinese stock fraud since 2011. Muddy Waters called it a near total fraud. Grizzly Research called it too good to be true. Scorpio Venture Capital in China called it a long-planned listing scheme. Everybody seems to think there's issues with this company, and it's down about 80% over the last few months. And the report that really caught me eye was from this anonymous site called Deloitte Watch. Deloitte is actually the auditor for GSX, and it highlighted how there's a lot of fake teachers on GSX's website. And this is one of the way GSX inflates its fake tutor count. And then after they started reaching out to the company and highlighting the incorrect teachers, a lot of them were removed or had their user IDs changed. Sometimes they'd use the same photo for 2 different teachers. Sometimes they'd lie about the qualifications of teachers on their website. Overall, there was just like a lot of problems at GSX, and I'm really skeptical of the company.
Dude, all right. I'm gonna say this is why I'm generally speaking very skeptical of companies out of China, unless they're mega cap, unless they're large cap tech, unless they're Alibaba or Baidu or JD. Then I'm just skeptical by nature, because it does seem like a lot of sketchy things happen with these high-flying Chinese companies. Does it not?
That totally happens. There's definitely a growing movement where people are starting to question, why do we even allow these Chinese companies to list in the U.S.? Because so often it ends with U.S. investors losing a lot of money. And in fact, the money flows from the U.S. to China. So it's almost becoming like an issue on the national stage. It's always worth seeing how companies respond to reports, because companies do deserve the right to respond and defend themselves. And sometimes activist shorts do get it wrong. In GSX's case, they put out a press release in response to one activist report, And they said they would consider any necessary and appropriate course of action to protect the interests of the company. And a reading between the lines there, that's a little bit like, we might sue you. Rather than responding to the actual substance of the report, they're trying to intimidate people. And that, to me, is almost always a red flag. So,
So here's a good one from Cameron Dahl. I mean, yeah. TIRX. I don't know if you saw this today. Chinese insurance company. It just went from 90 to 20 today.
Oh my goodness.
I don't know what the news is. I'm sorry. I don't. This is a NASDAQ listed company, TIRX. How many trading halts have there been? Let's see how many. Go to my signals tool. Let's look for a stock. Let's look at TIRX and just see how many halts there is today. 1, 2, 3, 4, 5, 6, 7, 8 trading halts throughout the day on this one stock.
That's nuts. I'm trying to pull something up on TRX here. Hold on. Okay, you want to know something funny? TRX, I actually have it in the back of my brain. So, Spencer, usually when I see a stock fall 80%, especially in China, I always think margin call. So I don't know if this was the case in this case, but a lot of times, especially in foreign companies, you'll have executives who will just margin out as much of their stock as possible, especially if they know it's overvalued. Take that money from the margin loan, invest it in houses, just spend it, like use it as their cash. And then eventually the stock will get margin called in one day and like the entire thing will come crashing down. I want to show you something that I think every investor should do when looking at Chinese companies.
Yeah, show us.
Valuable, and not enough people do it. So I think most people know that there's Edgar. Edgar is the SEC's database for public company filings.
Yep.
So you go there, you go to here. You know, this is just the Edgar company search. The ticker is TIRX. I hate the new version, so I always click classic version. And then you type in this thing called CORRESP, CORRESP. It means correspondence between the company and the SEC. That's what CORRESP stands for.
You can actually show you a shortcut. If you have Benzinga Pro, you just go into a newsfeed, turn on your SEC filings, and search for your ticker. And this is exactly what Edwin was gonna pull up on Edgar, and we have it in Pro. So look at all these correspondences. Now keep going.
Exactly. And we're going to go to the one from January 2015. You click on it.
Oh, man, this doesn't go back that far. Holy moly. Okay.
2015? No, not January 2015. I meant January 15th, 2021. My bad.
All right.
January 15th, 2021. Okay. Correspondence. I read a lot of these. I find these letters fascinating. Because this is just the SEC. This is like the SEC's informal way of asking a company question. It doesn't signify a formal investigation.
Yeah.
A lot of companies receive this correspondence, but it's the SEC asking company questions. And here is the SEC saying, we remind you that financial statement updating requirements provided in this regulation, specifically, in the case of an initial public offering, the audited financial statements shall not be older than 12 months. This requirement may be waived in cases where you say complying with it is impracticable or involves undue hardship.
Okay, so in other words, what the hell, guys? That's
and then the company said you get the company's response, and they say, we acknowledge staff's comment, and we're not required to comply because it's impracticable or involves undue hardship. And that's like crazy to me. It's like you're not even gonna give the 12 recently audited financials because it's impracticable or involves undue hardship. And I guarantee you, if the investors in that company knew that they were avoiding this pretty standard regulation, most of them would have cast a skeptical eye earlier.
Oh man. Oh my God. All right. Jeez. That's unbelievable. That's unreal. Edwin Dorsey writes the Bear Cave newsletter, and I just saw someone in chat, Voodoo, saying this is good. This should be a regularly scheduled show, if not already done. Voodoo, way ahead of you, man, or woman. We're gonna get Edwin back. I think on Mondays.
Yes.
And just recap the week that was. This is a guy that understands the world of short sellers, knows what to look for in a report that is good, in a report that is a little bit sketch, and can help us out with that. But there was a lot of good stuff, Edwin. Was there anything that we didn't have time to get to?
No, Spencer. I think this was great. And yeah, I think activist short selling is a good and healthy part of the market that more people should pay attention to.
Yes, I'm with you. The shorts aren't evil. The only evil shorts are the ones that are acting in bad faith. We want to get those guys out. But for every buyer, there needs to be a seller. And without sellers, you have a GameStop market from January, which is insane. All right, Edwin Dorsey writes the Bear Cave newsletter. Link is in the description if it wasn't already changed, but literally you can call it, type in, I'll put it in chat actually. I'll put it in chat. It is thebearcave.substack.com. There it is in the chat. He's also on Twitter at StockJabber. Put it on chat again as well. Edwin Dorsey, sir, thank you so much for the time. And we'll talk to you again next week.
Absolutely. Thanks so much, Spencer.
All right. My branding is changing before my eyes. I don't know what to do. Let's bring on Javier Haas and Patrick Lane.
What's happening, man?
They fit in this branding. I do not. So
come on. We welcome you into the fold, my friend.
Into the cannabis brand. Awesome. Guys, what's on the radar for today?
So much on the radar for today.
We have free earnings. We have the CEO of Kushco Holdings talking about their recent earnings and their merger with Green Lane Holdings. All big companies. So stay on.
Yes.
All right. A lot to get to. I'm going to see myself out and let you get to that Kushco interview.
Sayonara, my friend.
Let's do it.
Awesome. Javi, good to see you as always, brother.
You too. How was your weekend?
Oh, it was good. I got some jobs done around the house. It's spring, which means I have work to do. Yes. How about you?
It's autumn here, so no cleaning. Just stayed at home. No, you got to stay safe. Cases are back up here considerably, so
same in Michigan. Same in Michigan. Yeah, we have to. Everybody, be safe. Be safe. It's not over yet. We like to think it is, but I think that's also going to factor into our first story about Aphria. But before we do that, Aaron, roll it, pal.
Boo.
Javi, I like to think that that's Aaron Thomas's voice riffing over that little desk hand. I like to think that that's Aaron.
Didn't you know it's me? I recorded the whole thing.
You? Well, you are a recording artist, so maybe you'll have to do the next one of these, man.
So let's get to the news.
Let's do it. You want to talk? Let's talk Aphria. Let's talk Q3 earnings, shall we?
Yes, sir. So Aphria, Nasdaq APHA reported earnings today, Q3. They generated about 153.6 million Canadian in revenue. That's about 122.5 million US. That's for net revenue. That's a year-over-year increase of 6.4% and a sequential decline of 4.3%. So stock was trading down. Net cannabis revenue amounted to 51.7 million Canadian, dropping by 7.8% year over year and almost 24% sequentially. So,
yeah.
Ouch.
So here's my take on this, and I'd love to get yours too. But I think it's I'm still somewhat bullish on Aphria. I really like Irwin Simon, and I think. I mean, at least what Irwin's saying in terms of explaining the results, he's saying that, listen, COVID had a larger impact than we thought it would. The lockdowns lasted far longer than we expected, having obviously a much more pronounced impact on the industry as a whole, right? Hint, hint, wink, wink. It's not just them, he's saying, right? But but certainly I think that that's part of it. Is there anything else, Javi, that you're looking at that maybe could explain some of this?
I'm looking at the chart. Why do we get, this is the after hours, right? 0.14.
Should be, yeah.
Yeah. Look at the chart for today.
Yeah.
Market really castigated, the results today. But as our good friend Pablo Swanich says, just wait for the merger. Don't get ahead of yourselves.
No, I think so too. And again, I'm a big believer in the company as a whole. I think that they're going to be a juggernaut when all is said and done. But definitely something interesting for us to watch. You wonder, Daryl, TCNNF is killing me. Okay, we'll get to that in a second. But it does make you wonder, right? What does that mean for the rest of our Canadian friends? We've seen Canopy on a spending spree. We've seen other investments into companies like Hexo and others. So you wonder if they'll be affected by this stuff too.
I mean, same thing, right? Our good friend Pablo Swanich at Cantor Fitzgerald issued a report last week, kind of previewing several LP earnings. And he did point toward this decline in sales, but did suggest there are other catalysts, especially in the international realm, right? A lot of his thesis is, and mine, to be honest, like it's been, I've been on record for years saying this, Canadian players are, and long-term international play, right? The market is limited. There's only so much you can grow.
Well, and listen, it's not just our Canadian friends either, right? Alan Brockstein, a good friend of ours over at New Cannabis Ventures, he wrote an article, I think it was today or yesterday, but it's basically something to the effect of get ready for some volatility, right?
Yeah.
And some of you guys in the chat may not like that. Some of you may thrive on that. I'm not sure. I like it personally. I think it's, it provides some interesting opportunities to get in. And I know when we had Mitch on Friday, he was talking about Trulieve, Daryl, or Darrell, maybe give me some pronunciation here, but he was talking about TCNNF, and he was saying that maybe he would wait for it to come down a little bit more before he got in big, right? Now, no financial advice here, but Trulieve's another one of those companies that, like most of our American friends, we're feeling the impacts of COVID too, right? There's less tourism. Alan was calling out the West Coast specifically, Oregon and California, their numbers being way down. And I think it's got to be an impact from some of this pandemic tourism.
I mean, right? Also at first, people were consuming a lot more cannabis, right? They were locked up, and they just were indulging in some of these pleasures. Many others were medicating with cannabis. I see a lot of that just going down between, a lot of, states reopening and people not having the same amount of money as they did before. A lot of them fired, a lot of them, saw salary cuts. The checks from the government people were expecting were not as big or in time. So a lot of that factor in as well, right? At the beginning of the pandemic, people were like, just screw it. I'm locked in. I don't know what's going to happen here. Is this the end of the world? I might, as well just be high. No longer the case.
I think we've seen a few movies, a couple of Seth Rogen, James Franco movies about something similar.
But same as for Afria, right? I'm going to quote Pablo again. He says, great 18 months, one lackluster quarter. So let's wait it out a little bit.
And listen, they still have 8 consecutive quarters of positive EBITDA, right? So they're doing well overall. And again, the merger is coming, which is going to change a lot of things. Probably change the industry as a whole. So I'm still bullish. What else, Javi? Anything else?
We have, just out, this is breaking news. New Mexico's governor just signed the marijuana legalization bill and automatic expungement measures. So that is super interesting. Michelle Lujan Grisham, she has been a vocal advocate for cannabis. So, two different bills. One legalizes and regulates marijuana possession, production, and sales for adults. And the second measure facilitates the automatic review and expungement of records for those convicted for low-level marijuana offenses.
That's awesome.
That is awesome.
Yeah.
Indeed. Props to Michelle Lujan Grisham. I don't know if she's Latina, but with that name, I'm I'm really just, go team.
I think so, right? Or at least she was being touted as such. I guess that's how I should say that.
Yeah.
No, go ahead.
Two more things. Uber CEO said this morning that they will look at cannabis when federal laws are implemented. This was a report by CNBC's Carl Quintanilla. So many Latinos. Cresco launched a new Wonder Wellness Gummies in Illinois. Weed Maps is doing an awesome 420 event with Snoop Dogg, ASAP Rocky, Wiz Khalifa, Mike Tyson, G-Eazy, Too Short, and a bunch of other people. All of this is on benzinga.com/cannabis. By the way, you can find the information on all of these items, like very detailed information on these items on benzinga.com/cannabis. And our good friend Alfredo Pascual was tapped as Vice President of Investment Analysis at Fast Forward Innovations. It's an investment firm listed on the London Stock Exchange's AIM submarket.
Love that.
Props to our friend Alfredo.
Alfredo, great stuff, man.
On Benzinga and in the months and years to come.
Javi, we've got a question in the chat about Sundial. Juan Gonzalez, is Sundial done? What do you guys think? So they're down, in, 7% today, which is 7 cents. It's not that bad. Sorry, getting a call there. 7 cents today. Are they done? I still think the volume's too high to say that they are. What do you think?
Oh, they're not done. They're definitely not done. I mean, they raised quite a bit of money. They made some acquisitions. They are pretty hot. Last week, they announced this deal with Stigma Grow, right, to produce its live resin cannabis concentrates. So, I mean, done. They're definitely not done.
Yeah.
Now, is it a good bet? Only time will tell. I mean, they've had the very rare opportunity to restructure, to rethink their business, to rethink their model, to reassess.
Really a gift.
Dude, like, how many companies have seen this? Like, when has, because no institutional investor would do that, just like go and say like, hey, here's some money, try and turn it around, right? They would buy a distressed company, a distressed asset, but, this situation where retail investors just came and salvaged the company I was struggling, that's awesome.
Yeah. Well, let's see where it goes. I mean, this one's been in the news for so long, over the past 6 months or so. Let's see what they do with it, right? Let's see. I know that they've made some moves. They've definitely restructured. So let's figure out if the ship is riding and if they're moving in the right direction. Again, the volume's crazy, right? So there's no sense in saying they're done at this point.
Indeed.
Anything else, Javi?
I want to bring Nick on. Is Nick on?
Yeah, let's go right to Mr. Kovacevic himself here.
Let's bring him on. I'm bringing up Kushko.
There he is.
Now.
Hey guys.
What's happening, man?
Oh, just another state legalizes. Can't keep up.
No, you're going to be a busy boy.
Exactly. Got a lot going on.
Nick, the CEO of Kushco Holdings, KSHB. Am I right? KSHB.
Yes, sir. You got it.
And Nick has, I mean, how many articles? There was so much news from you guys in the beginning of this year, man. You have been insanely busy, I bet.
We just, for once, got some tailwinds behind us. And after fighting headwinds for 18 months, that sure feels good. And we took advantage of it. So we raised $40 million. We executed a merger agreement with Green Lane, bringing together two of the largest ancillary companies under one roof. And we're super excited for that deal to close later this year after we get through necessary approvals.
That's exciting, man. That's exciting. Well, and I've been following, right? So you raised the 40 mil, you paid off, what was it, like 17 million in debt, right? And then this merger comes, right? Or maybe those last two were reversed in terms of order. But tell us more about how the merger came to be, right? And Green Lane, GNLN, I think, for those of you in the chat. But tell us how this merger came about. Tell us, what prompted it, why you thought, like, hey, this is, if we're going to do this, this is the company to do it with.
Yeah, absolutely. And I've known the Green Lane guys for a long time. So you could say this is several years in the making, various talks and ideas here and there. And ultimately, we had a little run a year ago where we were kind of seriously considering, and then, COVID hit and that kind of blew things up. So, we got back together, seriously starting talking about this toward the end of last calendar year. We just think it makes sense, and people have agreed with that. That's the general sentiment that we've heard too, is it just makes sense. Both of our companies, need a little bit more scale to kind of get to that meaningful profitability and EBITDA standpoint, right? And putting them together, we get that scale overnight, obviously. We also have really very different businesses. People do look at us as competitors, but there's small overlap of where we actually compete. The vast majority of our businesses are different. And so it thereby diversifies the pro forma company into a really wide range of not only customers, but also products and geographic markets. As you guys know, Green Lane has a significant presence in Europe. So we're talking about getting global with this deal as well. So, it de-risks the business, it diversifies the business, it puts us in a position where we can now be listed on NASDAQ under the Green Lane symbol, GNLN, as you mentioned. And that's been a goal of Kushco for quite some time now. So we're pleased to be set up to achieve that as well and give more investors access to this company. And I think a lot of institutional investors want access to US MSOs, but obviously can't get that via the major exchanges. But now they can play a proxy through Green Lane / Kushco. Why? Because those are our major clients. And so if they're going to continue to do well in the industry, which we all expect, they're going to continue to buy more things from Kushco, and thereby an institutional investor can buy a NASDAQ listed stock in Green Lane and get that exposure that they're really wanting to have at this stage by investing in a company that's fully federally legal and listed on the major exchange.
Oh, that's huge.
Honestly, it's interesting you mentioned the reaction of people. Like, this makes sense. It's what most people said around this, right? If I had to name, the five ancillary companies, both Kushco and Green Lane are in that list, and everyone's list there. So it's cool to see a merger that makes sense, and as you say, very little overlap. Now, one thing you say, and I agree, this is a proxy play, right? But what kind of incentive does a big MSO have to not do many of the things they buy from you themselves in the near future, right? Why? Let's take the example of packaging, right? Why would they not make their own packaging?
Yeah, look, I think, just generally the trends over the last, couple decades have favored companies looking to be more horizontal than vertical. We know that vertical integration is actually a trend in cannabis, and that's out of necessity, right? A lot of states require it. But for the most part, I think, people have realized it's not efficient to try to create everything in-house, especially if it's not within your core competency. And you think about the products that we sell. So you mentioned packaging. Packaging, if you look at the global cannabis spend, right, the retail consumer spend, the packaging equates to around 1% of that, right? So you have these companies that are competing for this massive $20 billion market, and it's going to $50 billion. And this is where their focus is. And now you're suggesting that they should take their focus off of that and go and get really vertical and deep into packaging, which represents less than 1% of that total addressable opportunity. It just doesn't make sense. Now, will companies do that? Yeah, at times companies have said, hey, look, we can look to maybe bring some of this in-house, go more direct. And that's where a lot of misconception is just around the cannabis industry, right? So if you compare this to alcohol or wine, look at the wines that you buy. 99% of them are in the exact same bottle. If you buy beer, a vast majority of it is in a can or a similar bottle. That is not the case for cannabis. So you take these companies that may look very large at the face, but really they only have that type of scale, if they do at all, on one or maybe two of their product lines. But there's 16, 17, 25 different things that they need to buy because they need syringes, they need concentrate containers, they need small jars, they need big jars, they need joint tubes, they need vape packaging. And so they aren't going to have the scale on all of those. So we see that some companies, if they choose to go more vertical or go direct, so to speak, doing that on a few items, but certainly not the aggregate. And then, of course, the way that you ultimately secure your position is through intellectual property, of which we announced the combined company will have over 200 articles of IP, and also through contracts. And that's been a big focus of KushCo. We announced a fifth large supply contract with a leading vape operator on the West Coast, on top of announcing just recently a contract with one of the top 5 largest publicly traded MSOs. So getting these companies into contracts makes it sticky. Having them use products with embedded intellectual property, well, of course, they can't take that anywhere else, right? It has to be manufactured through KushCo and KushCo's affiliated factories, right? So we're doing a lot of things to position ourselves, and people think, oh, well, what's the barrier to entry? It's actually very big. And every single day we're working to make it even that much harder, because we know that eventually, everybody wants to rush into the space. There's big packaging companies already in the space, but they're not finding success. And so we intend to now use our success to block them out so that even later down the road, when it's better set up for them to find success, we're in a position where we're not going to allow that.
Well, and that's, that itself is really interesting to me. And we've got a question in the chat, Nick, that I want to send your way. But this move to sort of individualized experiences that come with particular packaging for a specific brand or company, right? Apple has done it for a long period of time. You see it in Shinola and all these other different companies and how they package their products that is unique to them, right? Obviously, everybody doing that to scale on their own would be nigh on impossible, right? For all of the SKUs in their product lines, right? Especially those larger companies. But here's an interesting question, right? We're seeing more questions like this come across lately. At Benzinga, can KushCo do packaging for other industries, maybe pharma, or is there mainly a focus on the cannabis market looking forward? Now, obviously, we know you've been one of the OGs in the space, Nick, right? You've been around for a long time. So, and cannabis has been the focus for you, but are there designs to branch out? Are you guys looking at any of that? What can you tell us there?
Yeah, look, our focus is on cannabis, and it will continue to be on cannabis. We think it is very unique. We think there's a reason why companies like KushCo and, quite frankly, other private cannabis-focused companies are winning today, whereas the big players like Berlin Packaging and Berry Plastics that have announced that they're in cannabis are not seeing that traction yet, right? We think there's a reason, a competitive advantage. And so we want to take advantage of that opportunity when the timing is now, right? It's a huge macro tailwind environment. We have more states legalizing. And so we've got our work ahead of us just with this market alone. Now, in the process of doing what we do in the cannabis market, we're going to continue to innovate and build out intellectual property. Some of that may very well be applicable to other industries, and there may be a time where we do expand out. But for now, our sites are focused on the cannabis and CBD markets. And now, through the merger with Greenlane, we're not just talking packaging. We're not talking just the traditional vape products that KushCo sold, but everything that Greenlane has, these are CPG goods, right? We look at vapor.com, for example, where they have just a wide array of consumer products for purchase. And, they're talking about building more and more company-owned brands. So another knock, I guess, on KushCo has traditionally been it's a lower margin business. And in fact, we're behind the scenes building brands for others. Well, not anymore, right? With this merger with Greenlane, we have the opportunity to build our own brands on the ancillary side that will complement a lot of the customers that we service, but gives us access to a global consumer base, right? Because you can ship these products around the world, and it comes with higher margins. So we can actually now expand the margin ceiling that was in place before. It was around 25, maybe 30%. We can now take that much higher. So our valuation, where we've been traditionally valued on low multiples because of the lower margin, that has an opportunity now to tick up. And if you look at our company, our valuation is extremely low compared to other cannabis companies, right? We're trading at, we announced, last year, 250 million as a pro forma company on last calendar year. And the combined market caps aren't even at the $500 million mark, right? And so that's for a high growth industry and for two pioneering companies, especially one listed on NASDAQ. You just don't see those type of valuations out there. You guys do this every day, so you could certainly agree with me.
Yeah, when I reported on the merger, I saw the number, for the value of the combined company. I was like, for real? Am I missing? Like, I had to go and check on Google, Yahoo Finance, Bloomberg, just like cross-checking the valuations, seeing if they were like maybe missing the market cap in Canada or something. It's crazy. Now, you were talking about going a little bit, or maintaining the focus and not going into pharmaceuticals for now. And that makes sense to me. But at the same time, part of my thesis around ancillary companies and cannabis companies in general, revolves around their possibility to go beyond cannabis. That is something you can do in the future. In the meantime, have you considered, for instance, licensing some of your IP to pharma packaging producers? I mean, is licensing part of your business model, considering you're developing so much IP that may be obsolete by the time you decide to get into pharma?
Yeah, no, it's not part of the model today, but it very well could be in the near future. We're having conversations now, along the likes of this, people looking to expand, the presence, expand it not only to other geographies, but also to other industries. So yeah, that would certainly be a better way to do it, in my opinion, not tying up our own capital, because again, we've got so much growth in our own industry. We need to conserve our resources to focus on that, but licensing can give you best of both worlds. And we've set up recently at Kush some reoccurring revenue streams that don't require any CapEx investments, right? So for example, our arrangement on the CBD brokerage, we've created placements where we now get a percentage of wholesale sales on a go-forward basis for the work that we've done. That's just reoccurring 100% gross margin revenue that's coming in. We're doing the same thing now with terpenes. We partnered with Abstracts. We've shifted our model to basically create a fee. So we want to do a lot of things, and we've realized, right, it takes capital. And so we have to use our capital wisely on the areas that are within core focus, but structuring things in a more creative manner to be able to extract value without tying up resources. That's going to be a continued strategy of Kushco and the combined company.
Yeah, makes sense. There's a saying, I'll let you go in a second. There's a saying in Spanish that I don't know how to translate, but basically it's, you cannot hug someone with open arms, right? So if you're trying to encompass too much, you will be you won't be like grabbing the good opportunity strong enough. I don't know.
No, makes sense.
I felt you hugging me when you said that, Javi. So thank you. No, so I guess what I wanted to point out too, Nick, is that with the transaction here and with everything that's happening, it definitely seems as though you're moving into a new situation, right? You've always been somewhat nimble, right, in terms of wanting to maneuver through this crazy up and down roller coaster of an industry, right? And you've been in it from the beginning. So, with our last couple minutes here, what does this new venture mean for you specifically and for what you've built at Kushco, right? Do you still want to have that nimble approach? It sounds like you guys have already talked about ways that you're going to use economies of scale. You're using this transaction to reduce CapEx, which is great, so you have more to work with. But, what is the overall MO look like for you in this new joint venture?
Yeah, look, it's so exciting. I'm thinking about it all the time. Obviously, still a lot of work to do. We've got to get the deal closed. We've got to get integration right. There's a significant amount of cost-saving opportunity, right, with synergies. We've got to nail that. And we've got to make this a very profitable company. We can also do acquisitions. We have an M&A pipeline as well. Think about it. We're going to be in prime position to acquire other ancillary companies. There's really not any other companies in our position in terms of what we do, right? This size, this scale, listed on NASDAQ, et cetera. So there's so much to think about. And I think the bigger challenge is really going to be, where do we focus and what do we say no to? rather than what do we say yes to, because we know there's so much out there. But we're thinking of this as, truly an opportunity to deliver more value to our customers. There's a product portfolio that Greenlane's built under Pawn Gear that the Kushco customers are really interested in getting access to over time here. We also know that Greenlane's experience in CPG is perfect for leveraging vendor relationships like we have with Smoore/CCELL. Smoore is a $45 billion publicly traded company in Hong Kong with over 500 engineers, and they want to build products for the cannabis market. And Greenlane has that knowledge, right? What consumption devices are consumers looking to get into? And if we can leverage that relationship to bring new products to market, new innovation, right, that's really exciting as well. So we've got a lot of ideas. Obviously, we can't talk about it all right now as we're still going through the final stages before closing. Sure. But we're ready to go. We think that this just kind of immediately catapults us to that next level and puts us on scale with really anyone out there from a size and infrastructure standpoint and global reach. There's not a lot of companies that are global in this industry because, as you know, you have to set up significant infrastructure in every single market. But as an ancillary provider, we don't have to do that. So we can go global much quicker and take advantage of, like you said, we've always been nimble, been able to take advantage of opportunities as they come about. So, that's something that, again, we're going to stay laser focused on, is using that to our advantage, using our NASDAQ listing to our advantage, and really becoming a highly profitable company. We know that's what investors are focused on, and we can do that by maximizing our margins on the company-owned brands and getting that scale on our traditional lower margin business that allows for meaningful EBITDA throughput, which we don't have today at our current scale.
I'm sure we'll have you, and Bill and Aaron on a show as soon as you close the merger. We'll want to hear all about the upcoming projects. I have one very, quick, dumb question before we close the show. I know we're a little bit over time, but what are you, like 33 years old? I was doing some math here. Maybe I'm a little bit off, but you're in your early 30s?
Yeah, I'm 35.
How do you feel about becoming potentially, let's say, just not to jinx it, but about becoming a NASDAQ CEO at age 35?
Well, I think it's a great honor. I'm excited. It's been a goal of mine. So, I'm honored. And, it's not just me, right? It takes a team. And I wouldn't be able to do anything that I do without the great team that we have here at Kushco. And I'm super excited about the team at Greenlane and being able to leverage them. They've made some phenomenal hires, actually, even recently. And so I don't think people really understand the caliber of management team that the combined company will have. And I'm going to leverage their expertise. It takes an army, as you guys know. And, I would put our team up against anybody. And at the end of the day, we've got certainly the stripes to prove it. Kushco being, over 10 years old in the cannabis industry, and Greenlane, before the merge, the two operators, Adam and Aaron, go back 15 years of operating in the cannabis industry. So you put all that collective knowledge together with the team that we have, and it's, the potential is truly exciting, and I think uncapped in terms of what we can accomplish.
Definitely.
Well, congrats again, man. It's so exciting, and thanks for coming on to share it with us. We appreciate it. Nick Kovacevic from Kushco Holdings, soon to be a powerhouse juggernaut that you all should take a look at. Nick, thanks a lot, man.
Thanks for having me, guys.
Yeah. Thank you. Javi, how cool was that?
That's awesome, man. And we have a lot more guests coming on the show. We want to bring the CEOs of publicly traded companies. Benzinga Cannabis Hour, more topical discussions. The Cannabis Insider show, a half hour every week, every day we talk about stocks, and we want all these CEOs, and we will be bringing them for you. You asked for them, we got them for you. You asked for, for Kushco, we got them for you. You asked for Clever Leaves, we have Clever Leaves coming up on April 19th. We have Gage Cannabis coming up tomorrow with Fabian Monaco. a lot going on.
Yeah, and I want more of this, right? Javi, you've done a great job at organizing this, but Nick is an incredible guy. I love seeing good things happen to good people, especially those good people who have been in the industry since the beginning. It's fun to watch them take that next step, right? But yeah, thanks for being here, you guys. Thanks for tuning in. Come back tomorrow. Fabian Monaco and the Gage team are killing it right now. Gage Cannabis is a big story, especially here in Michigan. So excited to hear from them.
See you tomorrow. Like and subscribe, benzinga.com/cannabis. Follow Patrick on social media if you've managed to find him. I think it's Patrick Lane BZ. Follow me, Javier Case. Follow Benzinga Cannabis.
Much easier to find.
Just, do the whole thing. We love you.
Do the whole thing, you guys. Tomorrow. See you later.
How we doing, y'all? We're getting ready to get into some after hours trading with Ryan Rozbiani. We get our little intro rolling.
Hey Matt, how are you guys doing?
Long
How's
time.
everything going? My audio coming through?
Yeah, I can hear. Can you hear me?
Oh, I can hear you. Yeah, sorry, you were cutting in and out for a second. I wasn't sure if it was me or you. Well, all the good shows start with some technical difficulties.
Yeah, let's see. What do you got? You sharing your? Oh, here we go.
Yes, sir.
Some SPY. Let's start with some SPY.
Yeah, just quickly tweeting out the link as the show is starting. So, everyone, welcome to the After Hours show. We do it here with producer AB on the ones and twos, rocking and rolling. And the point of this show is we come to you twice a week, sometimes 3 times a week, depending on how things are going, to kind of go over how the market did intraday today and how it's performing into the after hours, and hopefully prepare you for what's going to happen tomorrow. Before we jump into SPY, I will discuss some of the CPI data that is planning to come out tomorrow to kind of prepare you all for how we kind of enter the next phase of the market, because CPI data is very important. It obviously affects the markets, and there's a lot that is going on. So, of course, as always, we will also be taking questions. So do me a solid. If you're watching, smash the like button, drop a ticker into the chat, and we will try our best to get to it. We will definitely discuss that big stock that dropped today. We will discuss a lot of fun stocks that were happening today and having some fun with. And, of course, some stocks that will hopefully make us some money. And one stock that we discussed last week that was very, very green today. That was relatively green today, very green compared to everything else that was going on. So hopefully, if you're watching, you've subscribed and you tune into the show, you could probably make some money. Again, as always, not a financial advisor. This is all meant for education and entertainment purposes only. Whatever you do is at your own discretion and at your own risk. And let's get started. So today's SPY, flat, relatively flat. We discussed it last night. Last night, Aaron and I launched a brand new show called The Psychology of Trading here on the Benzinga Network. It will be live every single Sunday, and you'll be able to watch it afterwards on the YouTube channel called The Psychology of Trading, where we go over one psychological aspect of trading. Yesterday, we went over red days. It was received handsomely. A lot of people reached out to me thanking us for the program. So if you have trouble with red days, definitely make sure to go and check out that 30-minute video that we did on that. And every single week, we will be addressing one aspect of trading that can affect traders psychologically and to help you fortify you as a trader, not just skill-wise. Here is where we do the technical skills. There's a ton of shows on the channel that do technical skills, but also from a psychological standpoint, because there's a lot of psychology that goes behind trading. So we discussed it last night, and we said, hey, tomorrow SPY might be flat, or it might try to make its big jump into another high, because as you can see here, we've got SPY on the weekly chart. It's been green for 3 weeks in a row after the crazy red that we had for the previous 3 weeks in February. So it wasn't it has been sort of pretty, but again, we had a flat day today as the week was opening up, and that's completely fine. If you look here, SPY has been following a pattern. It makes a leg up. It has a nice big jump in a day, and it hits an all-time high or a high. And then it has 3 consolidation days, makes one small high, makes one big high, then consolidates. Here it looks like it did its bigger high, and now it's going to consolidate hopefully for the next 2 to 3 days, or maybe it will just make a higher high. So we know that we're getting CPI data tomorrow morning, and it's not expected to be pretty. And it's going to cause some red in the market. But again, it's not anything bad that will affect us long term. It's something that will cause a little bit of fear. We saw some pre-sell-offs happen today as we entered into the CPI data for tomorrow, which is the Consumer Price Index data. And I imagine that it will affect us a little bit tomorrow, and then eventually by Wednesday, we will be back on track for everything going on and getting ready for that awesome Coinbase IPO that's coming, which we will discuss. Kane, I promise we will discuss the Coinbase IPO. So I imagine tomorrow will either be red or another flat day, followed by possibly another flat day. And then as we go into the close of the week, we will start seeing a little bit of highs or continuation of flat, or maybe we'll catch our first red day in the continuation of this. But just by looking at the RSI and just looking at the MACD, I imagine we will have straight flat days for the next coming days. But again, most of you folks are small cap traders. SPY is not the go-to for you. It's the Russell 2000. So let me see if I can pull that up. Oh, I figured it out. Sweet. I've always had to go to TradeView for this one, but I figured out how to do it on the Benzinga Pro tool, which is a tool that I'm using here. It's very, very good for being able to do charts. You'll get news, everything really quickly. That's how I kind of do some fast on the fly DD with you guys as we're doing the show. So as you can see here, the Russell 2000 has been fighting to make a reversal, and money will eventually flow back into the small caps market because SPY can only make so many all-time highs. Eventually, I foresee SPY coming back and retracing back to the 400 standpoint. That will be the time when we will see money flow from the bigger large cap stocks that are now being flooded into your Teslas, your Apples, your Facebooks will be flooding back into these small cap markets. So someone like me who sees this happening and has seen this pattern over and over again throughout time, what I do is I start preparing small positions in high conviction plays that I like, that are swing positions, especially ones that are coming with catalysts. One really big one we will discuss today is Gevo that I'm planning to add more onto tomorrow. And I already have a small position in, so we will go over that throughout the programming. But again, as you guys can see here, the Russell small cap has been struggling to kind of make its leg up. It's been stuck within this box right here, but it will eventually break out of it. It always does. Small caps don't stay down for too long, and they will eventually fight back because you can only make so much money in SPY making all-time highs, and then when it retraces down to fill that gap, I'll show you the gap one more time. For those of you who haven't seen the show before or discussed it, there is a gap here in the SPY chart between 400 and 403, which I imagine will need to go back and get filled. So keep an eye on it, get ready for it. It will be affecting the markets, and it will be affecting you as well. And really quickly, just for our tech traders, let's go over QQQ. Again, moving parallel to SPY as it has been since essentially March 25th. SPY and QQQ have been moving in parallel. So just a heads up there. So let's talk about Gevo. Gevo is a stock that I wanted to discuss with you all and my plan for it. So Gevo had a very red day today, dropped 10%. If you watched our Psychology of Trading show last night on how to deal with red markets, we discussed how what has fundamentally changed in Gevo is absolutely nothing. It just had a red day. We can take a look at any news from Gevo. No bad news from Gevo. We can see Thursday. Let's see, there's a buy and sell. I'm going to have to expand this. You guys won't be able to see it when I expand it, but I'll tell you exactly what it says. So it looks like there's a small disposal of shares, but again, these were restricted shares, not shares that they had bought. So it's not too much of a big deal, but again, I'm not worried about it. The reason I'm bullish on Gevo is because we have the infrastructure bill that's coming up. We know the breakdown of the Senate and the House is Democratic favored. This is a Democratic favored bill. So we expect this bill to pass. So what does that mean? We don't care about politics here on the show. We find every single use case that happens in the markets and in politics to find ways to hopefully make money. One big part of the infrastructure bill and Biden's green energy plan revolves around biofuel, because it's very, very hard to make an EV plane, but you can make biofuel to fuel these planes to make them greener and more energy efficient. So Gevo does exactly that. They've got huge contracts with Delta. They took a dip on their last earnings because, of course, Delta wasn't flying planes. So what we do is come here and we look for stocks that will be affected, and boom, we've got GVO here. So let's take a look at the chart. So we have support. So I'm just going to, again, one cool thing that Benzinga Pro has, again, I'm not trying to plug it just to plug it because I'm on the network. I'm always transparent and honest with you all on the show about how I feel about any tool and any project or anything. But the Benzinga Pro tool has TradeView built into it. TradeView itself is an expensive tool, and essentially you get it bundled within your account right here in your Benzinga Pro. So it kind of helps you. It's a two birds, one stone situation. So you've got support here at 6. You got a support here at 570, which is the low support, which I don't imagine we will touch that low. This was during, again, the red chaos. And again, we will come here one more time and drop another support line here at 688, which was the original place that I wanted to drop my support line. Again, it's very hard for me to get it exact because I'm not dealing with, I have a very finicky mouse, but I'm going to try my best. Again, it caught it at 685, which is completely fine. So you can kind of see where the support and resistance areas are. There was a gap here. If you remember, we've on the show, if you've been watching and you've been a viewer since the beginning, we discuss gaps a lot on charts. Gaps don't always get filled, but it looks like this gap from January, this gap up, has been filled and is now slowly been consolidating. Let's take a look at the MACD. The MACD is in a downtrend, and I imagine, again, this is due to that seller selling off some of their shares, the CTO, due to the CPI fear data that's coming out tomorrow. But I know one thing for sure is that this infrastructure bill is coming down the pike. So there's someone like me who has this foresight on this bill that's coming, and it's available information to all of us across the world. I just go ahead and I say, okay, cool. I'm just going to buy some shares here, and I'm going to average down on my position or average up on my position, depending on where your average is, and hold tight for a swing. Again, swing trading this market isn't very, hasn't been very kind to swing trading, but there have been a lot of plays that I've been personally swing trading. We've discussed on this channel that you can swing trade that have been very, very profitable. And I'm not saying go out and buy a GVO. I'm not a financial advisor. I'm just sharing transparently. This is one of the positions that I'm looking into for the Biden infrastructure bill. So let's get to one question from the chat. TRIX is the stock that everyone is discussing today. This is a stock that took a big dive. I don't know why it's not coming up. I'm not sure if that's how to spell it, or let me do a quick search. TRIX. Weird. Okay, might have fallen for a troll, but I know that there's a stock that took a TIRX, not TRIX. TRIX. There we go. So as you can see, you've got an ugly red candle right here, a big 74.69% drop, about 75% drop, but in the after hours, you have a nice recovery that's happening. So I'm going to go to the 5-minute chart here so we can get a kind of a idea of how this stock is moving and how it moved throughout the day. So again, today is April 12th. We have it here in the morning. Into market open, it was completely fine. Nothing crazy happened here, and then bam, at around 11 a.m., we saw a big drop occur, and I will look into the news section to tell us exactly what happened. So we saw it drop, steadily drop, and you'll see it with these plays where you see a massive drop like this. We've seen it with other plays as well. I believe, was another play like this. When the play drops like this, you will usually see it start to bounce into after hours up. Now, will it recover fully? God, no. It will take months, if not years. God knows if it will ever recover back to its $90 position where it was before, but you will be able to scalp it for like a nice 5, 10, 15, even 20% like it's been done here. So let's take a look at the news and see what's going on here. Shares trading resume, still halted down about 8. It looks like it was down 82, 83% at a certain point during the day. Let's see why. Again, it looks like it got halted multiple times here. Halted on circuit breaker. Longer than 10 minutes, okay? Again, halt downs and halt ups occur when you have massive selling or massive buying. There's automatic circuit breaker switches that get triggered to kind of stop this in order to not create a massive outflow or inflow into a stock to kind of manipulate the price both up and down. It's not straight manipulation, but again, it's to protect traders. There's a lot of discussion that goes around that to kind of say, hey, this is why we need to this is why this occurs. If it's good or bad, again, I'll leave that completely up to you. But I'm trying to retrace this to see where the big news is. It looks like I can't find exactly what happened. If anyone in the chat knows exactly what happened, let me know. I'm just running into a lot of, here we go. Are down 80% today. That's an absolute massive drop. This is taking trick stock down about 95 level to 15 per share. At the time of this writing, the reason, no one knows. That's weird. That's really weird. They're admittedly saying that no one knows why the stock dropped in that article. Okay, so we'll definitely have to see what happened. Was there a massive sell-off? Was there a certain big buyer who said, okay, I'm pulling out all of my money? But we'll definitely have to check it out, and we'll definitely see how that plays out. And it's interesting. Again, I don't know much about this company. Let's see what they do. They're an insurance brokerage company in China. China plays have been getting hit. We've seen Ebon. Ebon took a massive hit on that short report, which interesting enough, I'm looking to see the response into it. I personally, from reading that short report, I wasn't a huge fan of it. It was very grasping at straws compared to most short reports that Hindenburg puts out. So it was a little bit weird for me. It felt like they just hit SOS, which was a Chinese company, and then they were like, all right, let's hit their sister company, Ebon, because Ebon operates in the crypto space as well, the same way that SOS does. SOS mines Bitcoin. For those of you who may or may not know, if you're in retail trading, you've probably seen it all over the place. It's been a big source of pumps, and Reddit loves it, so it's been a big talking point. But Ebon they're very, very interesting to me, and I'll show you exactly why. Full disclosure, I do not have a position in Ebon or SOS or Tricks that we discussed earlier. Again, I try to disclose if I have or don't have a position. I do have a position in Givo again, but I do plan to add more. I'm just sharing. I want to be as transparent as possible throughout the show with you all. So Ebon, I want to show you the company website real quickly, sharing the full screen with you all so you guys can see everything. I'm going to take you to Ebon EX, which is their crypto exchange platform that they launched about a few weeks ago. It's catching up. It's got really good reviews on the Apple Store. Sorry, we're no longer providing crypto trading in your country. Okay, so it looks like, all right, that sucks. Because we're in the US, we can't see the website anymore for some reason, which is quite unfortunate. Let me try turning off ad blocker and see, maybe that might be what's stopping me from allowing me to enter, because I was literally on the website yesterday. So, okay, that's quite unfortunate. So let's see if we can get some screenshots through Google Images or something like that. I'm going to show you all something very, very interesting about the Ebon X platform. Their crypto exchange platform, as you can see here, looks like a company by the name of CoinShark. Did a quick screenshots of it. It looks very similar to Webull. That's what kind of confuses me here, is it looks very similar to Webull. We know Webull is expanding into, here it is. Here's the picture that I was looking for. Shout out to Bold. Oh, great. What's going on, man? These accounts just keep hitting red walls left and right today with these. Here it is. It's interesting. It looks very, very similar to Webull. I know Webull is expanding into crypto more and more. We've heard their CEO talk on this platform. We've heard the CEO talk on multiple other platforms about wanting to expand more into crypto. They could have just recruited these same folks that went out and kind of built Webull to build Ebon EX. So we'll definitely have to see how that operates. But I'm not sure why it's not coming up for me anymore, but that's completely fine. But that's what's exciting for me for this play, because we know the Coinbase IPO is coming out on the 14th. There's two big plays that I will see will be affected. One's Voyager. We've seen Luke on the platform talk about that a lot. I'll go over the chart with you as well. Second one is, I imagine, Ebon. If Ebon's very smart, and Ebon, we've been waiting on them to give us a response to this short report. If Ebon's smart, that's what they'll do. They will get in front of this short report either between today and tomorrow, and they'll say, hey, this short report is malarkey. Again, allegedly, we here as retail traders and investors have no clue to the factuality of this information. That's why we depend on short sellers to tell us what's going on, and we depend on the company to rebut these statements and kind of either fortify and confirm them or deny them with facts, hopefully, and that will induce a pulse of confidence into the stock and create a bounce into the stock. So we'll definitely have to see how that plays out. So I'm very curious to see how this stock operates. Again, it had a hard day today because Ebon also operates in the Bitcoin mining hardware chipset space. So when Can took a hit on their earnings, they had really bad earnings. They took a hit. Ebon also sympathetically took a hit because sympathy plays will also take a hit because they fear that, okay, when Ebon's earnings come out on April 23rd, they're going to take a hit too. So people get out. So we'll definitely have to see how this works and how it plays out. But again, proceed with caution with these plays. They're very risky, but again, you could have some upside into it as we go. Another one I want to show you is Voyager. Voyager Digital, again, we've heard Luke talk about it. He's got DD threads on his channel on Twitter discussing it. So look, there's a big gap here. The gap was filled. Today, Voyager had a, okay, this is my 5-minute chart. I don't need my daily chart for this one. Give me the daily. There we go. So Voyager on the daily chart looks nice. MACD and RSI. MACD's downward, which to me presents a buying opportunity because there's two things that can happen. One is Voyager gets completely ignored during the Coinbase IPO and people just say, screw it, we're just going to buy Coinbase and screw Voyager. But we know Voyager's been doing good numbers. I've watched several interviews with Voyager CEO and different people from Voyager. The DD is there. The only big trouble that I see Voyager having is their money input and output from their platform. There's a big wait time that you have to wait for your account to get confirmed. And then if you want to withdraw money when you sell, it takes a little bit. I've heard a lot of folks having some issues there. But again, those are all things that can be tuned out with time. They just had a massive inflow of users. So when that happens, it takes time for developers to adjust for that, even though they should have adjusted for that previously. But I'm going to give them the benefit of the doubt there. I'm looking forward to their Q1 earnings coming out, the Q1 2021 earnings. We know Q4 2020 earnings came out already and all that stuff, and I think they did very fine. I'm not too sure. I didn't keep up with it. At that point, I wasn't paying attention. Here, Voyager fiscal results for second quarter results provide a business update. Second quarter ending 2021 is pleased to provide shareholder business. So here, let's take a look. Revenue, preliminary revenue is right here. This is perfect. This is exactly what I wanted, and it just popped up on Benzinga. This is why I love this tool. I love this tool. Take a look at it. December, they had 1.7 million in revenue. January, 8.6. So we're just going to round up 2 to 8. That's a 4x, over 4x jump. Then to 20 million revenue in February. That's fantastic. Their net deposits have been going up, which is great. Their assets under management, that means the amount of coins that people have and are keeping in their accounts, have gone up to 1.7 billion. That's fantastic. Trades per day have exponentially grown. New funded accounts are exponentially growing. New verified users down a little bit, but that makes sense because look, there are only so many people that will create an account. As you can see here, January, they had their massive inflow of 250K. Then they had 190K. You also have to remember, they do have that issue with the verification, and that there are other platforms that are a lot easier to get confirmed on, like Coinbase, Gemini. But Voyager offers a lot more coins onto users to be able to buy and sell. So that's great. And their principal traded value is now 1.6 billion. So this is fantastic news. These are fantastic highlights. Again, this is just an expected update. Preliminary revenue is expected to exceed 20 million USD. Again, we have to wait for the actual earnings to come out, but this is fantastic guidance. I love when companies do this. Mara did this last week, I believe, or 2 weeks ago, where they gave us an update on everything that's going on within the company. This creates a buffer between your previous earnings and your next earnings to be able to kind of keep you up to going on with what's going on here. So I'm trying to check out the chat as well. Okay, no actual tickers coming in yet. So again, if you have tickers, you want to throw them into the chat, we can definitely discuss them and we can definitely talk about them. I see some people talking about SAMP and stuff in there. Those are more crypto, Bitcoin based stuff. But if you have any stocks that you want to discuss, you can throw them into the chat as well, and we can definitely go over them. But Voyager is going to be an interesting trade into it. So again, there's two options that can happen. Voyager can get love, and Voyager can go above 30 into this IPO, or Voyager can get completely ignored, and everyone just goes to Coinbase, and Voyager stagnates until their next earnings come out, and you'll see things start to jump up, and then it will start to grow. Personally, I would love to add a position close to the 21 moving average or below the 21 moving average, because you can see people off sell from Voyager and go into Coinbase. So we'll definitely have to see how that plays out. But I'm personally going to be betting on Voyager and starting to open a position. I really should have opened a position back when Luke first started talking about it. That's shame on me. I just didn't have the capital at that time to deploy, but I will be putting money on Voyager because I'm very bullish on crypto in the long term. All right, so here we go. The tickers are coming in. So folks, all I ask is if you're going to throw a ticker in there and we're going to discuss it, just do me a solid and smash the like button so we can get the likes up on this video. Let's start with GM, General Motors, one of my favorite budding companies within the EV sector. So GM, again, I had this discussion last week. I'll briefly touch on it again. the EV industry is going to blossom within the United States. It's going to bring a lot of factors to the U.S. as we've seen. There's going to be a lot of beautiful things happening within the U.S. and it's going to butt us into the roaring 20s for the U.S. within factories, within EVs, within clean energy in this decade. And GM is very, very brilliantly positioning themselves to be at the precipice of this as an American company, along with, of course, Tesla, Lucid Motors, Fisker Motors. All of these companies are going to benefit from this long term. Again, this would be a decade trade that I would take. I would take this in a long account. Again, it's headed towards a downward projection. I believe it will break the 21 moving average, come back down here towards the 50 moving average, which has been its master support for a very, very long time. Since essentially the beginning of the year, the 50 moving average was established as support. So I'd be looking to add to this position somewhere around the $54 area, $54, $55 area, which essentially would allow me to kind of slowly stagnate and kind of dollar cost average into my position here. I do imagine in the coming decade, again, this to me is a beautiful, beautiful play into the coming decade. As you can see here, the stock has been significantly affected by this beautiful EV boom that's coming. I think GM, if they're able to deliver, which I believe they can deliver, they're a fortified company as just as a regular gasoline car. They've been great. I think that they'll be able to deliver, and this will be a great trade into the decade. This will be one of those things you want in your IRA. Again, not a financial advisor, completely just being 100% transparent with you on this one. I don't get it. I could sit down and talk to people for like hours, but the second I put a microphone in front of my mouth, my throat just goes, all right, we're going to get dry right now. We're going to start clogging up and getting dry. But that's okay. So GM, I like it. I like it very much, but I'd like it more to catch it on a really, really red day closer to the $55 standpoint. You are headed in a downward projection with your MACD and your RSI. Again, it's been within this little box, the RSI, so I think that we will see closer to the $55 area for this stock, but I'm liking it. I think this will be a great long-term trade. Let's see. Andrew Reese is asking about ENG. ENG is also an energy play. Okay, ENG looks like it's struggling. It's been bottomed out and sort of not bottomed out as an oversold. It's been sort of flat. So again, the MACD, every time it tries to make a reversal, the reversal gets rejected. It was rejected again 2 days ago. Essentially, this is the support line that you're watching is the 359 area. The 361 area is your support level that you're kind of watching and hoping it doesn't break. If it does break it, it will come down and probably come closer to, again, if it breaks this support level, you'll come down to the 330 area and then on the sub 3 area, and then starts getting ugly towards the 200 moving average around 2.7. So let's see. I want to see if there's any news about this company. I know that, well, here we go. Everything's red. That's never a good sign. Okay, the CFO on the benefits of shift towards green energy. Again, this is a green energy company. These guys are a powerhouse in green tech. Again, it's a penny play. So when I say powerhouse, they're just one of the bigger known names for green tech and green energy. I want to see if I can pull up. These guys tend to have nice presentations. Again, one thing that I would say, again, this is kind of a backdoor into how I do DD is when you're looking at presentations and all this other stuff, please keep in mind to always look at their books as well, their financials. So go into these stocks financials, into the stocks filings and all that, and look at that because there's a lot of pretty stuff that you'll see during earnings calls and stuff like that. So let's see if I can pull up an actual presentation to show you. Okay, it's blocking me out. First quarter earnings call. Okay, it looks like they don't actually upload their PDF their presentation as a PDF here, but that's completely fine. Let me close this out and jump back to Benzinga. So, okay, so let's take a look at it and how I would take this trade. If you're in the trade, I would set a stop loss here at a little bit above. So I'd set a stop loss at 361. So I'd set a stop loss at 360, give it 1 cent penny room to bounce. I would set that stop loss there. And then again, if it breaks, I would reassess and I would watch it very closely. And I would look to re-enter within 90 days on this 200 moving average. But this isn't one of my high conviction energy plays, to be 100% transparent with you. So Andrew, sorry about that. Marcelina is asking, Novella, Biden isn't a stock. So he asked me to go over Biden. I can't go over a human being. He's not a stock. Marcelina is asking about FSR. Sorry, which is Fisker Motors. Again, we discussed this when we were discussing. Okay, wow, I haven't looked at this stock in a long time. All right, this is a bit of a surprise to me. So, okay, so they're in a strong downtrend. These guys are positioned to be mavericks in the affordable SUV green energy space in 2022. That's the problem. Right now we're in 2021. It's going to take a while for them to be able to present positive earnings, to be able to present vehicle rollout numbers to excite people. Right now, all they can show for this is, hey, we've got some car pre-orders that are coming in, and we're going to kind of dazzle you with that, show you the car, and all that. Again, I think Fisker is a fantastic company. I think they've got a lot of great potential. They've got a maverick team behind them, but this, to me, again, it's just like GM. It's a long-term trade. As you can see here right now, you are testing support levels that go all the way back to December 2020 of a low of 1432, and I want to see how the intraday trade was, low of 1450. So again, if you break this support level, I likely see you coming down to the $13 area. If you break that, you will come down to the $11 area. If you break that, you will be back between the $10 and $11 area. Again, not crapping on Fisker. I like this company a lot, but again, to me, this is one of those things that you would look for on a really red day, as close to between 12 and I want to say 14 as you can get it into there, and kind of put this in an account that you don't even look at every single day. I don't care what Fisker does until 2022, 2023. That's when I come back and look at the stock. Right now, the hype that you see on this chart, that was because people were saying, oh, Apple's going to be doing a car with Fisker. Not saying they're not going to do a car. We have no idea what Apple's going to do. We have no idea what Fisker is going to do with the car. We have no idea what's going to be happening. But what we do know is that there's a car coming. There's a Maverick team behind it. It's a beautiful, elegantly designed car, and it's affordable. Plus, coming back to someone who asked me to talk about Biden, we know that the infrastructure bill right now has a $7,500 EV credit built into it for if you buy an EV car, and that might be extended to $10,000. So imagine that as if it's a $10,000 deduction on your car. Plus, some states give you more. I know New York gives you an extra $2,000. So someone even asked Henrik Fisker. I'm going to try to pull up that tweet. Let me just really quickly. So I want to show you this tweet that Henrik Fisker actually put out himself. To Henrik. Fisker. Okay, come on, Henrik. There we go. There it is. This is the tweet. So Henrik Fisker, for those of you who may or may not know, is the CEO of Fisker Motors, which is the company behind Fisker. Someone actually asked him about this, and he replies to it. I had it right here. Let me go to his tweets and replies. He actually someone asked him that, hey, will this hopefully affect it? Will this stock price be lower? And I'm sorry, not the stock price, will the price of the car be lower? And he said, yeah, well, with all the EV credits that are coming, it's essentially a $28,000 car. Here we go, $25,000 and I'm in. And he said, with federal and state incentives, you should be close. Again, we know the Fisker motor car is going to be affordable in the $35,000 to $38,000 range. Starting, of course, you throw bells and whistles on there, the price only goes up. But to me, this is more of a long-term hold than a trade or an intraday trade, because this was all based off of hype, and you can't really read hype on a chart. It just happens. Okay, Sung is asking about Palantir and USIO. Let's go into Palantir. I like Palantir. I know Sung likes Palantir. Sung is a longtime watcher of the show. Sung, let's take a look here. So Palantir is another one of those Biden infrastructure plays that no one really talks about. Palantir tracks data. We know there's going to be a lot of data needed to track. Vaccine passports have been something people are talking about. I'm not saying I agree or disagree with them. I'm just saying it's a topic out there. And Palantir is a digital tracking company that might be a part of this effort. So MACD is positive. That's good. Palantir, we know we got beat up during the red March and red February, came down to a low of $20, but held that support level. Thankfully, so if you look at this support level right here, the last time we saw a support level that low was in November. So again, these guys had a direct IPO. So if you want an example of a direct IPO and how it operates, here's a perfect example. Palantir did a direct IPO. Coinbase is doing a direct IPO. They started with a little bit of red in the beginning. They opened up at $10, by the way. And now it's stagnated up, came down. Earnings affected it. And then they got hit with the red. I do believe strongly in this company long term. If I ever see them in the $22 to $21 to $20 area again, that's when I would load the boat. I'm very excited about this company. I like what they do. I like the angle that they have. And it makes me bullish on them long term. To me, this is a long term company. And if I were to take it on a trade, I would look for this company again around the $20 area, and I would scalp it from 20 to 23, 20 to 24, 20 to 22. Throw a wild amount of money at it. It tends to bounce off of that support level of around $20. It does tend to kind of bounce back up. But again, remember, support levels are made out of wood, and wood can break. So you can jump up and down on this wood, but you can break it. So again, be careful with how you take these trades, especially if you're scalping it for low intervals. Okay, let's see. These stocks are coming in. Oh, we got someone who dropped like 1,000 stocks. All right, let's see. Let me go back up a little bit. Sam, we just discussed GM a little bit earlier. Romeo Power, RMO. I will go to AMD after, Jay. I do, because that one to me, it's very, very interesting with what happened with an NVIDIA today. You know what? I just typed it in. Let's just go to AMD real quick. AMD, again, for those of you who may or may not know, is a chip company. One thing that we know is there's been a huge semiconductor shortage and chip shortage that's been happening. Some companies in the sector have been having an announcement. As you can see here, NVIDIA had a big announcement today. I want to show you what NVIDIA announced before we go into AMD, because it affected AMD as well, and it also affected Intel. So NVIDIA announced, hey, we are going to be, to the addition of the White House held a summit on semiconductor shortage. They announced that they're going to be making not just GPUs, they'll also be producing CPUs moving forward. As you can see, there's a bunch of call options. There's also calls and put sweeps on it. We've discussed those multiple times. Their ARM computing partnership. They've working on GPU and base CPU capitalization of the ARM's flexible architecture. So they're going to be making those. So you know how you have like those little Intel chips within your computer? AMD makes them, Intel makes them, and now NVIDIA has entered the market to make them. And of course, we know Apple is moving away from their Intel chips and moving to their M1 chips for their laptops. So now you have 4 powerhouse companies, but Apple doesn't really sell to anyone else. It'll only be between Intel, AMD, and NVIDIA. And the big thing is it'll be ultimately coming down to, I think Intel would eventually get wiped out. That's my personal opinion. It'll be between AMD and NVIDIA. NVIDIA will be the luxury brand. AMD will be the consumer affordable brand. And of course, Intel will struggle, but they have Microsoft with them. And I believe even Microsoft is slowly breaking away from them. And Microsoft has been rumored or said that we will be building our own chips moving forward. So let's take a look at the, you wanted AMD. So I'm not going to go over NVIDIA's chart. As you can see here, they had a big bounce. So let's take a look at AMD. AMD hurt. AMD, Intel, NVIDIA, Apple, Samsung, T-Mobile, all these companies that work around chipsets or chipset-based companies will be hurting as we enter the next quarter or round of earnings, because we will see how this chip shortage that everyone, even up to the White House, is now talking about, how it's been affected and how it's affecting them. So to me personally, I'm waiting for those round of earnings before I put a single buy order on any of these chip companies. QCOM is another one. So again, this is interesting. They had a big downturn today. Again, they were slowly rising up. As you can see here, they're slowly on the way up. RSI was up, MACD was up, and now MACD's flattened out. RSI is downward. They had a big drop today at 5%. Again, this is fear sell-off in my opinion. AMD should not be affected too much by this because NVIDIA is more of a luxury brand than a consumer brand. So I wouldn't be scared of this sell-off or this dump. There might be an opportunity for you to buy. But again, support level, your initial support level is here around the $74, $75 area. You have another small support level that held around, again, the $73.86 area. So again, 74 is your key number to look here to try to get in. And if you look all the way back into historically with this stock, it looks like 73.5, 74 is the support area that has always held all the way even back to July. So that's a good number to kind of keep in your head if you want to get into this stock for the long term, is 74. So write that down in the back of your hand, put it in your notes. It's always good, by the way, to have a notebook on these things, kind of, so you don't have to always go back and forth. So I would say wait for this to come either lower to be able to add. So maybe even you added it today at a low of 78, maybe you can dollar cost average lower. But I do think that this will come down, touch the 74 area, and then bounce back up. It'll kiss support and then go back up like it's been, or it can break support and come down lower. But again, to me personally, I would bet on NVIDIA over AMD, but that's just me personally. But again, NVIDIA's price is a lot higher than AMD, but I think they will both prosper. But Q1 2021 earnings will be ugly for both of these companies. Just putting that out there right now. Get ready for that. It'll also affect a lot of these other companies that we really, really like. There we go. Noah's saying NVIDIA $630 is incoming. I think so. Let's take a look at NVIDIA's chart as well. NVDA. Yeah, see this one. These guys dipped. They've recovered completely. If you look at QQQ's indexes chart, it looks very, very similar to this. Again, you don't have that big green candle. It's slowly getting there to its recovering point, but NVIDIA recovered. So if you bought down here, and there's obviously people that bought, that's why the stock bounced. If you bought here at a low of 462 and today you're at 607, this whole thing that we discuss of buy the fear, that's my personal mantra, and you can see it on my Twitter header. I'll show you right now. So you believe me, a lot of people laugh at me for it, like you're an idiot. But here, like my mantra is buy the fear, sell the FOMO, because I know that, for example, a company like this, and we discussed very, very in depth during the chart that we had during the Psychology of Trading show that we had last night. These company, NVIDIA, had not fundamentally changed during the sell-off. The stock just got really, really cheap, and people bought in. And whoever bought down here around the $460 area, or even 400, even if you bought here, you're doing fantastic now. So again, keep that in mind during red days. Go watch that program. It was very, very insightful into things like this. So it's recovered, and let's take a look at NVIDIA in the longer term. So NVIDIA in the longer term is exciting. Now, going to the 630 point, it will require a lot more volume to get there, but I think over time it should get there. But again, it all depends on when their next earnings are. So let me see. NVIDIA earnings. I know NASDAQ gives estimated dates, so I'm just going to jump to. They have a whole website for these guys. Oh, no, they have a website, but NVIDIA earnings Q1 2021. There's usually like an estimated date range that comes out. Okay, so now there it is. Here we go. This is NASDAQ's website. If you want SEC filing data, it's usually here. Here we go. So Q1 looks like they reported already their quarterly stuff. So I'm looking into Q2 then for this company. Again, it's expected in May 20th. So around May 20th, keep that in mind in the back of your head. Write this down, put it on a watch list. If you want to buy into this stock long term, that might be the time where you might come and see this stock back down around this area, or even I don't expect it to come down like this. You'll see on earnings there's massive stupid sell-offs right before, so those are great dip buy opportunities as well. So I think that you can kind of see what goes on there. Noah saying the ARM deal may not go through. So yeah, if the ARM deal doesn't go through, you're going to see a massive dip on saying, hey, that this deal didn't happen and didn't go through. Marcelina, my Twitter handle is Ryan Rozbiani. It's literally my name. I'll throw it into the YouTube chat for you. Boom. There it is. You guys could follow me there. And if I miss any questions you guys see here, you can always tweet them to me and I'll try to get back to you. Sometimes there's just so many tickers that come in. Today we're having a calmer day. Pedro is asking about DCRB. DCRB. Why am I not typing? DCRB. There it is. Decentralized Carbon Plus Acquisitions. This is a SPAC merging with Hyzon Motors. Another EV company. So many EV companies, man. There's so many EV companies. But let's see. I know Hyzon has that really, really cool logo. So that's always awesome. Hyzon becomes a core passive stake. So who do they take a stake in? Who took a stake in them? Compass Capital Advisors LLC took a stake of 5.72%. That's, again, I'm not trying to plug this this tool, but if you look here, it literally highlights for you what's important, so you don't have to go looking. So again, took a 5.2% stake. That's big. That's big for a SPAC merging with Hyzon, which is essentially not a proven product as far as I know. They're not very proven yet. They can get there, but we'll see what happens. Riverstone is filing for their 5th SPAC patent. There's so many SPACs coming out these days. Let's take a look at the chart. So again, you're near NAV, you're near $10. So you're reducing your risk by adding here compared to adding here. For example, as you can see, Hyzon had hype and ran up to like $20. So that's a lot. Personally, I don't ever chase these hypes within SPACs. You see them happen all the time on merger news, on anything that's happening. You'll see a big bump, not on merger news, but on definite agreement news. You see a big bump. You'll always see a cool off with SPACs, especially now that the market is so overhyped. And I'll be honest with you, I kind of like it. I kind of like that I don't have to go out there and kind of fight to get into a SPAC and don't have to have like a million screeners on. A SPAC can come out, the news hypes up about it. It goes up to like 11, 12, and then it kind of calms back down. But yeah, so let's take a look here. So you see it's flattened out here. Again, your MACD is playing games here. It was in a massive downward trend. I wanted to reverse here. It was rejected. Came up here to reversing again, but it kind of wants to reject it here. Let me see what the RSI is doing. RSI is flat but downward. It looks like it wants to reject it again. You might come back down and see this sub 1050 area. Again, you're in the sub 1050 area, but you might see like this $10 area one more time. So if you're not in it, it might be a good time to add if you like this long term. But please remember, I want to show again. I'm going to make an example of this one. This is again, we're doing some live DD here today, because I want to show you how to analyze SPACs as well. SPACs, there's so many of them. There's so many beautiful companies that are merging with SPACs. There's so much that goes into it, but you also have to remember that there's a lot that goes. Again, Hyzon, I love their logo and I love the font, but you also have to remember that there's a lot that goes into these companies to also be able to correctly analyze which SPAC to get into and how to get into it, when to get into it. Let me see. Let's see if I'm trying to look for that investor presentation. I hate when they make it so difficult to find. Corporate. All right, so let me just go to Hyzon. Hyzon investor presentation. Sometimes Google tends to index it for you and just throws it up there because I do so many of these investor presentation readers. When you're doing an investor presentation thing, I want you to automatically go to the bottom and just go directly to the financials. Don't even look at all the pretty stuff. Go to the financials first, see if the financials make sense, and then go and look at all the pretty stuff that can sway you. Because all these companies make projections. We've seen it with all these SPACs making these massive, beautiful projections if they're going to make billions of dollars and often may not be able to deliver. So keep an eye on that as we go through it. Again, I'm just trying to see if I can find. I know I passed a balance sheet, but I'm trying to find a specific one that most SPACs tend to use. Okay, let me just go back down. Page down. I'm not sure why my keyboard is being funky, but that's okay. Again, there's so much going on in this investor presentation. Okay, so look at the actual deal. That's one big thing to look at too. You've got 500 million, almost 600 million going to the balance sheet. That's fantastic. Any debt? There's no debt. I like that. So this is a big check mark to me. I love when a lot of cash goes to the balance sheet. I love when they're not paying off debt. This is why I don't like Bill Foley SPACs. I just saw one of his SPACs had 1.6 billion going to pay off debt. That's outrageous. Like, you're only SPACing to pay off your debt. There's no reason to be spending that much money on a SPAC to pay off debt. We're not here as investors to help you pay off your debt. We're here as investors to help you grow the company, and you should be paying off your debt. That's my personal opinion. Sorry, that was just a little tiny rant. I got a little heated there. But all right, let's take a look here. Their income statement, total USD in millions. Again, their estimate, they're going to be EBITDA negative until 2023. I always add one more year to this because there's going to be growing pains for these companies. So by 2024, they'll be EBITDA positive, hopefully. Again, that's a massive jump. These two are massive jumps. A lot of things will have to go into play for that massive jump to happen. Total revenue, again, this is a massive jump, which is a little bit hard to believe to get a massive jump this big. I'm not saying they can't do it. They could definitely always pull it off. They could even exceed these numbers. But again, a massive jump. With a SPAC like this, one that's not revenue positive yet, I would definitely keep an eye on it to jump into this SPAC post-merger. When you go into SPACs post-merger, the fear of going sub 10 is kind of away. Like, you can look at Clove. Clove is a SPAC that is now post-merger. You can see you can go sub 10 now. The trust is gone. The trust, the PIPE investors' trust is gone. You can go sub 10. You can get it for cheaper if you like it long term. But there's also SPACs that, again, those that perform fantastically during the SPAC time, like Open, will stay above that area. But I think Hyzon will be probably a SPAC that you're better off getting into post-merger because they're newer. That's the same thing, the same analogy that I would apply to many, many other SPACs. Real quick, I want to look at Arrival. We talked about it last week as well. They're struggling. I sold my position in Arrival somewhere around this sell-off here. I don't remember exactly when it was, but I sold it. But I do want to get back in. But again, to me, I'm just as a technical analysis person, we're in a negative downtrend. The RSI is going downward. I know Arrival is a fantastic company, but I know that by 2022, that's when their things will start going to higher highs. I'm going to show you Arrival's investor presentation real quick. We can show you why you're able to map this. You're able to map this, not Apple. You're able to map this movement downward within the stock as it's a SPAC, because you'll see, okay, that these guys are not, unfortunately. A new presentation will be published shortly. Okay, what are you doing to me, Arrival? Give me the SEC filing. Please, please, please. Yes, perfect. I also did a DD video on these guys. If you want to check it out on my YouTube, just search Ryan Arrival and it will show up, Ryan ARVL, and it will show up for you. I did a full presentation. I went through this one. I'm still bullish on these guys long term. They've got a fantastic product. They've got fantastic factors. Again, discussing more of that EV spring that's coming to the US. Here's 2 factories that are being built in Bicester, I think that's Ohio. And I know that in South Carolina, they're building another factory or have already built another factory. But let's go into their financials, because I want to show you here proof when I'm trying to show you that, again, a post-SPAC merger, it might always be better to jump into it. But let me see. I think I might have passed it. This is why coloring and font are very, very important for any investor presentation. If you're in the area of this, again, I don't even think they gave us financials on this one. But again, one more thing, again, what gave me the first green light? No debt, cash. You're getting almost 670 million going onto their balance sheet, which is fantastic. They always compare themselves. I always ignore this because I'll be honest with you, it's never accurate. They're comparing it to their 2020, what is this, 2023 and 2024 numbers. Where are your financials, man? 2023. Give me 2023. We're going to find it. We're going to find it. I promise we're going to find it. If you're watching, smash the like button. If you haven't already, you're completely watching me make a fool of myself with the mouse as I'm scrolling through an investor presentation. Ratings are high atop today for this one. But again, this is just, I'm mainly doing this to kind of protect. There's a lot of SPAC investors in retail. I'm mainly doing this to be able to show you how this kind of operates. I don't know why it's not here. I don't know why I can't find it. Again, I'm just going to base it off of here. See, the revenue, it looks like it starts in 2023, 2024. They're going into the billions, 5 billion, then 14 billion. I know they have 1 billion in estimated pre-orders, but again, this is really weird that there's no balance sheet within it. But again, we'll definitely, let me see if I can find it on their website. I hope you guys don't hate me too much for this. I'm mainly just trying to kind of help out and kind of teach you guys how to do. So when they go to their SEC filings, there has to be some financial statement within the SEC filings that we have here. So so these guys are an international company. So 6K is an 8K, which is a financial document or a communication document they can kind of use. Again, this one is more communication than financial. Come on, Arrival, you're killing me here. Corporate governance. That's not going to be their stock quote. Historical. Use events and presentations. They got a new one coming. So again, we will have another program on Wednesday. I'll find it and I'll discuss it with you guys then. But yeah, so it's quite unfortunate. All right, I'm going to make one Hail Mary on this one. CCIIC Financial. One more Hail Mary on this one. Don't look at the name of that website. Nothing. I can't find crap. Here we go. There's their 10K. Nothing. Absolutely nothing. There it is. There we are. So they have something. They have operating expenses. They have assets, which is fine. They have operating expenses, assets. They have liabilities, which are up. Okay, not too bad, but nothing too wild. Again, it's a company that's pre-revenue. They're lost because, of course, they're starting and they've been starting production. So they're at 100,000 million, 5 million loss. I really hope that's not 5 billion and these numbers aren't in millions. Cash flow is negative. Net cash flow is negative. Again, these numbers are not beautiful for this company, so it's going to be hurting. But this is another one that I have faith in that will jump back and bounce back with everything going on. Thank you all for putting up with that DD that we did. We just did some live DD. And let's see. Let me get in one more ticker for you guys. Thank you for putting up with that, and thank you. I hope that helped SPAC investors, especially. These things, there's a lot that goes into a SPAC. Their presentations are always beautiful and shiny. They've got really beautiful websites, but you just have to go diving deep into this one. So, all right, let's go. Let's end it on DKNG coming in from Billy Banquet Beer. Fantastic name, Billy. Well, I've always liked the name Billy. DKNG. Billy. Billy's coming in with DKNG. Gambling industry is an industry that I really, really like. I'm going to map this chart for you. Here we go. Okay, so you've got essentially a support line that's been running here, essentially something a little bit above. Whoa. Okay, so no, it doesn't trace that low. Your 200 moving average is finally forming, which is cool. Let me see if I can lock this because I know I'm going to mess it up. I locked it in. Again, if you lock the line, it won't move if you touch it. Do I see a bull flag? Okay, there is a bull flag here. There's a flag here, a bull flag forming here. I don't have the MACD or anything showing up, so don't judge me if it's not exactly a bull flag. Your MACD's downward, your RSI's downward. So this will probably break this support line for the first time in a long time. So I'm going to delete this. That's a shame. That's really, really weird. Why do they have such a red day? Down almost 7%. See, again, a stock like this, and I would go and look at Penn. So again, you can see the peers on the side, and you can take a look at Penn. See how Penn's doing. Penn, again, also down today. I'll go back to the DKNG chart in a second. I just want to see how Penn did today. I mean, they've been suffering a little bit more with the Dave Portnoy thing that happened, but 2% versus 6%. That's weird. DKNG. DraftKings. I like DraftKings a lot. I'll be completely frank with you. And I do have a small position in DraftKings and a few other gambling stocks because I think gambling will be needed to offset all this debt that the country has. But we will eventually get to a point where we will be able to offset that with this. But this is interesting. I'd watch it very closely like a hawk tomorrow to see how it plays out. Again, you're red in the after hours as well, so that's not a good sign. We might break this support line, might start coming closer to this 200 moving average before it bounces. But again, this is something we definitely have to monitor as we kind of go through this. Producer AB, how are we doing on time? Okay, I guess we have time for one more. All right. So, there he is. There's producer AB. AB, how we doing on time, buddy?
Hello.
Hey, man, how we doing on time?
Good, we're good. You want to go through a couple more picks?
Sure, I'll go for like another 5-7 minutes if that's okay.
Yeah, go ahead.
There's nothing coming up after this, right?
We're replaying our SPAC attack from earlier today. So yeah, go ahead.
Okay, cool. Como Inverte is asking about space stocks. So we now finally have ARCX live. Let's take a look at ARCX. Just trying to click on the 1 year chart. So let's take a look. Take some time to load so I can drink some water. Okay, interesting. Space has been good. ARC finally started buying some actual space stocks, not John Deere or Netflix. So that's actually been very, very good. A stock that they're buying a lot of is SPRG. I'll pull it up in a second. Again, there's no really big news that's happening here, but SPRF, I believe, SPFR, which is Jaws Spitfire Acquisition Corporation SPAC. Another SPAC again. The ARC Fund loves SPACs because SPACs have the potential to bring you a lot of money if done well. And this is one of those SPACs that is fighting to get to $11, but unfortunately, has not been able to get there. It hit a high of 1107, but hasn't been able to hit and hold it. And it's building a 50 moving average, which it wants to fight and stay above, which we'll definitely have to see. I imagine ARC will buy more today. intraday. So we'll probably get that email in an hour or so saying, hey, ARK bought these things. And of course, if you're within Benzinga Pro, you'll get the alert actually here. You'll get the alert of, hey, what's going on within this stock. So space stocks are poised for a 5-year time span. I wouldn't buy space stocks to just pop, especially with the market we're in now. I would base space stocks mainly around, hey, I'm buying this. I know in 5 to 7 years, space is going to be getting big. I'm going to be keeping it in a long account. And a lot of the stocks we talked about today are long account based. So I would definitely say space for the long account is much better than a swing trade, because as you can see, you can swing it. You can definitely swing it. If you can catch it on a really red day around 10, ARK buys it for a few days in a row and retail investors flock to it, you can jump to 11, so you can do a nice 10% bump. But to me, this one is a stock that I have in my long-term portfolio. He's also asking about SPCE, which is the Virgin Galactic SPAC, SPCE, which was IPOA, which is Chamath's original SPAC. And that one's been struggling. It's sitting on the 200 moving average. MACD looks like it wants to fall down again, which I think it probably will tomorrow with everything going on. Had an ugly day. I know Chamath sold out of this position. Unfortunately, I really wish he hadn't done that. But we'll definitely have to see how it plays out. I imagine this will break the 200 moving average and we'll come down here and test around the not 17. Hold on, what's the next support layer? So the next support area would be down here around 23. It'll test 23, and then we will probably come down and test the $20 area. So this around $3 increments of the support level being built. So keep an eye on this one. This can get interesting, but again, it's an interesting stock. I don't like SPCE at all, because it's more of like tourist space travel, and getting people to do that. A, it's expensive. B, it's risky. C, it's going to take a long time to be able to get normal people into the air. So I personally prefer to go with like SPFR or SFTW or any of these other space style companies. Quell, for example, Daryl's putting into the chat. Quell, SFTW, these are great examples of stocks that you can kind of use to kind of build a space portfolio for yourself. Billy, thank you so much. You're the man. Thank producer AB for running the ones and twos and making the show look pretty. So Daryl says, what's in Mexico retirement? Daryl, I'm not sure exactly what that means. Clyde, Hyliion again. That would be another one of those parallel to Fisker, parallel to CCIC, which is a rival. Long-term plays in hydrogen. It's going to take a while before those get mass adoption. They are on the roads. I have seen people post pictures of Hyliion trucks on the road, but they are struggling. Their CEO is an engineer, which works if you're Tesla, but it doesn't really work if you're Hyliion. He's very, 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 very smart. He's brilliant. He's literally a 20-year-old billionaire, I believe. He's billionaire or millionaire, but he's like a 20-year-old CEO. He's very, very smart. I heard he loves Taco Bell. I don't know why that's a meme, but that's out there. But they really, really should have employed an actual CEO with a lot of business practice and acumen and the confidence to clearly portray the vision of the company, because I still have no clue what their plans are. They're very behind closed doors, whereas a company like this shouldn't be. Parallel to this, in the complete inverse direction, you have Fisker, who's always talking, which is helping the stock price. And let me just show you Hyliion's stock price before we close out. Again, Hyliion was a maverick in SPAC, so you can look here. It was like a $50 before it was Hyliion. It was in the $60 area before it merged, but that data doesn't show up. But you can see here, even they've had pops and they've been struggling, and they're going to continue to struggle for a while. So we'll definitely have to see. Oh, I just got an email coming in. If you don't mind, I'm just going to pull up Guac. It's another SPAC we've talked a lot about. There's a 13G that was just filed, which means an insider buy. Not an insider buy, but an acquisition buy just came in, amended. So let's see what happens. So Glacier Capital now owns No. So Glacier sold their whole position in this SPAC, which is interesting. Guac is an interesting SPAC, but it looks like Glacier Capital sold all of their holdings in this, which is quite unfortunate. But again, Glacier tends to buy and flip SPACs rather than buy and hold SPACs, so that doesn't personally bother me as a shareholder. But again, that's one thing to keep in mind is, hey, these companies come in and out, and again, powerful tool. I heard the ping in my ear, and this is one of those stocks that I've been keeping an eye on, and I saw the email notification come in, so you can kind of follow that. So producer AB, should we wrap this up?
Yeah, I think it's about time to wrap it up. Let me see. I see we got Mitch hanging out back here. Let's see. What's up, Mitch? What up, Mitchie?
Oh, no, the big boss is here. What's going on, brother?
Hey, just getting it ready. Gonna go ahead up and put a replay here for you guys of my interview just earlier today. We had an interview here, guys. You guys are going to see here. This is Jeff Arnold. This is from FCAC, Falcon Capital Acquisition Corp. This is going to be the CEO of a SPAC called ShareCare, merging with ShareCare, but it's a digital health SPAC, guys. And you know, Ryan, digital health is definitely a play that ran up in the pandemic, and I think just got roaring. You know,
it's just starting too. I think
with I talked about it a little bit about 5G and what the potentials of digital health are going to definitely get into, and just the endless possibilities. I mean, there's going to be so many people that are going to want to like control their physical, mental. There's so many places that we need to control it. You know, we need to monitor ourselves so that we know, hey, I got to go run 2 miles because if not, I'm going to gain 10 pounds. I mean, that's you
so
need
you're
that
telling
reminder.
me if I run 2 miles, I can shave off 10 pounds just one day, right?
Two miles a week, it wouldn't do you bad. You know, it's good to definitely go. You know,
I'm just messing with you. I'm a big cardio guy, so I know exactly where you're coming from. That.
And there's nothing like a clear mind, right? I mean, we all have tough days, especially as traders. I mean, I could definitely say it. I know that we've all been through that, where we've had that tough day, and we need to get right back to it. The best way to do it is have different apps, like different things that can keep you mentally sharp. Digital health, guys. So let's go ahead up and let's pull up this lovely interview here. Rohan got it. I'm going to go ahead up and hit the save button here. Switch over the titles here. Ryan, you got to let me know when I can come on your show, man. I've been wanting to come on. You got to let me know.
Come with me on Wednesday. Come on Wednesday.
Right.
Let's rock on Wednesday.
I'm a plan it.
Right,
I'm going to hit you up.
Y'all. All right, y'all.
All right. Have a good one, folks.
Guys.
Bye-bye.
See you guys. All right, AB, let's go ahead up and roll this. Let's get this rolling.
Coupon Boy in the chat right now talking about MUDs and tops. So, guys, you know, I would say, you know, some of the top SPAC stocks to buy that are on my watch list for today and this week. We have MUDs, MUDS, bringing tops public. The NFT announcement today for Major League Baseball on April 20th, I think, you know, is just going to be the early innings for them. They have card deals with Major League Baseball, you know, and they can also expand to other sports. They have a partnership with Disney. You've seen Star Wars trading cards. Maybe they can get a partnership with Disney on NFTs too. So definitely keep an eye out on MUDs for tops. And then, as I said last week, the Coinbase IPO will be the big story this week. So keep an eye on VIH, which is bringing Backed public, which is a crypto play as well. I think shares are going to move higher in sympathy. And then DMYD, Genius Sports, they have their vote set for this week. Remember that huge news, that exclusive partnership with the NFL. It looks like it's going to be for 6 years. The NFL will own around 5% of Genius Sports after the merger goes through. So the NFL is betting big here on Genius Sports. And not only are they going to control that data for sports betting companies, but Genius Sports is also going to be able to license and partner with sports media networks, which is a huge, you know, item to keep on watch as well. So those are 3 top SPAC stocks that I'm watching today and this week, Mitch.
Yeah, definitely. There's some plays out there I'm keeping on radar. MUDs is having a good day, man. It's up 8%. So, you know, those are the trades that I definitely want to keep an eye on, and we'll see how they go ahead and keep moving. Definitely, guys, we got some great interviews left for the week, like we always do. And if you guys have a SPAC that we haven't gone after and you want us to go after, let us know in the comments below. That's how we go ahead and get ShareCare, like you see over my back. And we're going to keep going after these SPACs. So if there's one that you guys want, let us know in the comments below. And like always, guys, hit that share button. Let everyone know where the SPACs are back. And I feel the bottom is in. So definitely it's time to pay attention again. It's time to let everybody know. If they haven't heard about SPACs, now's the time definitely to get them on here. So we'll definitely pay attention. I want to give some shout outs to everyone that's in our chat. We got a whole lot of people that stick with us every single day. So I wanted to give a shout out to Carl out there, Franco, John Doe, Rick House, Adam, Sam Broski, Hack Mom with some good information. Man, in India, we got also Tony in the house. We got also Born to Be Free, Daryl. I appreciate you guys sticking with us every single day.
I see Brian Blockchain with a comment just now. I know I see that name in the chat all the time as well.
That's what I like to see.
There's the Blind Trader, guys. If you missed it, the Blind Trader was interviewed for one of our other shows, First Trade. I know I watched that, Mitch, and that was a great episode. So I love that one. So shout out to you, the Blind Trader. Daryl asking about SFTW. Go back and watch our show from, was that Thursday? I think it was Thursday, where Mitch shared SFTW being, one of his top space stock picks. So definitely go back and watch that. You got some detailed insight there.
Yeah, guys, check it out, guys. We're going to be coming at you guys hard. We're going to be bringing some great interviews. So definitely let us know where you guys can see the SPACs attack. And also, hey, if you guys want to come on, reach out to us. If you feel you got a SPAC portfolio, you want to go ahead and bring on SPACs attack.
Yeah, let's do it,
Let
guys.
us know. We'll go through it. We'll run it through it with all the team, because at the end of the day, guys, we're in this together. And if we're in this together, we might as well help each other out when we find information or make a trade that we feel, hey, I got some edge here. Let's talk about the information. Let's get the information out there to everybody else so that they can make their own decisions, guys. All right, guys, that's going to be it for us. The Power Hour should be on right now. Let me see if it's on. I'm just going to check right here. I'm going to refresh here. Looks like it hasn't started, so I'm going to wait a second here until it gets kicked off. But like always, guys, definitely stay with us. If you didn't catch, of course, our great interview with Gary Vee, you definitely missed out. So if you're an NFT fan, art fan, or just a Gary Vee fan, or Matt Higgins, if you like Sharks Attack, if you like the Shark Tank, then check it out, guys. One of the great things is they didn't only tell us about those things. They also let us know some of the real mentality of how they get to where they get to. So check it out, guys. I know that was a great interview.
Yeah, and for all of you asking, about Topps and that Muds deal, we were able to ask Gary Vee and Matt Higgins what their thoughts were on Topps. And of course, Gary Vee, a big investor in sports cards right now. So he actually shared some ideas and ways that retail traders can play the boom in sports cards. So go back and watch that interview if you missed it. It was one of my favorites that we've done here.
All right, guys, let's go ahead up and get to the Power Hour. If they haven't started, it's going to be on loop.
I don't think they've started. I don't see that video going yet.
Well, they're sleeping, man, because the SPACs is over and we're wrapping up, and we'll see you guys next time.
Bye, everyone.
SPACs attack. Let's get it.
There were a lot of investment returns to have up to that 500 billion, and we were happy to be there. And we're happy that institutions are joining us now, but they're joining us primarily because Tesla entered the indexes. I'm not sure they really are trusting this. And the reason for that is their auto analysts tend to follow the traditional auto industry. And the traditional auto industry is very mature. And as I mentioned before, we think it's in decline. We are focused on exponential growth opportunities. We believe a subsegment of the auto industry is going to see exponential growth for the first time in 100 years. And so that's our sole focus. Institutions have hired analysts to focus on an industry that is mature, and now there's a transformative really revolution taking place that will alter the auto world completely. There was a lot of skepticism. The auto industry itself didn't expect electric vehicles to amount to much of anything for, I think they thought it wouldn't take until the mid-20s. Well, it's here. And we began to invest aggressively in this space on that assumption as we saw battery pack system costs decline as rapidly as they have been declining. And so I think that kind of tug of war between the traditional backwards looking world, which is based on benchmarks, and certainly the top positions in benchmarks are where they are because of past performance. ARC is focused on the future, especially on the future that involves transformation. And so benchmarks, I think, have been an impediment, and setting up research organizations in the way they've been set up is also an impediment to some of the new ideas. The other difference between what ARC is doing, what a lot of retail investors focus on, is time horizon. I know that institutional investors are much more short-term, many, not all, and they're very focused again on the benchmark. So this idea of being graded every year based on how well an analyst or portfolio manager did relative to a benchmark is quite constraining. The luxury we have, and retail investors have, is retail investors really don't have career risk. We might have a little bit more of that, of course, given what we do, but we have a 5-year time horizon. That is a luxury. That's a luxury. And the difference between linear growth and exponential growth in the early years, when electric vehicles are at 500,000 a couple of years in sales globally, last year 2.2 million. In those early years, because the bases are so low, there doesn't look on a graph to be that much difference between linear growth and exponential growth trends. You give that a few more years, and the difference is quite surprising. I mentioned that 82% growth rate. We really believe that's going to happen, especially now that China is pushing hard. I don't think traditional auto analysts still believe that could happen. The third issue that institutions are grappling with, that we are not, and that retail investors are not, is that the analysts are very siloed and specialized by industry or sub-industry or sub-sub-industry. That is just how the market evolved over the last few years. The problem with that is these new innovation platforms around which ARC has centered its research and investing are cross-sector in their ramifications. So it is the platforms that we have centered our analyst responsibilities on, and they are generalists, and all of them are comfortable with technology. Very comfortable. Healthcare-oriented analysts, very comfortable. Industrial, you do not find that in institutions. And I truly believe that research departments in institutions will have to reorganize in order to invest successfully or optimally, shall I say, in innovation going forward. Our analyst responsibilities, as I said, broken out by platform and technology. And the reason that's becoming more important is because the platforms are converging. So it's getting even more complicated. Autonomous taxi networks involve 3 of our platforms. And you've heard me say this before, but some of you may not. Autonomous vehicles are robots. That's one of our platforms, robotics. They will be electric, so energy storage, battery pack systems, another one of the platforms evolving out there. and they will be powered by artificial intelligence, another one of our platforms. It is very difficult in a traditional institution, which is very siloed, to have analysts collaborate in that way. They haven't been set up to collaborate. Our analysts are all about collaborating. So the world is changing. We set up ARC to accommodate or acclimate to this new world. And as you know, we are sharing our research on social media so that we can engage with and become a part of the communities that are innovating. So we are receiving insights, I believe, because we're willing to share our research. We're receiving insights about our research from those in the field. Are we making incorrect assumptions? That would be good to know early in an exponential growth trajectory, because if you make an incorrect assumption in the early stages of investing an exponential growth trend, and you carry that mistake out, you can make big mistakes. So just wanted to share a little bit why the disconnect between traditional institutions and perhaps what we're doing. And by the way, how we complement what they're doing. We think that because of their focus on benchmarks, which is more about what has happened historically, the risk of the companies and their portfolios being disrupted by the new technologies is going to cause them to, or their portfolios to populate increasingly, we believe, with value traps. So we're a good hedge against the broad-based benchmarks out there. So as Will said, yes, it's exciting to be alive, and we're as excited as ever about everything we're doing. The last few weeks hasn't done anything except increase the returns that we expect from each of our stocks to the extent they've come down. It's only the market that has changed that, because a 5-year investment time horizon, doesn't, the research doesn't change. We haven't seen anything to change our research assumptions or conclusions. In fact, during periods of turmoil and elevated risk and fear, uncertainty, and doubt, innovation actually gains more traction faster. The coronavirus was the best example I've ever seen of it. But even markets like today will, since we're still in a period of heightened risk around the coronavirus, will probably encourage decision makers who were maybe on the fence about a new technology to jump off and just say, okay, let's go. So I am never afraid of times like this. And just to address one other question, this bubble question. We are not in a bubble, although compliance would have me say, I do not believe we are in a bubble, rightly, is because of how many questions we get about being in a bubble, and how much fear there is that we're in a bubble, is because the seeds of what we believe will happen during the next 5 years, so these 5 innovation platforms involving 14 technologies, the seeds for all of them were planted more than 20 years ago in the tech and telecom bubble, and even before that, so the PC and the internet together. And then the internet, of course, the bubble caused a rush of capital into they were actually the dream at the time. The dream was right. It was just 20 to 25 years too early. Amazon maybe being an exception, an important one, and showing the way. And so therefore, we're in the period of reality. The seeds are beginning to flourish. We are ready for prime time. That is what we truly believe. And so this notion of a bubble, I think, is born, once again, out of the benchmark sensitivity and backwards looking nature of a lot of institutional investors out there. So the other thing I'll say about this is what they should be worried about is not our strategies or innovation-based strategies. They should be worried about their strategies because the other side of disruptive innovation is creative destruction. And when we're talking about the S&P 500, we think creative destruction is going to impact nearly 50% of the S&P 500, and that we measure in two ways: by looking at the fixed assets out of there that will become stranded, and there are hundreds of billions, if not trillions, of fixed assets out there that will be stranded. And of course, we also look at the market cap exposure in those groups. I'm going to fly by now the usual drill, which is monetary policy, fiscal policy, economics, and markets, because I did speak about these things last week. But a few things did happen this week. Chairman Powell of the Federal Reserve, I guess in a Wall Street Journal article, was not forceful enough, according to investors, in saying that we are going to keep interest rates down at all costs. I think a lot of investors wanted to hear him say, yes, we're going to try and control the yield curve. Well, by the way, that really has never worked in our country, so I don't know why investors would think that it would work this time. And he did note the disorderly market, although I think a lot of people misinterpreted some of what he said. We believe that interest rates going up, and it has been a shock when you think about it, going from 1% to 1.5% on the 10-year Treasury in the span of a few months is like a tsunami through the bond market, right? That's a 50% increase in yields. This is crazy talk in the bond world, but it's happening. And I think there's a lot of confusion and risk aversion, which has spilled into the equity markets. We'll take the other side of that trade. Interest rates going up, long-term interest rates, we believe are suggesting that real growth is going to pick up. Now, I know there's an inflation component there, and we are going to see the base effect of last year's drop in prices during the coronavirus. So we could see the CPI in the 3 to 4% range. It will be temporary. And we do believe that deflationary forces associated with disruptive innovation, and they're massively deflationary, combined with the deflationary forces of those companies who are going to be put in harm's way by this disruptive innovation and who have leveraged up too much historically, usually to cater to short-term oriented shareholders and to buy back their stock, not invest enough in innovation, they are.
Stay at the top of your game.
Your radar out there.
Yeah, you know. NFT news officially became
that application. You go ahead up and myself while the video's on, but just a little introduction on ShareCare here. Let's go ahead up and see who ShareCare is before we bring on our CEO interview.
Hi, my name is Jeff Arnold, and I'm the chairman and CEO of ShareCare. Back in 1994, started our first company called Quality Diagnostic Services. And what that company was all about is we invented a little heart monitor that was the size of an American Express card that you put up to your chest when you were having symptoms, and it would record your EKG. 1998 rolls around, and we were one of the largest heart monitoring businesses in the country, and started thinking, wouldn't it be great if I could put these EKGs online? So I sold the heart monitoring company and started WebMD. And so we built WebMD up to the largest health destination site in the world.
Difference between a visionary and a dreamer is execution. The dreamers have ideas and do nothing about it, and visionaries have those ideas and execute. And Jeff is one of those people. He's the rare visionary who sees something and knows how to go for it. And he's done it multiple times over.
The company.
All right, guys, you saw it there in the video. We're super excited. Joining us on the show today, we have Jeff Arnold. He is the co-founder, chairman, and CEO of ShareCare, a company going public with Falcon Capital Acquisition Corp. That's ticker FCAC. So welcome to the show, Jeff.
Hey, guys. How you doing?
Welcome, welcome. All right, so I'm going to go ahead and let Chris do some of his questions, and I'll be back with some of my own.
Great.
Awesome. So, Jeff, just to get started here before we dive into ShareCare, I'm wondering if you can share, some of your background with our viewers. We heard it there in that video. You founded WebMD. You worked at Discovery Communications and, some other big companies. So just give our viewers a brief background of yourself.
Yeah, my pleasure. So my background's in healthcare and technology and media. Started my first company back in 1994, a heart monitoring company that we built up and sold to a public company called Matria Healthcare. Started WebMD in 1998, grew it up to $1 billion in revenue, and early kind of in digital health. Had a company that we sold to ultimately to Ericsson that was on the video on demand space. Had a company called How Stuff Works that you might be familiar with that we built up and sold to Discovery Channel, and started ShareCare in 2012 as kind of like a WebMD 2.0.
Awesome. So ShareCare going public now via a SPAC, FCAC. So, why the decision to go public via SPAC over a traditional IPO, and had you explored, an IPO recently?
Yeah. So we had a board meeting in Q4 and, was looking at all the digital health companies that had gone public in various ways. And, the pandemic, if there's a silver lining, I think it's been digital health and, kind of the emergence of that. And thought, we've got the scale. We're a $400 million business. We're EBITDA positive. We're cash flow positive. We're highly diversified. So we had the bankers kind of make the pitch to the board, and we were kind of set to, go public in 2021. And we started getting approached by various SPACs. And as I started learning about SPACs, which I didn't know a lot about at the time, I got really excited about the idea that you could spend more time with investors in a 20-minute roadshow, that you could show forecast, and projections going forward, that we could accelerate our timing to get public, and ultimately had what we think is picked a great SPAC sponsor that knew a lot about the capital markets, and so we ended up not obviously doing the traditional IPO route, but going the SPAC route.
Awesome. So, one of the things that jumps out about ShareCare in that investor presentation is some of the backers. So, you founded the company with Dr. Oz. We have Oprah Winfrey and Harpo attached. We have Aflac, Quest Diagnostics, Wells Fargo, and Anthem, all as investors in the company. Can you just kind of talk about, you know, the validation and some of these big names attaching themselves to a company like Sharecare?
Yeah, my pleasure. So our strategy was for the business is this idea of all together better. So we're all together better when we bring the ecosystem to the palm of the person's hand. So bring the hospital and the doctor, bring the employer, bring the health plan to one spot. We're all together better when we don't have a sea of apps of all these various health apps, but we have an integrated platform. And we're all together better when we go from my health to our health. And in the spirit of all together better, as we were building out our cap table, you know, we said, you know, how do we basically attract investors that bring us into the living room, bring us into the exam room, and bring us into the workplace? And so we started with media companies first, getting investors to help us tap into people's homes. So we got Dr. Oz and Oprah, and as you see on the screen, Discovery and Hearst and Sony. And then we moved to the exam room and said, look, for us to be fully trusted as a brand, we're going to need to be physician accepted. So we got the largest hospital system in the country, HCA, to invest. We got one of the largest not-for-profit health systems in the country to invest, Trinity Health. And then in December, we got the largest health system in Georgia where we're based to invest. So a lot of different hospital partners. And then we said, who pays for all this? And how do we become the digital ally of health plans and others that can get us to the workforce? So we got Blue Cross Blue Shield of Arizona, Blue Cross Blue Shield of Maryland to invest. We got Blue Cross Blue Shield of Hawaii. We got Quest Labs. We got Aflac. And then you might have noticed in our filing last week, we got a $50 million investment from Anthem, which is the second largest insurance company in the country.
Yeah, you know, that's quite the list of investment partners there. You know, one of the things that definitely stood out to me going through this, you know, in that same slide, also above those investors, we have the three business lines of enterprise, provider, and consumer solutions. Can you just walk us through a little bit of what those three business segments entail?
Sure. So, you know, one of the great things about Sharecare that we think kind of creates this category of one opportunity is we have a really comprehensive platform, right? So, you know, that has lots of products and capabilities, and we take that one platform and we sell it into three divisions. So we have an enterprise division, and in that division, we sell to government, we sell to large health plans and large self-insured employers. So you'd find like the state of Georgia as a customer, or you'd find Delta Airlines as a customer, or you'd find, you know, a Blue Cross Blue Shield plan. And then we take that same platform and we sell it into providers. So we have over 6,000 hospital and large physician as clients. And then lastly, you know, our vision from the beginning was, because this is a consumer-centric platform, is you can't spend $500 million on a health platform with a vision to change healthcare and then tell a person that you can only get it if your employer or health plan bought it for you. So we also have a direct-to-consumer offering.
Awesome. So, you know, one of the things that also stood out to me in this investor presentation is the new revenue opportunity with health security. Obviously, you know, we've heard in the news so much about the pandemic and the reopening of businesses, the reopening of, you know, sports venues, concerts, hotels. So Sharecare is involved by targeting hospitality, sports venues, schools, and workplace with that health security segment. Can you just, you know, walk us through what is that all about? You know, and how is Sharecare, how could they be a reopening play here going forward?
Yeah, no, that's a great question. So when you think about our business, think of it that there's three pillars, and one of them is health security, which is emerging. So one pillar is what we call community well-being, where we collect data at every zip code in America, and we rank well-being. So what's the physical health, mental health, financial health of that community? And then on the other end of a pillar is what we call resilience. So that's our kind of core Sharecare platform that we sell to the Deltas and the Blue Cross Blue Shields. And that's, you know, helping people build resilience. And what happened in the pandemic is that we realized there was going to be a new emerging category that was going to come about that digital health companies like Sharecare were equipped to handle, which was health security. And so when we think about health security, we compare it to cybersecurity. Right, so cybersecurity, we protect infrastructure against a virus. Health security is how do we protect people? And so our first step was let's tech enable standard operating procedures so that we can help the world reopen. And so if you're a hotel, or if you're a school, or you're a live event, or you're an office building, or others, how could we use technology to make sure that the environment was safe? And we started with hospitality because we saw there was a great need there. And we partnered with Forbes Travel Guide, which created the 5-star rating system in 1958. And we partnered with Internova, that pre-COVID was doing $40 billion in travel bookings, and had them mandate that hotels implement the ShareCare platform so that employees felt safe to come back to work and guests felt safe in attending. And today we announced that the city of Los Angeles has bought the platform for all the hotels in LA. Previously, we announced the destination of Cabo had bought the platform for all the hotels in Cabo. And we've done some live events and some other things. But I think it's this really interesting middle layer that's emerging in digital health, this idea of health security, of making sure that the environment is safe for people and guests. That work led us into the vaccine world. So as we started becoming leaders in health security, we started working with states to help them roll out the vaccine. And we were able to secure the contract in Florida and Georgia. So we've enrolled over 4 million people through ShareCare for shots in arms. And so you see kind of all the opportunities that are emerging with health security, not just, making sure the environment is safe, but, actually helping with logistics and people getting shots in arms and things like that as well.
Wow, that's great. And yeah, we saw that Los Angeles news today. So I had seen, that ShareCare prior deals with W Hotels, Ritz-Carlton, and the State Farm Arena, home of the NBA's Atlanta Hawks. So now you mentioned Cabo and Los Angeles. So, how are these deals happening? Is this where the city of Los Angeles is approaching a company like ShareCare? Are you going out and after these cities? And what does the revenue breakdown kind of look like going forward?
Yeah, so this is a new category for us. I mean, we weren't in this business 4 months ago, but we'll already generate over $20 million in revenue in 2021. So it's meaningful, and it's a combination of charging a hotel or a school or arena an annual fee to be able to use the technology for the verification, as well as working with the states for the vaccine distribution. But yes, the answer is, we have kind of organized ourselves internally around verticals. So we have somebody that is calling on hotels, somebody that is calling on live events. We have a real exciting partnership we're about to announce in that area with similar to what we did with Forbes Travel Guide and Internova for arenas and stadiums. And so, yeah, we're growing this. It's already been adopted. We've verified in over 60 countries in the last 60 days.
Awesome. The other, new maybe area of venturing here, we have the acquisition of Doc.ai, artificial intelligence digital solution, has a deal with Anthem. Can you talk a little bit about Doc.ai here?
Yeah, so, I'm sure you guys talk about AI a lot on your show, and we're real excited about the possibilities of what this can do for healthcare. But Anthem is the largest Blue Cross Blue Shield plan in the country. It represents 14 states, already over 40 million members. And alongside the pipe, when we were raising the pipe, Anthem made a $50 million direct investment into ShareCare. And as part of that investment, we've been working with other partners of Anthem's and got introduced to Doc.ai and got really excited when we started understanding what
Did we lose him there?
It looks like we lost Jeff, guys. So
Jeff is frozen right now, guys.
He is frozen on the screen. We'll see if we can get him back. But otherwise, Mitch and I can hop in here. We can talk a little bit, or I can. So,
Why not just pull up what he was going to.
There it is. Right? Yeah. So artificial intelligence, which that's very fascinating to me, and, to kind of integrate that into digital health. I think is a strong play here. And then also you heard, all about COVID-19 vaccines, the reopening, those deals with arenas, with hotels. and the deals with the city of Cabo and Los Angeles. So some of these big cities and these tourist destinations, they're partnering with a company like ShareCare, to be able to really get things back to as normal as possible. And ShareCare then, getting the revenue side of things from it, and they're getting, the big partners along the way. You heard Jeff say, those big investors they have, and, that really stuck out to me, and you've got some well-known people like Dr. Oz and Oprah, but, also those big hospital partnerships, right? And the media partnerships. So, that's a strength to me. That deal with the Atlanta Hawks for their arena being certified ShareCare safe. There's also ShareCare patches on the Atlanta Hawks jerseys. So some good brand awareness there as well. So this is a very interesting one. And the decision to go public via SPAC instead of a traditional IPO, this Falcon acquisition, you also have Jeff Sagansky as part of this team. Jeff Sagansky, the one who brought DraftKings and Skills and several others public, in the other line of SPACs that he has with Harry Sloan, but he's a member of this SPAC, FCAC.
Well, guess what?
Did we get him back?
We got him back, baby. We got him back. Let's bring on Jeff back here.
Hey, sorry about
Jeff,
that, guys.
Hey,
no problem. I was
back.
I was just sharing information about your company, but I know you can do it better than me. So yeah, let's dive back into the Doc AI. I'm not sure exactly, where you were when we lost you, but just dive in here.
Okay, yeah, I'm sorry about that. We had some kind of surge happen in the building. I went offline for a second, but real quick. So, Anthem is a $50 million investor. They funded last week into ShareCare. They had signed a $100 million AI contract with Doc AI back in 2020, and we got introduced to them, and it was kind of love at first sight. I was like, what AI needs is data, and we have plenty of it. And what we need is insights, which is what AI can provide for us. So we acquired the company, and we've already integrated. It's 77 engineers. They're profitable. They're right in Palo Alto. Deep tech knowledge. I mean, Walter, and Sam are AI pioneers. Narav is now our chief medical officer, was head of the health department in the state of New York, was COO of Kaiser Permanente in California. Their CTO was CTO for Human API. I mean, just a really exciting pickup for us. And not only is it enhancing our relationship with Anthem, but we're taking all that AI expertise that has been, perfected over the last couple of years, working with the largest blues plan in the country, and then taking it to all our other clients as well.
Awesome. So I want to dive a little bit into financials here. So, another positive for me in the investor presentation was the discussion of a recurring revenue model for many of the business segments, which helps provide sustainable and easy to forecast growth. Can you just talk a little bit about, the recurring revenue and how that's easier to forecast some of these projections going out?
Yeah. So, I think what's exciting about our business is the scale and the reach. So we'll surpass 400 million in revenue, this year. We're EBITDA and we're cash flow positive. And when you start to look at our divisions, if you look at enterprise, we're 227 million in that one division, fully booked for the year. Our contracts are typically 3 to 5 years, so they're recurring, and we get paid a per member per month, as well as we have all these upsell opportunities. And so if you're Blue Cross Blue Shield of Arizona, or you're Blue Cross Blue Shield of Minnesota, or Blue Cross Blue Shield of Maryland, or your State Farm for their 150,000 associates, or Delta for their 70,000 employees, we get paid for all those people on a per member per month to have access to ShareCare. And then we have all these digital therapeutics on top of that we upsell. In the provider space, I mentioned that we have 6,000 clients. That division exceeds 100 million in revenue for us. We've grown it from, I think we had 1,000 clients 4 or 5 years ago to over 6,000 now. And this year we'll collect over 4 million medical records for people. So you can come to ShareCare and you can say, my medical records are scattered all over the United States, and with your consent, we go and collect those medical records for you and then deliver it back to you. And so that's all, that's a real steady business for us. And then on the consumer side, you know, we've been in the digital health arena since the late 90s. So we've got a lot of great relationships with pharma and biotech companies. And so they run campaigns with us and love ShareCare because the quality of our audience and the data that we have and with the consent of our users, how we present them information.
All right, traders. I'm going to go ahead and cut in there a little bit short. Just wanted to talk to you guys about what's really coming up next. I got my man, as you can see over my shoulder, Making Bread with Cheds. If you guys haven't seen this show, this is where you guys actually are going to be able to learn how to trade cryptocurrency. You know, one of the things is that I hear a lot of is kind of the inner workings, the blockchains, and we have another show that kind of touches more along that kind of environment in cryptocurrency. But really, if you want to learn to trade, I got my man coming up next, Making Bread with Chad. Let me go ahead up and get his banners here ready here. And of course, we got to change over some branding here. All right. Let's change this up a little bit here. And then like some black here. And a little background action. All right. So what's going on, guys? How we doing out there, guys? Are you guys crypto fans out there? Let me know in the chat. I want to hear if there's any crypto fans out there. Press a 1 in the chat if you've ever traded the Bitcoin. I know I traded Bitcoin, and it was fun for me. I know that a lot of people got into it way back in, let's say, 2018, 2017, back in the big kind of boom. But it's been back. And, you know, one of the things that I think about that's always fun about cryptos is that's 24 hours. You don't got to worry about the markets closing. You know, a lot of traders out there kind of get stuck in certain times that they can trade. Let's say, you know, a lot of people out there are doing trading and a side gig, doing a part-time job, you know, still have to go to work. So I think cryptocurrency in this case definitely works and helps out, especially the trader that you know can't just make all their living off of trading. And I know a lot of you guys out there are working hard and still doing what you can to make some extra income, right? I mean, we all want to make some extra income. There you go. I'm seeing some ones coming in here. Too much manipulation in stocks. To tell you the truth, Pedro, I'd probably get hate for saying it, but I can't disagree. I mean, I'm sure that you see it often, you know, penny stock runners and stuff like that. But I'm excited to bring on my man Cheds. I'm gonna wait a little bit before I bring him on a little early, but he's getting ready in the back. And if you guys haven't seen one of the shows, definitely I'm gonna make sure that the playlist is down in the description below. Hit up the playlist, guys. Check out the other episodes. One of the great things about Making Bread with Cheds is that you don't have to see the latest episode to get information. He has some great guests that talk about everything in the cryptocurrency, from their experiences to where they see crypto now to is this, you know, where we're going to see another drop, or is that drop ever going to come? You'll find out in those other episodes. So definitely check that out. I wanted to give a little a promotion for my man Big Bread, Making Bread with Cheds, because at the end of the day, he does this, guys, for free. You know, he comes on here and gives you guys some education and then works at this on an everyday basis. So one of the things that you guys can look in the description below, you guys will find his Twitter, not only his Twitter, but definitely check out his book. If you guys haven't seen it, he wrote a book. He actually had the battles with cancer, and I'm going to let him speak a little bit about that when he comes on. But definitely an upcoming book, Trading Wisdom, 50 Lessons Every Trader Should Know, coming soon. So a book, an author, we got everything here. And he also has a community, so definitely check it out in the links below, guys, before we get started today. And it looks like we got 6:57. We're almost there, almost getting started. So what I'm going to do is first, I want to bring on my man Cheds to say hello, and then we'll get started with the show. But how we doing?
What's going on, my friend? I feel I'm glowing from all your praise.
At the end of the day, it's not even praise. It's what you do, right?
Yeah, I mean, we all have things that we're into. At this point in my life, I'm really into it. I really love what I do. And obviously, yeah, once again, thank you for your comments. For those who don't know you, it's nice to see you. Hello, welcome. Hit that thumbs up button. We're going to have a lot of fun. I like to look at price action. I'm trained in Japanese candlesticks, classical charting. Trading psychology really comes first nature to me, and I've done poker and all that, so I understand risk management. And we'll get into that a little bit more later. But I like the space. I like how there's so many different ways to approach it: fundamental analysis, technical analysis. Even within TA, you've got Elliott wave trading, candlesticks, classical charting. People just look at the order flow on chain. So I try to look at what I'm good at, and then I try to get better at that. And by teaching others, it helps you get better, kind of in any discipline.
100%. 100%.
You know what I mean?
have a question for you. For those people out there that that think that, let's say, cryptocurrency, there is no technical analysis in cryptocurrency.
Mm-hmm.
Hey, let's put that question to rest. What would you say to those people that say that there is no technical analysis in cryptocurrency?
Well, it's a kind of a bizarrely framed, statement, because I don't know. You'd have to really define that, because technical analysis is a historical study. It's a study of what's already happened, and it works based on the assumption of freely traded markets, liquid markets. So if you're doing any kind of trend analysis works in any market, especially if it's liquid. Also, furthermore, all those things about it's manipulated, it's not. That's all talk. That's all baked into price. The price discounts everything. Efficient market hypothesis. It's all baked in. Technical analysis is, most simply for someone who doesn't understand it, it's a study of trend analysis. Is it going up? Is it going down? What's the strength of that trend? Do we have momentum? Probably more importantly, where is the supply and where's the demand? It's like any asset you freely trade. There's a balance between that. And what does that mean? People like to buy it at 100. They like to sell it at 125, whatever it is. Let's say whatever that is, right? That's supply and demand. That's what technical analysis is. It's using historical data points to understand a trend's direction and the momentum behind it. I've used technical analysis on much worse markets, like the penny stock markets. It kind of almost barely works there. It really doesn't. But on crypto, it's great. You have liquid markets. You mentioned 24/7. So, I mean, that's how I would kind of answer your question.
No worries, Chaz. At the end of the day, that's pretty much all I use.
Yeah, man.
At least to find my plays, and then I go a little bit in depth. I try to find like 3 variables because I'm more playing stocks. So I'm trying to find the story, maybe make sure that the fundamentals match, that I'm not going insane, because usually mine are a little bit more swing trading. But definitely, I mean, if you don't have any technical skills, I think you're definitely lost here.
Even the people who are fundamental analysts tend to still look at like a 200 period moving average, or maybe even like an RSI. So there's still just a minimum level, I think, of TA that really almost any individual would use.
Yeah, I always say, I mean, if you don't know your levels, I mean, what are you going off of? So
you could look at the management team. You think the CEO is innovative and disruptive. I mean, whatever. Everyone has their own thesis. I think it's how you approach the thesis, how you use your risk management around that thesis. Vis-a-vis when does it fail? Like when's your trade idea fail? So I think it's to each their own. I think it's beautiful. There's no one way to do it. Like I don't get mad if people tell me, like, your style sucks. I hate how you trade. It's like, okay, like, cool. Maybe you can teach me something. I'd love to see what you do. You know what I mean?
Hey, we always can learn from each other. I think even I mean, not to say, but like you'll see some really bad traders out there. You can learn from that. I mean,
yeah, for sure.
You can learn what not to do a lot of the times. And that's half the battle. But all right, let's get this show started. I'm going to play this intro. Chad, take us deep inside the cryptocurrency world. Teach us all the inner workings that you know. And I know, like that bull back there, it's bullish, baby.
want to say hello to my friends. I am Big Cheds. You can find me on Twitter at Big Cheds. You can think of me as an educator, a chart nerd, a newbie helper, and just someone who's happy to have survived really the early stages of my trading career where I was just making so many mistakes. And, eventually I started to kind of learn from those mistakes, and I realized to really, avoid repeating them, I started to teach them to other people. I started to put things together. I made a blog. I did things like that. If we can share my screen, I'd like to kind of show a couple things. But as I said earlier, you can find me on Twitter. I am at Big Cheds. I am a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. If you're serious about technical analysis, we have just a great team. I'm just one of a great team. I also have a free beginner's blog, chedstrading.blogspot.com. I wrote this years ago, and so just check that out if you want to kind of just get started. I'm also on YouTube at Cheds Trading. But the really exciting news is our guest. And as for format, I'm going to talk crypto myself. I'm going to kind of give you a sense of where I think the market's at, and maybe some tools in terms of how to approach it, and to kind of maybe feel confident as we go forward. But we have an unbelievable guest, a legend in crypto, Crypto Burb. And I think of him as a bit of a mentor because he is the CMT level 2, and I'm only a level 1. So this is the army. He can technically order me around. He also has a lot of projects, the Burb's Nest. I mean, he's got 15 people working for him. I'd love to hear all about that. But really the show, I'm going to go through the major coins. If we can, we'll take a look at some requests. But I'm here to try to plain speak crypto. I'd like to make it a little bit more palatable, a little bit more understandable, because I've been there. I've made all the mistakes. I've gone tilt. I've gone bank. I've lost. I've broken several trading accounts, right? But I survived, and that's why we're here. I'm also an author, as the host mentioned, or the producer. I did fight cancer, and with the help of a lot of people on crypto Twitter, I survived that. I wrote a book about it, and I have an upcoming book, hopefully in the next 4 to 6 weeks. We'll talk about that later. But enough about me. Let's talk about Bitcoin. I have the daily chart up, so let's just clean things up a little bit. What you want to general concepts. So you want to first identify, are we in an uptrend or a downtrend, whatever you're looking at. And so there's certain ways to do that. One of the more common ways, you have here the blue line, it's a 200 period, a simple moving average, right? There's a simple moving average. Okay. You also have what's called an exponential moving average. It's going to be that green line right there. A simple moving average just gives equal weighting to every period, every candle in that series. So a 200 moving average means each of the last 200 sessions, has an equal weighting, 8 EMA, and why that's important we'll get to in a moment. But 8 EMA, and EMA is an exponential moving average, is more sensitive. So that's works better for kind of lower time frames. Then you have all sorts of ways to use these moving averages. You have moving average crosses. Those moving average crosses, you want to keep in mind, work best in trending markets, right? A sideways market with a moving average cross is usually a weak signal or a false signal, because a cross, it needs something to reverse, right? You want to think about that, right? Like a reversal signal has to reverse something. If it's sideways, it's just kind of a mixed signal. In any case, you want to figure out, are we uptrending? And we're looking here at Bitcoin, and 200 moving average is going up, number one. Number two, what's the proximity of the price? We're trading on this daily time frame, we are trading above the 200 MA. So it's bullish, right? Okay, good. You've established that. What's my strategy? Because, I'm sure you feel like you're always buying the top and selling the bottom. That's because you're chasing enthusiasm. And a general concept, and I've talked about, is think about it this way. It's a good time to buy Bitcoin is when other people are complaining about the price, right? What does that mean? All right. So we're on a beautiful price movement here. We bounced right off this. Let's go back to late January. We bounced right off that 50 period moving average. And that's important as well, because we'll note that the price found support right there as well. So we bounced off that 50 moving average. You're going ahead and maybe you drew a diagonal trend line. And we're keeping in mind that diagonal trend lines are subjective, much more subjective as opposed to a horizontal line. So you are noticing the price breaking the diagonal, and then maybe you're throwing a horizontal line right here. And why that's important is this horizontal line represents you have your high, your lower highs. At this point, as a conservative trader, which I try to be, you want to avoid getting faked out. You get your first break, then you want a second level break. You want to break that horizontal level. All right. We do that, a little bit of consolidation, and we're off. Enthusiasm. I missed it. Enthusiasm, right? You buy up here. All right. Now we're at, what are we at? Like 57K. So we're at 57K. Everyone's thinking 60K now, right? Everyone's thinking 65, 70K. People are buying kind of just with, just throwing money at it. No problem, no plan, which actually with Bitcoin can work out over the long run. But from that point, we get 27% consolidation. So why? So the point I was making earlier, nobody's really complaining about the price here. All right. We start to go down, people like, whoa, what happened? Right? Bounce off the 20 MA, come back up, come down. People are really starting to complain about the price down here. EMA 34, all over Twitter, social media. And then you have this really nice concept of a throwback, a bullish retest, where you take a once established resistance level, kind of break through, you come back and retest it. If you get kind of at this point, though, people are complaining. People are like, what's happening? This sucks. I'm swamped. If people are making fun of Michael Saylor for buying at 53K, right? You want to buy when people are complaining. And why? You're buying weakness in an uptrend, because trends tend to continue. So you want to, as a general rule, it doesn't matter what you're looking at. If it's Bitcoin, if it's uni, where you're buying at the 50 period moving average, you want to be buying weakness in uptrends. It's a really important concept. It's about 10 minutes into the hour. We're going to bring in our guest in about 10 minutes. Let's start out with, let's do lesson of the day, if we can roll into that. Lesson of the day. It's about emotional mindfulness. If you buy something and immediately feel uncomfortable, there's a good chance you have too much money involved, or you're not confident with the trade idea, whatever the reason be. But if you buy something and you immediately feel uncomfortable, you should probably exit that trade. And you can use that. I know it's hard to do. I know it's hard to kind of, monitor yourself. Not everyone can do it, but you got to try to do it. You got to kind of think about what you're thinking about. Be mindful, because you put too much money in, you chased it. That's a sign you probably want to get your money out, manage your risk, because it's all about managing your risk. So, it's one of those things where it's actually a valuable tool, because there's so many mixed signals in trading. But when you buy something and you're uncomfortable, that's not a mixed signal. That's like a red, five alarm fire signal. Like, whoa. Let me just back things up. And there's ways to avoid that. And we can talk about it. I'll talk about it in my book. We'll talk about it in the show over time, managing your risk, scaling in and scaling out. So, think about that. That's the lesson of the day. Any trade that makes you feel uncomfortable should be closed immediately. Let's go back to Bitcoin. We'll look at the crypto market for just a little bit, and then we'll roll into our wonderful guest. So we talked about moving averages. What I would say to you is right now, if you're not in, you probably want to be buying a dip. You want to identify a level, and this will be on any chart. You want to identify a level which likely should present a good risk reward. I maintain, and I think the price is really telling us this. And I often say, listen to the price. This is, because I think in my first video, I was talking about how I had a debate with a guy about what moving average was most important on the weekly chart. And I said, 8 EMA. And he's like, no, MA20. And I'm looking back, and really ever since we broke out of the 10K area, it's been this green line, right? And he was talking about a multi-year pattern. What you need to remember is the most recent price action is the most important for support, for resistance. So the closer the price action is in time to kind of the current price action, that's how you should weight it. So the fact that like 4 years ago, the MA20, that's not as important as what's happened in the last 6 months in the current condition, in the current supply demand kind of dynamic where, in my opinion, there's just not enough Bitcoin to meet the daily supply. Point I was getting to is what you want to do is identify a level that you want to buy. The weekly chart, we have that 8 EMA. That's been an excellent level. So what I would do is kind of target that. You maybe even just use your horizontals a little bit. You can take the recent lows here over the last few weeks, right around there as well. So maybe kind of hang around that 55K level. The other way to play Bitcoin, and we'll kind of go into the daily chart here. And I maintain, and we'll just wrap up in Bitcoin and move on. I maintain we have kind of most reasonably an ascending triangle type consolidation structure with a rising hypotenuse and a horizontal, supply or resistance area. I would kind of contend we have what's called an out of line move, where it kind of goes early, kind of in the eventual direction of the trend. We have a second attempt. And why it's more likely to break that way is it's an ascending triangle. There's been, I think Bolkowski looked at the numbers in this. It's like 70% breaks north, but it goes up, and it makes sense because it's an uptrend. We're probably going to continue. You could draw some type of a rising wedge, or like some kind of, I saw a video maybe like an ending diagonal, but you have to give the edge to the current trend. Like a bear is always going to find a head and shoulders, and it's mostly always going to fail in a strong uptrend, unless it's a continuation head and shoulders, which this one could be, right? You got to give the edge to the current trend. Like you got to stop looking for something to reverse. Instead, observe the trend and then look for signs of weakening if that's what you're trying to do. Ethereum's been just beautiful. It's been really, really strong. We are, pretty much in price discovery territory, which means like all-time high, making new highs. Yeah, you have what you want to do in this situation is obviously still buy a dip and maybe identify a level, a reasonable level that the price may get to. If you want to wait and be a little bit more kind of conservative, I think this might be an excellent level, 1930, 1950 area, where you can see the price initially stalling, right in this area, February, and we see it again there, and then you see it again. It breaks through, and then look at that, right? So we have the throwback. A throwback is a bullish retest. So here we have the rejection. Price comes back. It makes a trough, a peak and a trough, and you have a time interval, right? You have a good deal of time in between these two peaks, which makes them significant data points, right? So we have a good data point. Boom. Now we've kind of really establishing this level, and you break through. I missed it. Oh, I didn't. Another opportunity, right? So, hey, maybe we get another one. That's what I would do. Like, I don't chase things. I kind of look at, I try to look at a chart. I try to I say, listen, I try to listen to the price action. I say it all the time on Twitter. I say, listen to the price action. So that's what I try to do. I try to pay attention. I try to identify a zone I'd want to buy. Let's look at a couple more before we bring on our guest, Luna. This has been a really strong altcoin, and this is a really strong uptrend. So look at the orange line. This is the 50-period moving average. So I'm going to go back, kind of take a look at the last time we were even close to it. I think it was like 30 cents. Okay, so it was like right there. I mean, like 32 cents. All right, so 32 cents is the last time the price touched that 50 MA, and this is how strong that uptrend has been. Look how much air, or really distance, it's been able to put right between. Still, look at all that distance between the 50 MA. Why is that important? So we have the price now basically at that 50 MA, revisiting it. And when you have a trend this strong, even if like bears are gonna win and kind of continue down, it's very likely to bounce at the first time it comes to that type of a level. The first time it comes to that level, the 50 period. So these are good setups where you have an uptrend that's consolidating. And if you look at this one, like we had this nice, like a bull rectangle. We had the advance in kind of this horizontal area established. We broke through that, and a little bit of a consolidation, but there's still a lot of air. And the fact that the price is still up here and hasn't kind of come back down yet, like that's a good sign. I'm stepping out. Look how low the RSI is. Now we have something called a hidden divergence, where we have the price, and we're taking the candle body close when we're calculating divergence. And we're going to kind of notice right? The lower lows on the RSI versus the price. That's a continuation divergence. So you have a nice setup. I think this is a gorgeous setup for Luna. A funny story about this one. I had a friend told me about it at like 30 cents and I didn't play it. I just tweeted it. Hopefully you folks played it and you did well. We got about 3 more minutes and I'll bring on our guests. Let's take a look at BNB. It's just been unbelievable. What do you do with it at this point? I think you treat it as a buy the dip, but where is that? Look at that, 8 EMA. Imagine that, right? Almost anything you look at when it's accelerating in kind of that premier, fifth gear, if you use a car analogy or whatever, where you're upper Bollinger, EMA 8, upper Bollinger, that is just gorgeous. So at this point, I would kind of identify another potential area where it might touch the EMA 8, maybe the top of this spinning top from April 10th, likely, and maybe even the bottom of this green candle. That's from today. Still got 41 minutes, so the bottom of today's low. So I guess I would probably wait around like 500. It's a nice psychological level. Sometimes they try to wash out leverage longs. So if everyone's stop loss is at 500, they'll drop it to 485 first. You know what I mean? So you have to kind of be careful with your stop losses. Sometimes you have to actually actively manage them, especially at those like key psychological levels. So we have a great guest. He is Crypto Burb. I think I would just kind of started to talk to him, started to become friends with him maybe a year and a half ago. His account has really grown because he's just working really hard. And he's just got good, clean TA. And that's kind of what I'm into. I'm into like educational stuff. And if you follow his feed, he's got all his projects. Obviously, he just hit 200K followers. He's doing something right. But he's got a lot of educational stuff. And like I said, I'm a TA guy. Like I'm not into pumpers, people doing a lot of it's good to know who's into what altcoin, but I'm into TA. I'm nerdy like that. I want to learn. I want to get better. So that's why I'm really excited to have him on. You can see him obviously at the Burb Nest, and I probably has YouTube or whatever. So let's just go ahead and have some trader talk. Bring on our guest. Oh my gosh, folks, it's like 4 a.m. right now. And he's in Twitter DMing me, bro. It's like 4 a.m. I'm staying up for you. You're the man. So
yeah, we're almost like married. It's actually 1 a.m., 1:20, so it's not this bad. But yeah, I'm happy to be here. Happy to have been invited. Thanks for having me. That's pretty good to connect with you.
Yeah, dude, I'm really glad to have you. And for real, thanks for staying up. I want to hear all about you, your projects. I want some TA. I want you to, this should be easy. These people a lot of them are new. So you've got that down pat. You know how to talk to these folks. I've got my questions, but just tell us how you're doing and kind of just a little bit about what's going on right now.
Yeah, first of good to see you, buddy, after some break. After some time off.
Yeah, for sure.
Good jacket as always.
Yeah, I'm from Big Jonas.
Yeah, that's pretty good jacket, man. Pretty neat.
Hell yeah.
Besides, I'm very happy, as I said, because as you mentioned, I actually like spreading the knowledge because the knowledge is power, and so many people actually get wrecked in trading, especially in trading or wherever money is involved, because they lack knowledge. Right, so the main cure to any major problems is usually associated to some extent with knowledge or lack of it, to be real, right? And again, it's for being a trader, from my sort of experience, from my point of view, having this sort of a holistic approach. I myself, for my main background, I'm a chemical technology master of engineering. Besides, I did finish the top school of economics in my place, in my country. It was supposed to be in a project management, but apparently I ended up writing quite a thesis on a 90-page long master thesis on Bitcoin technical analysis. So technical analysis is a sort of it's kind of like a 50-50, chances that somebody of the academic degree would agree or deny that. Most of the people who believe in the efficient markets, they would deny existence or work in, the TA having any edge whatsoever. But myself, yourself, we both know that TA works, it exists, it works, it's really useful, and it actually can add up an edge over the rest of the market participants. So, I'm very happy that you had joined me also, on the CMT kind of like path or the certification to grow as towards our main kind of like, designation of the certified market technicians. This is kind of rare in a space, I think, especially in the crypto. Crypto itself is a very immature market, right? We are growing, we're maturing fast, we are very volatile, we are very dynamic. So it's sort of like a small project. It's like a startup, right? This space is full of startups. So it, to some extent, is a one big startup, if you know what I mean. And with me, being Adrian in real life, right, or Crypto Burp, with my alter ego, let's say, on Twitter, right, or having being the founder, the head of the Burp Nest in 2017. It's been quite some time, by the way. I personally have noticed from those multiple angles how volatile this market can get, how fast this market develops, how fast the trends emerge, and how fast money can come and go as well, right? And that is exactly what probably hurt so many people, because right now it's kind of like a middle of bull market, or in my opinion, if you ask me, 60 to 70% completion. But many people who are joining as we speak, and there are many of them, they never know what the bear market is. They never experienced anything like
Not
that
yet.
before.
Indeed.
Not yet. Which the only thing they know is, well, up only, right? Is the
Well,
only
hold
way
on.
up.
Let me jump in. What do you think? You know how like the equity markets it's all rotation now. Like there's never gonna be like bear market because you're gonna move the money around. Maybe like crypto does that, right?
To some extent, perhaps yes, but it's definitely not imminent, in my opinion. If we talk about it, then time needed for this space to kind of like get absorbed and fully approved, accepted in the regulatory side, and whatnot, the global adoption, let's say, on the market, the financial markets, it's definitely not this cycle. It's 100% more mature compared with 2017. It's out of question. 2017 in its entirety, for the bubble, it was run and then driven by the retails, right? Everybody was just following and FOMOing in all those altcoins, and they were pumping 10x each. Right now, it's kind of like the roles flipped, because in the meantime, of the bear market, 2018 and 19 to April, with the main April Fool's Day 2019, where the major breakout of the accumulation happened. Ever since, we have seen very significant influx of an interest from the institutional side.
Yeah.
And this market is filled with institutions, right? It's filled with institutions, and kind of like a roles flipped upside down. The other day, retails rule. Right now, institutions rule, and retails are catching up, if you know what I mean. And the major problem is, though, that many are joining late, and majority always join late, right? So that's the main problem, and that's the main kind of like an awareness thing that everybody should come with to the market right now.
So who's late? The late retail or the institution? Like in your kind of story here.
Both. If you think about it, the institutions are people as well, right? Those are the companies, those are the hedge funds. Hedge funds have their own hedge fund managers, as in any other project management firm. We would have certain limits, directions, directives you need to follow, right? And if you don't meet certain criteria, for example, number of trades a month or something, they can just change you for another person. So which pushes too often people to make mistakes trading, right? And this also solves kind of like, at least partially, the question or the issue for why most of the hedge funds underperform against the market. right? So how is that possible if, let's say average yield, every yearly return of the equities is, 10, 12%. So how is it possible for the hedge funds actively managed that they actually perform at 6, 7, 8% a year? How is that possible, right? And the answer is this human factor, because people make mistakes. We as traders are kind of like far worse by our nature when we are compared with the bots, with computers, with programs that trade based outside any perception biases, on the contrary to what we do.
So I'd like to ask you, that's interesting. So, talk about mistakes. Obviously, you're still trading. I see your feed. You're very active. How about you? Like, what do you keep making? Like, what is the mistake that you're like, I can't believe I just did that? Tell us about that.
It's been quite a while. There were many of those, of course. But as I grow as a trader, I keep learning to start with, right? I get my CMT1, I get my CMT2 right now in June. I'm getting my CMT3, although I don't know how I'm going to connect that with wedding because it's almost the same time. So it's sort of like going to be a tough time. But out of question, if you keep learning, if you keep reading those books, I often post on Twitter like different books that I read, be it on the volatility options trading, for example, recently, or intermarket technical analysis with famous John Murphy, one of the best, or the CMT alone, or if you just absorb the knowledge, if you keep learning, I think the success is some kind of like a natural result, natural outcome. You don't need to press too hard because it comes out, naturally. But the problem is that most of the people are too lazy to even just move a finger, to open up a book, to even check the trade before they actually make a trade. So I think that most of the mistakes in the past that somehow hurt my portfolio. I lost, for example, on Cryptopia hacks the other day. I lost quite about, it was filled with shitcoins, which most of them are dead today. But it was about 1 BTC in total back then. So it's about $60,000 in the peak, maybe worth 120. It's a worth of an apartment in where I live. So it's kind of like a big opportunity cost. The other day I got scammed on my Ether wallet, which I never use anymore. It was some small bet, like 2 Ethereum, 3 ETH, something like that. I don't know. It was just simply hacked. I don't know how poor the hacker has to be to just reach out for $2,000, $3,000, but hey, whatever. Besides, the ICOs boom of 2019 as well. That was April. I was actually in March. There was a pre-sale going on. There was an ICO going on for Edwin, which is currently listed on Binance, of course. And there was an issue with some middlemen. And long story short, the money worth 1 Bitcoin at that time it was $4,000. Did not reach the pool. It reached scammer instead, and despite it was trusted parties, right? I don't want to bring really too many names because it's kind of like a delicate matter, but those were many people involved that I know from Twitter. And the scammer was Crypto Brahma, of course. That's something to be noted.
It's tough, right? It's
yes.
tough in this space with security, and there's a lot of ways to do security, and there's a lot of incentives for people to try to break your security.
Even if it's $2,000-$3,000, you can never be sure of it, right?
Man, people, when people have nothing to lose, or they don't have any food or whatever, it's human nature to survive. If you think about kind of what humans would do, kind of to survive, so it's not surprising. And I'm sorry. Obviously, I'm really sorry to hear that happened.
Yeah. I mean, so again, this is trader's journey. You make mistakes. You're going to. I'm going to get scammed so many times probably in my life. I don't know, but all that I know is when I have a mistake, when I make a mistake, I don't want to commit it twice. So I just do my best to what I fucked up in the past and what can I improve to make sure this does not happen. And it's not only trading alone, right? For me, running a very successful trade group business, which actually evolves as we speak, which is evolving into big major firm, global firm, being subsidiary of even major groups, major group of firms, but that, I don't want to spill the beans too much right now. But those mistakes, being in project management, in company development, in my own brand development, they always come, but you need to learn, right? If you keep learning, I think and if you keep learning and if you keep being proactive, this is something that I fully expect from anybody I work with. The proactivity is that one of the most sort of like valuable features I always look for, to see in people. And when I don't see that, I am 100% certain there's not going to be chemistry, right?
So learning too, I think, I've noticed people are hard on themselves for making mistakes, but like you said, you can't learn from it unless you've made the mistake. And even maybe the emotion from making the mistake scars it in your memory to not repeat it. So I think people have to be patient with the process. And I think you would agree with that, as you have to kind of make the mistakes, learn from them, and hopefully not repeat them.
Yeah. Do we have just an example? Do we have some estimated round number, for how many people are watching this right now or in the chat?
It's gonna be on the Benzinga stream. I could pull it up in the other window. But
we
we'll
got
ask.
about a little bit over 100, 130, 140 people right now watching right now.
Okay, so listen up, guys. If there are 130, 40 people watching, about 120 of you are going to get completely destroyed in the bear market. I promise you that. This is statistics, okay? About 90% of traders, statistically, they lose money on day trading, which means that if there are 100 people in the chat or 140, only 120 of you are going to make it. So how you decide what can you do, in this zero-sum game to outsmart all the rest? I'm not saying you are going to directly trade against yourself, but hey, well, statistical chances that, there are statistical chances for that. Perhaps you may be trading against yourself, okay, in the chat. But most importantly, what I want to show you is I want to kind of like bring this shocking point of view, right? I want to shock you to wake up, because I'm setting against statistics, don't lie, right? There's some normal curve, normal distribution, whatever. Most of the people usually perform around the average. That's why the average is called the average, right? And there are few people who would outsmart the rest, and few people who would be extremely bad at trading, right? And the problem is that crypto is a bubble, right? Whenever crypto is a big bubble, it attracts people exponentially, for their interest. And the bubbles are kind of like, if I actually recently, have been to Dubai, and I admired this beautiful tall building, Burj Khalifa, and the pumps and the bubbles look exactly like the Burj Khalifa, right? It just climbs up to the very peak, to the very sort of like very peak, very top, and then it climbs down with the same velocity or even more aggressively. So that is the major problem. If you come here and you join the market, which for limited scope of your experience, never seem bearish in a way, okay, then the only thing you see, well, there's actually a name for that. It's called saliency. It's one of the perception biases. And it's called that, for an example, if you leave, perhaps in Miami, Florida, I don't know, then you may encounter some floods, I don't know, or hurricanes, tornadoes, right? I live in Poland. We don't have those here too much, I suppose. But let's say, I live in Poland, right? Or some random person lives in Poland, and there is a question whether or not to buy, like a flood insurance. So most of the people would not expect a flood insurance, would not expect any floods, because they didn't happen in the past week, month, year, decade, whatever. But does that really mean it's never going to happen? right?
Hey, can I jump in? Remember in The Big Short, wasn't it those guys? You saw The Big Short, right?
Yeah.
And one of the two guys like made bets on random insurance bets that like would. So that's kind of your point, right? That same concept.
Yeah, exactly. That's my point. And it's called saliency. It's that natural sort of like, perspective, the perception that people assume that just something because they didn't happen in the past is not going to happen ever. And that's where majority has it wrong, right? Because when you join in the bull market, you never expect a downtrend. And when the bull market comes to an end, you see 80-90% retracements, then you are too emotionally attached, or even if it's 50% retracement, you're too emotionally attached to your loss. You don't want to admit mistakes, and you just hold it until it all dies, or until you zero your account. That's it.
Let's explore that because that's really interesting. That's one of the things I wanted to ask you about. And thank you again, Burb and Adrian, and definitely check out his links. The supply-demand balance is different now. Institutional demand. I had my notes, can we have an 80% retrace? Because I don't think we can. Do you, because I feel like that's the Fed backing up the market is the institutional crypto interest in some ways. What do you think?
I think that there is a popular saying that says this time is different.
Yeah. Yeah.
But the problem is that it never is different. It is different, of course, because it's, new kind of like environment. We keep evolving from a physical point of view. Each and every second that just passes is different than the previous one, right? Because of the energy flow, whatever you come up with. But the truth is, again, that the mechanisms are still based on the same. And it's always fear and greed that just rules the market. And knowing that this doesn't really change, we too often see very, very similar patterns, very similar mechanisms on the market regarding the supply demand. And there are many institutions right now, but what if those institutions just realize their profits, all of them, just at once, right? This is a cascade dump of 50-60% on the market, like with just like a click of a finger.
Yeah, but aren't they not even counting it on their balance sheets as profit or loss? Aren't they just kind of using it as like reserves? So yes, but I guess what would cause that would have to be some weird double spend or something like a flaw or something, right? They're not just gonna, we broke the lower BB in the weekly. Like they're not gonna do that,
Well, no surprise, right? Yeah, you know what? I mean, as I said, I do know that time is actually different. The environment is actually different. We are evolving constantly, but at the same time, there is no reason for me to not expect 80-90% retracements in case, knowing that this is a bubble, and bubbles usually do that. So I am the type of a person who is usually either risk averse or neutrally risk, kind of like set. I never gamble. When I see some big money on the table, I just take it. I just realize that I don't want just an average 10x or go big or go home. I don't give a fuck about it. If I have a life-changing money right in front of me, I just take it. But that's me.
I ask you, what's your favorite type of trade? I mean, I'd like to know a little bit more about that. I want to ask you what your markets are, how you're defining your risk. Is it a money stop, a percentage stop? Is it always different? And sorry for interrupting you, but I'd love to hear that.
No worries. Yeah, this is actually a very good question. I'm a medium-term trader to start with, although I kind of like do some sort of like a hybrid, because I have my long-term crypto investings, which are the crypto holdings, which I never use or touch until the long-term indicators such as net unrealized profit and loss and UPL, for example, displays so on like Glassnode or whatever. So until that flashes that, I'm not really touching my long-term holdings. But besides, I have developed. I developed the other day with the big help of amazing person Signalfy. Big greetings to him. We both developed, this kind of like a monster trading system. And many people get it wrong, in understanding or confusing trading system with a trading indicator. So first of all, indicator, its main job is to indicate, is to show you something, right? Usually is to show you, whether the market has some stronger probability or tendency to go up or down. But besides, the trading system is a complete kind of like a business model for you, right? How you're going to make money. And then you decide about the markets, you decide about the entries and exits, you decide about the stop losses, you decide about the position size, you decide about the tactics. If you trade Bollinger Bands or moving averages or Ichimoku, whatever. Right. So we developed a system that is called Verbicator Pro, or just as I love to call it, B Pro. Right.
I love it.
And yeah, it's a fancy name, right? And it's a trend following breakout system. So I'm a trend follower. Okay, I'm a trend follower. I am usually late to the party, but I compensate being late with certainty.
With the confidence of the trend behind you.
Exactly. So I used to be a momentum trader, which means that I used to fade the trend a lot, right? So, based on divergences, when you enter a trade based on divergence, then your actual win score is not really that big because, well, too often you get it wrong, right?
What about double divergence? What if you wait for double negative divergence, right?
Well, you can wait for even 10 divergences, right? Or even 20 indicators, or, the truth is that technical analysis is limited. It's limited in its own power, in its own simplicity. And, you cannot expect things like Elon Musk did with putting Bitcoin hashtag in his bio, which pumped Bitcoin from 32 to 38, right? You cannot expect that 20% pump just like this. But again, the saliency. And I personally use the B Pro, and I trust it with all my money for the short term to medium term kind of like swings. Whenever it flashes buy, I just buy. Whenever it flashes sell, I just sell. But that's because I firstly know that this is a credible system because I participated in developing that. Secondly, I choose to be late to the party on purpose. I choose to enter the market later, right? Has less, I do have less ROI, but I don't care because for me, when I'm trading 6-7 figures, let's say, I cannot really make too many mistakes because those mistakes, turn, and evolve into 100, 200, 300,000 losses. And well, as I said, those are all life-changing money. So why would I give it back to the market? All right. So I choose instead to be late to the party, but with more confirmation. And that's exactly what trend following means, right? Trend is your friend. Trend is your friend. You don't fight the tape. Like there are so many sayings for that. And this is trend following breakout system, which the breakout suggests, like from the Bollinger Bands, that it usually it comes with the volatility question. So if there is some abnormal volatility, then it usually points you to with the breakout direction to what extent the trend is supposed to continue.
More momentum, more power behind the break, and all that. So I'm interested, and hopefully not too wonky, but how do you feel? Because I don't like to use the RSI for regular divergence because it's bounded, right? It has that absolute limit, right? And I like to use the on balance volume. So how do you feel about using RSI for regular divergence? I use it for hidden, for the continuation.
Yeah, I mean, RSI is actually, first of all, it's not as simple indicator as many people would read. No, it's actually quite agile. I think it's quite smart as well. Wilder, while coming up with that, he was trying to find a consensus between the sort of like green days, the bullish days and the bearish days, right? And then he calculates it, compares it to reveal the relative strength of the market of the past sessions, past periods, whatever. But most importantly, me being the momentum trader back more in the past, although I still track the momentum, of course. But I track the momentum not really anymore with regards to the reversals, but more of a trend strength, right? So it's kind of like two different angles. And honestly speaking, I do involve RSI in the B Pro, right? It's kind of like they're involved, and whenever it comes, I can actually just show a screen if you want.
Yeah, we'd love to see that. Please take us through that.
Yeah, let's see.
Hit that thumbs up, folks. We love having you watch. Thank you.
Yeah. assuming you guys see the screen well.
Yep.
This is a B Pro. This is Barbicato Pro, right?
Mhm.
And it has a full sort of like a variety of tools that it brings. And as I said, this is a system which brings entire world of indicators. It's not just one indicator, right? And most importantly, you have the momentum waves, the colorful ones, right? And whenever the trend gets bigger like this, whenever
Mhm.
the momentum gets bigger,
Mhm.
right? The trend usually peaks when the momentum peaks as well.
Like the bands, like the
right?
Bollinger Bands, right?
Yeah, exactly. To some extent,
some
yes.
ways, in some
Bollinger
ways,
Bands,
in some ways.
Bollinger Bands are based directly of the standard deviations
Yeah.
deviations to the upside and downside against the median. But here we are talking about the ATR, right? And the
Yep.
ATR is an average true range,
Yeah.
which is defined of the true price, which kind of like takes the high, low, and close of a session and divides it by 3 to come up with a real price. Or the real price, yeah, something like this.
Mhm.
But one way or another, I personally choose to set it because you can choose whether, if you are a momentum trader, you can just, leave the momentum alone and trade just based on the momentum. And whenever it peaks, whenever you see some abnormal kind of like abnormal peak, and you see that there is a tendency is changing, right? That you see that it's starting to kind of like make lower highs and it's starting to kind of like contract, then the momentum is weakening on average, right? Which may be an indication for you to somehow just leave or not. On top of that, you can also tune in this entire system with regards to what kind of like trend settings you want. If you are a short-term trader, you can go near. It's going to show you many more trends. Many more signals.
More
if you will.
sensitive.
More sensitive, but then less credibility, right? Because as I said, I do apply a lot of lag for the trend length.
By the way, that's how my wife would describe me, as more sensitive and less credible. I just wanted to.
Yeah,
That's
exactly.
my wife. That's my wife would say about me. But go ahead.
Maybe, I don't know.
No, less. Trust me, she thinks I'm less credible. Sorry about that. Go ahead.
I love it. Yeah, and if you're a momentum trader, you can fancy trading momentum with it. If you are a simple trader or simple trend follower, just like I am, I have it all for the trend following, and the main average, the hybrid average that we have, is the main trend navigation. But most importantly, again, if you play the bands, then the bands often show you where the trend is kind of like exhausted here, or when it's exhausted here. All of those marked colored areas are meaning the trend. The RSI per se is exhausted, is in the oversold or overbought. You can easily spot that as well on the lower time frames, right? Oversold. Again, if you're a momentum trader,
are you using 20 or 30? Are we going 30 or 20 on that?
For the RSI, it's usually 20. Yes.
Oh, so you use it right because a lot of people 30-70 and people do 20-80, right? Sometimes.
No. I mean, if you that you can somehow edit that, of course, right? It's up to you because, as I said, you can manipulate as many aspects as you want. You can come up with view up trend lines based on the volume, so many options. But again, for the RSI settings, both, as far as I can recall, are 80-20. But it doesn't matter too much for me personally because I'm not a momentum trader anymore.
But that's good. It's less sensitive, right? 80-20, you get it's less sensitive, so you're not faked out as much, right? That's why some people do that.
Yeah, of course. If I ever use RSI, I always go for 80-20 for sure.
Interesting. Very interesting. Do you ever use and we just a few more minutes? Do you ever use like Heikin-Ashi candles, or even just a line chart? Just to switch things up.
I actually don't. I mean, I don't use Heikin-Ashi. Don't use it. I never really just ever dug to this. I know it has its own power, but again, you kind of like, while learning in the learning process, you often kind of like make a full circle. You learn all the stuff. You learn all the deepest trading systems, all the most advanced indicators, like combination of 50 indicators, and then you come up to the conclusion that moving averages are the best ones. Right? So Heikin-Ashi, if you use Heikin-Ashi, if I ever want to just get a bit less noise I choose to have only one data per candle per session, right? And this is a candle close. If I use candlesticks, then this is open, high, low, and close. Yeah, so linear chart by all means. Heikin Nash not necessarily. Point and figures not really. Renko not really. Bar charts at times occasionally, but it's the same as candlesticks. So
I see a lot of people use bar charts, like a lot of old school kind of traders, and I think you want to at least get a sense of it, like pattern recognition and muscle memory. But I'm just a candle guy. I think most people are.
Yeah, I also use for which is kind of like not available. Yeah, exactly. What is not available on TradingView is available actually on TradingSpider. Great people as well.
Oh yeah,
great, very supportive to my great friends. But most importantly, I mean, let's just kind of like take it down. The raindrops are a combination of the volume-weighted average prices and the actual price action, although they are not based on the high, low, and open, high, low, and close, right? So if you see a raindrop, like looks like this, it sort of like is divided into two sessions, right? Into two halves. When this is a daily, then you have 12-hour kind of like worth of price action on the left side and 12-hour on the right side. And this actually, when you rotate it to like 90 degrees to the right, you have a volume profile. And you know that throughout which kind of like, if you know that there was a spike, right? And there was a spike, then you know that somewhere around half of the first part of the first half of the entire session, there was a volume spike, right? And or if you flip it on the second half, then you know that, for example, in the first 2-3 hours of the second half of the day, there was a volume spike. Besides, you have a volume-weighted average prices, on both sides, on both ends, which is really nice tool to embed volume and candles, although not necessarily directly open, high, low, and close values, which you'll see. Instead, it brings the matter and the understanding of the volume. And this is what I definitely like to use at times as well.
I love it. I love having you on. If we can kind of kick things back, I listen to you, man, and I realize how far I have to come. I probably feel how people feel when they watch my videos. I listen to you. I'm like, man, he's good. I'm like, oh, that sounded smart. Why can't I explain things that way? So
it's almost 2 a.m. and that's still my brain is still.
Well, you know
burning,
why?
so
It's because you enjoy it. It's a passion. If you want to get good, you have to be passionate about it. You either do it or you don't do it. Like whatever Yoda said, there is no try. I mean, that's the truth. And with volume, 100%, you want to see where those spikes are because you want to identify, levels of significance where the battles were fought, because oftentimes that will come in the future. But want to say goodbye to our folks, point them to something they should, whatever. We're just happy to have you, but just say goodbye to the folks. It was an honor.
Yeah, goodbye, folks. I'm very happy to have been here. Thanks for the invite. I'm definitely happy to come back anytime you want, guys. And if you want to know more about what I do or what I get for all the premium members or free, there is a 7-day free trial if you go to theburbnest.com, and you can get 7 days free, no cost, no credit cards, no anything. You like it, you stay. You don't like it, you just we shake hands and we're good. And if you have any questions, just drop me a DM on Twitter and I'll get you sorted.
He is on Twitter of course, at CryptoBurb. I love the guy. Check out his stuff. Thanks, man. Get some sleep and really appreciate it. Thank you so much.
Much loves. All the best.
All right, dude. Thank you so much. I really do appreciate having him on. I'm going to share my screen real quickly and wrap things up. Hit that like button. Thank you to Benzinga. Thank you to you as the viewer as well. You're making this possible. That was Burb. You can find him on Twitter at CryptoBurb. He's got the Burb's Nest, of course. I am Big Cheds. You can find me on Twitter at Big Cheds. I'm a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. If you're serious about learning, check that out. Check out my blog, chedstrading.blogspot.com. If you're new, and Cheds Trading on YouTube. Just to wrap things up here on Bitcoin, you want to identify a level at which you'll be comfortable buying if things do kind of pull back. because Bitcoin tends to do that. You tend to get these moments of enthusiasm. You kind of come back, and you want to kind of try to pay attention when you see other people starting to panic, other people starting to worry and complaining. And that's when you want to start to put your funds to work. It's a really important general principle. You want to be buying weakness and selling strength. Now, if you're a long-term investor, you can dollar cost average. You can buy some every week, every month, every 2 weeks, whatever your strategy is. You can approach things that way. I would just point out some levels that you would want to pay attention to. So kind of a short-term level that has importance, in my view, is the 200 period moving average on the 4-hour chart for Bitcoin. So when you want to use a moving average, you want to listen to the price. Man, I'm just thinking how dumb I sound compared to Burb. He was so smart. It was great to have him. But anyway, you want to listen to the price and you want to see what it's telling you. And it's telling you it has some play here. It's paying attention to this moving average. You go back, you see how we kind of rallied here, bounced for a while, came back, found support, bounced, came back, found support, right? Data point. I'd say one more, maybe another 2 more data point. Came back, lost it, rallied, came back, lost it, rallied. So look at that. That 200 period moving average is a buy the dip zone on the 4-hour. It doesn't mean it's just going to bounce right off of it, but that's an area that you want to start to look. You also want to pay attention to the weekly chart, to the EMA 8 on the weekly chart, as well as the daily chart, that 50 period moving average. I think that is definitely critical. We're just getting ready to wrap things up. I am very happy to be here. I'm honored. It's wonderful to be working with Benzinga. We're bringing on guests. I know I'm learning a lot, and we have a wonderful space. There's a lot of folks you can learn from. I would say never hesitate to ask me, ask someone else. They may not always respond or get back to you, but there are a lot of people who will. It's a great space. I'm happy that you're involved in it and happy that you're part of it. And I'm happy that I'm part of it. I'm having fun. I'm trying to learn. So stick it out. Keep fighting. Keep learning. You need to learn from your mistakes, and you'll get there one day. But thanks again for another great episode of Making Bread with Cheds.
All right, guys. Wrapping up Making Bread with Ched. So you guys already know I even learned something in that technical analysis. I'm going to have to look up that guest because, I mean, he definitely gave me a little bit of insight there at the end. If you guys didn't listen, he just said, I've done all the technical analysis search in the book. And guess what, guys? Moving averages it is. So I'll definitely have to keep that one in mind and look at maybe some of my moving averages. I used to use the 9, the 20, maybe the 50 when I used to day trade and kind of use those for crossovers. But let me bring on the man up next, Ruell. What's up, my friend? How we doing?
What's up, homie? How's it going?
Hey, doing good. Got to change this thing up. Get it ready for you, man. How you doing today?
I'm chill. You?
I'm good. Enjoying the market. You know, I took some trades. I'm starting to dip my toes in solar stocks. I don't know if that's on your radar, but definitely on my radar. As I start seeing, you know, the charts starting to get sleepy, that's when I get a little excited. You know, I wait for those multiple bottoms because I need to see multiple bottoms on the daily. Even I like to see like 3 weeks sideways or maybe even a month sideways, because that's when, you know, kind of you either find out if the bears take control or the bulls are kind of just sleeping out. And then if the bears aren't taking control and knocking it down, eventually the catalyst comes roaring back, right? I mean,
right. And if it's
all the
been
time.
sleepy for that long, chances are it's more likely to just be at its support, right? So
definitely.
Yeah, love it.
So I'm gonna be watching your show. I'm gonna go ahead and it's time for me to kick back a little bit, but I'll keep up my YouTube and watch you. So I'll let you take on over, man.
All righty. Peace. All right, what's up, guys? Another Ruell report for you guys. And I want to go over 2 different coins that I'm really excited about. As a matter of fact, there's one I was really, really, really giddy about. So let's just get straight into it. Let me share my screen. Uh-oh.
What's up? Are we having some technical difficulties?
Oh, on my end, it looked like it was just paused.
Oh, how we doing?
I think we're good. Is it not paused anymore? Okay. All right. I think we're good now. Let me know when you can see it on your end.
Oh yeah, I got it. I was just waiting for you to get off the.
Okay. All right. Sweet. So the two coins we're looking at are Senso and Anarchy. Now, Senso, oh my God, Senso just looks great. Like, you know how we've been talking about NFTs for the last 3 weeks, right? Senso seems to combine everything in one space that you would possibly want out of an NFT play. So they have great partners, Tidal guys, you know, like Jay-Z, Lil Wayne, the Tidal streaming service, those people, right? And if we click on this link, Tidal purchased 7 million of Sensorium coins. All right. And here we go. Video streaming service owned by Jay-Z, Rihanna, Daft Punk, Lil Wayne, Chris Martin, and Calvin Harris. So, wow, right? And then if we go here and we click. Oh, and just let me give you a little background on what Sensorium is and what they do. Basically, they do VR and augmented reality concerts. All right. So if we go on their site here.
So are you currently trading Senso? Do you hold some right now?
I hold some right now. And if we go to the chart of Senso, you can find it right here. It's traded on KuCoin. And it's sitting at around $1.08 right now. It's kind of bouncing off of support. If we go out, like say 4 hours, tighten the chart up a little bit. Actually, let's go out a day. And
okay, so we're looking at Senso right now. What do they have the symbol for that as?
Ruell, what's up, man?
Oh, Luke.
What's up, Luke? So
you're just jumping into the intro without me? Okay.
You know what? I was gonna say we're gonna cancel it because if Luke isn't here, I can't go on. So, you know, but I thought that wouldn't be fair to listeners. You know what I'm saying?
I hear you. I hear you.
Just because I can't cope doesn't mean that everyone else shouldn't. You know?
Exactly. That's where I'm at, man.
Little my acting chops right there.
All right, you already ripped the intro and everything.
I told you I was in this random.
We didn't run. Should we do it? We should do the intro video real quick. Let me do that.
Yeah, let's do it.
Because that's a little pump up. Gets us pumped up.
Oh yeah, for sure.
Let's get ready to rumble.
Benzinga Nation. I mean, that was disappointing, Aaron B.
Let's get ready to rumble.
Benzinga Nation, jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Aperna. The best trade idea resource out there. Boom! There it is. See, when we don't do the intro, I don't know. I don't get as into
it. But yeah, so yeah, Luke, you missed out. So the two coins we're gonna do are Senso and Anarchy.
All right, and these are two lower price, smaller market cap coins, I'm guessing.
Yes.
And they're both in your speculative play bucket. I like how you always bucket everything into your speculative play and your established coins.
Exactly.
Okay.
And then
So-
wait, Ruel, I know we've talked about it before. Can you remind us real quick? Where do you find these like new altcoins in their early stage?
Well, a lot of it is Twitter research, but what you can do is go on CoinMarketCap, and CoinMarketCap just makes it real easy. It's like, of course, it isn't as sweet as Benzinga Pro, but you know, it does what it can with what it has. So you know, you go in there and you can put in certain tickers, crypto tickers, and it just it'll separate them into categories as well. And yeah, that's where I do it. Most of the research with CoinMarketCap and Twitter.
See, we need to get this onto Benzinga.
Oh my God!
If
we
anybody
really-
out there wants to really build crypto for Benzinga, then Luke@benzinga.com. That's the email address.
Like if I could just come over here and put in crypto tickers, my life would be complete. Like really.
Yeah. See, now we're talking.
And it seems like there's something there for it. Like I can do this, but it doesn't accept it. It's like Ada error. I can't do that. What are you
It's
trying
like in
to
the
do?
beta phase. Just give it a few, you know.
So
Don't lie to the man, producer AB. Come on now.
all
It's
right,
not
so
in no beta phase.
so back to Senso. They, like I said before, they're partnered with Tidal, which Tidal holds 7 million of these Senso coins.
Okay.
And let's just go back there so Luke can take a look at it. And voila. So they made that purchase in August 26th, 2020. So not too long ago, about like 8 months ago. But if we take a look here, they're also partnered with Epic Games.
Okay.
And those are the people, of course, who make Fortnite. If we go down
Okay.
here, Epic Games, boom.
Doesn't Tencent own Epic Games or a large stake in it?
Well, I do not know about that, but I do know that Sony owns a stake in them.
Okay.
PlayStation, Sony, they own like a 10% stake. So here we go. This girl's like putting on her little VR augmented reality helmet, and she's listening to a DJ, pretty much. And if we go back to their Twitter, they say something that's really profound for me, which is what I thought NFTs would need to be in this space anyway. They would need to be something that would help musicians out, since musicians aren't making that much money due to COVID. Because most of the musicians' money, since I think Mr. Aaron Bry put me up on this, like SoundCloud or what was it? Spotify pays them like something like 5 cents a download. Most of the artists get their money from concerts, but due to the whole COVID thing, you can't do concerts. But you see right here, they say, you know, can VR concerts save a music industry brought to its knees by COVID? I think so. And there's just so much that you can do there. So, for example, imagine having a VR concert right now, like that already that widens your audience to worldwide. Whereas if you were doing a concert, you can only pack certain people into the concert, right? If you do this online and with a VR helmet, that widens your audience to like whoever has a helmet. So conceivably everyone in the world, right? So, and if you look at their roadmap,
But yeah,
go ahead.
You have the obvious consumer demand problem, right? I mean, it's if you want to go to we're gonna use Taylor Swift as your guinea pig, okay? If you want to go to a Taylor Swift concert, right? You're gonna drop let's say $200 to get a good ticket for a Taylor Swift concert.
Right.
Right. If you know, nobody's spending that to go to a virtual Taylor Swift concert. Can you get it to a ton more people? Sure. But for the live experience, I mean, you're already getting, I don't know, 50,000 people there and packed into an arena.
I love it, Luke, because you ask these questions, and these are the questions that need to be asked. Great. That's perfect. That's a perfect question. But in my mind, if you tell me that, right?
Yep.
I would say, okay, then let's say that they lower it down to like $20. That is probably not going to be that low, but let's say $20, right?
Yep.
Then they could upsell you on, say, like a Taylor Swift NFT that you can buy. That's like custom artwork from a custom artist, and it plays like one of the songs from the concert you were at, right?
Okay. Sure.
And then if we look at this roadmap, you can see they say explore Sensorium Galaxy, meet users and celebrities. So remember when we were going over those different ones like Decentraland that have these VR like lands that you can purchase?
Yes.
So imagine, what if I say to you, you buy a ticket to this concert and you get first dibs on a piece of land next to Taylor Swift, where, like, you know, every month she comes and she says hi to fans, or whatever, or like, you know, you're entitled to some type of piece of Taylor, so to speak. Not, you know, so would that sweeten the pot for you?
Yeah, a little bit. Okay.
Wait, let me throw out, third scenario, Luke's favorite Spider-Man saving the bus situation. What about branded concerts through companies? Like we've seen this with Travis Scott did a free concert through Fortnite. And, we were just talking about Epic Games. So that way it's a free concert. The money's put up by the company. It's all a marketing ploy. It's like a promotional thing. So these kids want to go to Fortnite to see this live Travis Scott. It's like a best of both worlds because you're not paying any money for a virtual concert. The artist is still getting paid from the company that's putting it up, and it's a free virtual concert that's fun.
Exactly, Aaron. That's like, oh, you guys, I love you guys. I swear to God. I swear to God.
It's mutual, bro.
That's exactly it. And I saw you guys interview the gentleman from TTCM today, and they need to get some marketing from us three. They need to get us in they need to get us in the room, and we need to market for them, because that's the whole thing. If you can just get artists in a room and just work their like customer set or whatever, their fan base, just like Epic Games did with Travis Scott, right? They're getting people to see their product. That's all they want to do. That's all they want to do, is they want to get people to see their product. If you're in the door, you're going to do stuff there. So say you buy an avatar, you buy something for your avatar, or you buy the next Taylor Swift album, like as an NFT, like you're in the door, you're going to do something,
Yep.
And if you open it up to stuff like this, where they have online user meet celebrities, where you get to meet the celebrities, you get special events, online on-demand content, like mini games, creating your own avatar. You get all of that with it. Oh my gosh, the possibilities are endless. It's like I was thinking before, like imagine buying land like next to Taylor Swift, where you get some type of incentivized something with Taylor. Imagine she has her own little Taylorverse where you can sell land, like virtual land next to Taylor, and be like part of her like clique or whatever, her virtual clique. Suppose she has her little Swifty shoes that you can buy that are like NFTs, and you're buying like Taylor Swift shoes for your avatar. There's just so much stuff in it that just like it's just so much stuff there that you can do with it. And like they also say here with the VR headset, become an active participant. So say they do like an American Idol, and you're in there, and you can you can be, you can become some sort of celebrity because you win the Sensorium American Idol, and now you get your own land in Sensorium, and your fans are going to want to buy land next to you. So like, oh, just there's so many ways to make money with that it's like I'm like salivating over here.
Good.
What do you guys think?
You know what I think? I think once concerts go back in person, I want to be the guy that's wearing like the VR goggles to get the picture that's sold to everyone else. Like you'll get paid to go to the concert, wear the thing, and then your feed is that's the one that's picked up by everyone else. That'd be a fun job.
Oh, you mean like, oh, okay, you're saying like once concerts getting going, they'll probably still do this to pick up more revenue anyway?
Yeah, like look, we got a good comment here from Solar Up and Up. Google Glasses worn
Shout out
by
Solar, always hanging out.
Yeah,
I didn't even talk about Voyager today yet. I don't know if you do it for him.
live streaming concerts from backstage. So imagine if Taylor Swift was wearing her own, VR glasses, then you got to pay for her feed and seeing like the reverse from the there's so many possibilities here.
Yep.
But let me say this one though. All right, this might be a naive thought, but I think that it's kids who are going to be paying for this stuff more than adults.
But Luke, that's the thing. They're already kind of like, what's the word? They're already kind of giving us a taste of it. You know what I mean? Like Fortnite, Roblox. That's pretty much this already.
And that's sort of what I was going to say is Roblox is maybe the best comp.
Yep.
But Roblox is interactive in a much greater way. I'm not saying this can't be, but in Roblox or like Minecraft, you're literally building a world.
Yes, and that's exactly what Decentraland is. And if we go here, let me pull up their actual Sensorium world. You can see that's kind of where they're heading. Okay, there we go. It's supposed to link off of this somewhere. I think it maybe here. Crap, now I'm not gonna be able to find it. It's gonna piss me off. Okay, so let's keep talking. I'll keep looking for it. So if you look at some of the guys they have here, they have they have different avatars, kind of how we were looking at Liquid Metal. But then they also have this like private room that you can buy, and they're like all these different T-shirts and stuff that you can buy. And I'm like, oh crap, that's exactly like a Fortnite-ish Robux thing. So here we go. Am I still sharing?
Yep, we can still see it.
So you see this deluxe cabin, and this reminds me, of like a Decentraland. Like you're buying land, right? Like you put this cabin on your land. You have your avatar, and these avatars are by an artist called Jason Ebair, I think his name is. And I know I've seen him sell work on Nifty Gateway and stuff before. So he's apparently an in-demand artist. These things look kind of weird to me personally. I don't like how they look, but to each his own. And then we have the white tee here, the boots, the like onesie. Pretty sure that's not a onesie, but you know what I mean. Charcoal pants, stuff like that. So they're heading in that direction. But I think based off of the little bit that they give us in the roadmap, that they're going to be more like okay, buy a Rock Nation shirt, you know what I mean, for your avatar. Buy buy Rihanna, what's the name of her makeup? Fenty like makeup for your avatar or whatever.
Nobody
So
needs that.
so like
Hold on one sec. I'm gonna be right back. Something crazy is going on.
okay. So I think that's where they're heading with it. And like I said, like like Luke said, yeah, I think that kids are really gonna gravitate to this because Fortnite and Robux are already pulling them in this direction anyway.
Somebody's
So,
shooting outside, Ruel.
oh wow.
I know why you moved to Arizona.
Wow. Well, you
You said
know,
someone's shooting outside?
I'm from the city, so I know that happens from time to time.
You've heard the sound.
Less in downtown though, where you're at. So
Yeah, I've never
Jeez.
heard it downtown. When I used to live about, I don't know, a few miles out of downtown, maybe 5-6 miles out of downtown. You know, every once in a while
Jeez.
you hear something, but I've never heard it downtown before.
The mean streets of Detroit, man.
As an aside, continue.
So
Producer
yeah.
AB's coming to visit later this week.
Not anymore.
Wow, poor my city getting a bad name, but it does happen in Detroit there.
Well, it's
So
actually funny. It's like I'm about to move from St. Louis, which is like ranked as like the #2 most dangerous city, to Detroit.
so
yeah,
you just
great.
so you're going. So St. Louis is #2. What's #1? Like maybe Chicago, Baltimore, maybe Detroit. I don't know. I
Yeah,
don't think
who
it's
knows?
#1.
I don't. We're not #1 anymore.
Not anymore, but back in the day, maybe.
Man,
Ruel
yeah,
left and the crime rate went down.
yeah, because I'm a troublemaker, man.
Yeah, he is a troublemaker.
You know,
Exactly.
you don't know, man. Gotta sling that Bitcoin. You know what I mean? No, I'm just kidding. So yeah, yeah. So yeah, I really think they're gonna put this. They're gonna bring this in like to a Rock Nation way and make use of all the Titanic people they have working for Tidal, like Lil Wayne, Rihanna, and Jay-Z, and Beyonce, who have mammoth followings already. You know what I mean? So
Absolutely.
they're already heading in this direction, and they're already partnered up with Epic Games, who's probably the ones is going to make the back end of it anyway. So
Which is what makes it interesting.
Oh my god. So yeah. Any questions on this from the crowd or anything?
Yeah, I mean, one question is Senso, is it a buy? Give us the hot take.
Producer note: this show is for entertainment and educational purposes only.
You're lame, AB. We're just three people hanging out with our Zinger Nation. All right, let's throw it out to the chat.
And here's the chart, by the way.
All right, so when did it start ripping? This is where I can get into it. So late Fab is when it started ripping. I mean, in how much is it up? It went from what, 20 cents ish to now $1.10.
So like 5x.
Yeah, like a 5xer right there. And it stalled out. Where are you at, Ruel?
So, I mean, I'm actually surprised that it's not higher than this, given that, I mean,
all right, so you like it? You're in it?
I'm so in.
Are you long right now?
I'm long. I'm so long. Yeah.
Are you deep?
I'm deep and long.
Okay.
For sure.
All right.
Well, I actually got to ask you about a couple other altcoins because I've had like some of my friends, like in my friend group, even like fraternity group chats, like people have been mentioning these random altcoins, and I feel like that's like a sign now if like, you know, mainstream, like people that aren't super into these different cryptos are talking about. One of them is VeChain. Are you in that one? I
Oh
know we've
yeah,
talked about
I'm in
VeChain on here
VeChain.
before.
It's actually on my watch list. Let's bring it up right now.
Do the charts kind of look similar? Oh yeah, they look similar.
And why a lot of people are high on VeChain is because supposedly China, or if I'm Trump, China. I can't even say it like him. It's
It
terrible.
comes from
You got to get your hands going while you do it, and then it'll be a little bit better.
China.
that's where it comes from. It comes from China.
They're supposedly really integrated with the Chinese and moving them towards like a digital Chinese dollar.
Well, apparently the Walmart's there, or some, you know, version of Walmart that they have is like going to start taking VeChain as a payment source or something like. Have you heard something like that?
I've heard a whole bunch of different rumors with them. So let's just
let me fact check real quick.
Go to and wow, look at that. In comparison, Cardano. This is where I really like to do. Like if you look at how many people are watching, it's like close to 75% of Cardano. Let's go. Zaquilla. It's more than Zaquilla. Let's go. Okay, Senso, which we were just looking at. $18.7, and this is with partners like Epic Games and Tidal. So VeChain, huge following right off the bat. Let's see what we can find here. I know they just partnered with someone.
Oh wait, hold on, wait. I found this. I'm gonna throw my screen up real quick because this is kind of cool actually. This is back.
All right, let's do it.
This is back in. I don't know if you guys can see this. I'll go full screen.
Yep, I
June
can see it.
June 25th, 2019 on Benzinga, Walmart China takes on food safety with VeChain. So let's go back to the chart and just see what would have happened if you would have just bought a little VeChain back in 2019, back when this article
Oh my
came
God,
out.
you'd be so happy right now. 2019, I think they were under a cent. Let's go.
And this is we put this out there from the newswire on, like I said, that's almost 2 full years ago, and we're still talking about VeChain. I mean, that's kind of wild.
Okay, so 2019.
Yeah, we're looking at yours now.
It's 003.
003. So that's 3/100ths of a dollar.
Yeah, and you can see it
Or
up
3/1000.
here. I'm pointing like you guys can see my finger. You can see it up here, right next to the green dot.
That's where it's at now.
No, that's where the price is, according to the arrow or the radical that I'm using.
Okay.
So on a 10th is 0.0038. Yeah, so you would have been really happy at that point in time. But I just, from the top of the line of Twitter, they have a partnership with Salesforce. And this was on the April.
That's pretty
9th.
big time.
Yes. Jeez. So yeah, VeChain is definitely one to definitely hold on to. And I forget
not
what
to derail you, but the other nano that's I've been hearing more of in my circles that, you know, not expected from crypto, you know, they're not like super into crypto people, is Nano. And I know you've talked about Nano too, right?
Nano.
Or no, you took Cardano. I get Cardano and Nano mixed up.
Yeah, we got to talk about Cardano. That's the one that I was hoping we could talk about tonight.
Okay, so as you can see, though, back to the VeChain, they're on a pullback. So it'd be nice to kind of buy in at this point if we go like 2 hours.
Ooh.
So
what's VeChain sitting at right now?
about 13 cents, but they were as high as 14 cents. Jeez, Vidi. Hold on, let me change this. It's breaking something. Okay. So it probably rose up on the and Senso. It probably rose up on the Salesforce announcement, and now it's pulling back from that announcement. So that was announced on like the 9th. Come the 10th, it as high as it's gonna go for that, and then pulled back here. So yeah. And then if we go Cardano, what Cardano's waiting on right now is the smart contracts, and they're supposed to be finished within like a month from now. And they finally hit a resistance here at like the 118-ish area, and they're finally kind of raising past that resistance. So from March to April, they were like in this whole area, and they're finally raising above that resistance here.
Yeah, it looks like it could break out a little bit right there. I like whenever a chart looks like that, you know, where it's kind of steady for a minute and then.
All right, so I never got on my ADA, but I might have to do that. And guys, if you're out there watching, I'm gonna make the ask: smash the like, share the stream, and of course, drop in your favorite currency. Question we didn't get to for Senso, Ruell, is if there's a max supply.
There is. Let's figure out what that is. If I could tell. So, okay. Okay, circulating supply is 12 million, which isn't, that's not that much. So, yeah, this guy sniffs something. It could move. Let's like in comparison, let's do VeChain and see what its circulating supply is. 64 million. Oh no, wait. 64 billion.
Okay.
So, in comparison, much less Senso, but I think VeChain is huge like that because it's supposed to solve a different problem. So naturally, it's going to be a little big like that. I'm willing to bet that Cardano is too. Yeah,
Okay.
31 billion. So, because it's looking to be more of a Ethereum type. We need a lot of these coins type play.
Should we compare that to Doge real quick? Because don't people talk about how Doge is just like endless supply, and that's why it's.
Sure, let's do it. Whoa! 129 billion.
Yeah.
So yeah.
I know people that have been holding Doge for a while are like not happy that they just keep putting more and more coins out there, and they want to see them kind of cap it at some point. But
it keeps trickling up though. It had reached like a resistance at 5 cents, and it's at 7 now. Let's go to the monthly chart.
What'd you say, Luke? What a joke.
Yeah,
it
it's
is,
a total
but
joke.
people keep buying it. It's just like
Yeah, because it's funny. Who here is in Dogecoin? That's the question that I have.
I've traded it. I don't hold any right now.
I got two things to tell you, okay? I traded Dogecoin. I went back in my email and I found it, okay? I traded Dogecoin when I was in college in 2000, I think it was 13. that was like it was before like Dogecoin was funny. Like we just did it for fun because we were like, yeah, I don't know. We would trade stocks all day. And then at night, like you're a college kid, we'd be up till 3 or 4 a.m. every day. We would just start trading Dogecoin at night with my friends. So there's one comment. Second comment, I bought $100 because I thought it was funny. Okay.
So then, were there any other coins you wanted to go over right quick, Aaron, before we do Anarchy?
No, I mean, I know we want to get to Anarchy because that's the other one besides Senso that, we're doing for the show. But if you don't mind pulling up Nano real quick, I mean, this will be kind of cool if you haven't really looked at that one yet, because I want to see your process and just get in like, I want to see your like DD, like base level, take 5 minutes to see if you're like interested in it, not interested in it, and what you would kind of see to guide you on that.
That'd be really interesting. So let's go Nano. I don't know that I've heard of this one. So I will look at the chart whenever it loads. But first I come down here and see what it's traded on. So this might not be one that you can get, because when it says Binance, it means like Binance and everybody else outside of the US can get the real Binance, but we get Binance USA, which is limited to only like 50 coins, whereas Binance has like tons and tons of coins on it.
So you're saying we might not even be able to buy this because it doesn't look like it's on Kraken or anything else like that.
Correct, and it doesn't look like it's on Uniswap either. And I think all of these ones are not ones that you can use in the US. Correct.
All right, well, then if we can't buy it, then we don't have to talk about it. There's no point.
Well, you never know when like they be listed on something else. Founded by Colin LeMahieu, heavily experienced software, blah, blah, blah. What makes it unique? Designed to be fast. In fact, most Nano transactions reach finality within less than a second. All right, so let's go on Twitter right quick and see how big the following is there. And I'm not going to do it now, but I'd scour YouTube and see if anybody's saying anything there, and then I would do Google Trends to see.
Oh, I think it's that third one down right there. Nano digital money for the modern world.
Okay, 114K. That's a good amount, and that's probably very much referencing the point that it's at $5 a share right now. But then let's take it to the actual chart. My gosh. Nano. Oh, okay. You can get it on KuCoin. They didn't say that. So that is available in the US.
On what you said?
KuCoin.
Okay.
Oh, wow. Yeah. Since the beginning of the year, it went from like $1 to $5.60 whatever. So 5x since the beginning of the year. All right, I'll have to do some more research on this, especially now that we know we can buy it. And I'll get back to you next week.
Yeah, I know my one buddy that was talking about it, and he's nowhere near as big of a crypto expert at you, was kind of giving me, every time someone gets into a crypto and they want you to buy it, they'll tell you why this one is the best one. He was saying because they're focused on micro transactions or whatever, and it's supposed to be quicker, that the idea is that could actually be used for like day-to-day transactions and not lose value in that like microsecond that it takes to do the transaction. Whereas if I bought something off you on Bitcoin right now and it took 3 days for you to get the Bitcoin and Bitcoin depreciated 10%, then all of a sudden, you're getting 10% less from the car that you just sold me or whatever it is,
Right. And that is a big thing. That's a lot of reason why people want to go fix Ethereum, because it's kind of slow. And that's why, you got things like Cardano, Zinquilla, stuff like that, because they want to be scalable. And I would imagine, and I haven't looked into it, but I would imagine they would want to do this for something like a bank transfer, because like a lot of our bank transfers take like 2 or 3 days to clear when there's like no reason for it, or something like stocks. A lot of those take, you got your clearing houses and all of that. If you got this nano here, that transaction would just happen, and it would, it would be no need to kind of have a clearing house. There would be no need to kind of put a hold on the money. That would just solve that problem.
Well, great. Maybe before next Monday, you can do a little more research on Nano, and we can kind of come to a consensus, see if we like it, see if we don't like
For
it.
sure. Teamwork makes the dream work. I love
Yes,
it. Let's
sir.
do it. Alrighty, so a little bit on Anarchy, and I did some research on these guys. I thought it was pretty. So basically, what they amount to is they have these NFTs, and you can see they're boasting 750K sales in 3 weeks, sellouts in minutes on Rarible. These are listed on Rarible, and that's pretty awesome. And basically, they have these like trading cards, and the whole thing is you kind of get on teams and you stake them. And when you stake them and play with them on teams, the staking kind of basically, here it is, breaks records 1, 2, and 1 on Rarible. You kind of level up by using these power ups, and whenever you level up, you get a higher percentage on your staking, if that makes sense. So to speak, let's look at Veracity here. I've been big on Veracity. This is my account. It doesn't show any account information, but I'm staking this.
It'd be
and
more
I'm,
fun if you showed the account information, in my opinion.
and I'm staking this for like 25.5 per year. So it gets really fun when it's something like this with Veracity, because you're kind of winning twice. I bought Veracity down here at like 2 cents, and you can see it's climbing to like it hit 5 cents yesterday on a little bit of a pullback at 4.8. So everything that I've already earned in my staking at 2 cents is now worth double. So Anarchy is doing that by saying, okay, let's make staking into a game where you work together with others and you stake and you actually win something. And they're kind of trying to make it their own esport. And that's where they're at right now. And if we look at them on Twitter, I have a lot less to say about these guys than Senso, because they're kind of just getting started with it. They have 20K followers. They have more followers than Senso. But to me, I think if they're really gonna want this to work, they're gonna have to get how
many followers do some of these bigger projects have?
So-
Because let me say this too.
Sure.
An item that you brought up that I really liked recently was that I asked you the question. I said, how do you know which projects are legit and which aren't, right? Because right now we're talking about these speculative coins. And one of the items that you brought up was that you look at the Twitter followers on the project.
Yep.
So I think that's interesting.
So like we did here with Nano, let's do like VeChain, for instance. This is 240K. And Cardano, I think, with something like 200K.
All right. So
Oh
it's a
no,
big difference.
So they're nearly 400K. They're nearly double VeChain.
Okay.
And I think Ethereum has their own Twitter. Ethereum is
sure
like
it does.
900K.
Yeah. Okay.
Wow.
So
I'm
So
at 4K on mine, so maybe I should launch a project when I get to 20K.
man, you should have a blue check mark. So yeah, so in comparison, Anarchy only has 20K, but I think like so NBA Top Shot to me, they're the blueprint for any NFT people, and
Absolutely, no doubt about it.
so they're at 228K, and a lot of the ways they did this, in my mind, the three biggest things that they done is one, they partnered with the NBA. They fit a need too. The NBA doesn't have any. They don't have that many fans coming in the door. So hey, let's sell these Top Shot things. They get money every time it's sold. Every time it's sold. And by they, I mean the NBA and the Players Association. So they're partnered with the NBA. Not only they're partnering with the NBA, they're on both sides of the table. They're partnered with the players and the owners. So and with that comes built-in promotion from the NBA. But on top of that, they went and they found YouTube influencers, and they paid them. They paid them to kind of just try it out and show it online. So I think Anarchy needs to follow in the footsteps of them and do something similar and pay influencers to play Anarchy and get it in the face of people.
Okay.
Now, I don't know if there's some like NBA that they can partner up with. I mean, they're partnered up with Wearable, but that's not like the NBA has its own fan base. They have their own, they have their own marketing. They need to partner with someone who's going to market and push them.
Okay.
I saw something interesting about Top Shot today. I don't know how true it was. I saw it on Twitter. I'm just gonna pull up the hold on, the tweet that I'm looking at real quick. Do you know? I don't know if you know this name, Michael Antonelli, Ruell.
Sounds like a news reporter.
I think he's big in the like crypto game. He's market strategist at R.W. Baird, author of Bull and Baird. Okay, so it says, if you try to withdraw money from NBA Top Shot, you get this message. You'll receive access after passing a review on our end. No further action is necessary from you. This process may take 6 to 8 weeks due to heavy demand. We appreciate your patience.
Oh, yeah. Yeah, my money is stuck in NBA Top Shot too, which...
So if you try to pull your money out of NBA Top Shot right now, you can't get it willy-nilly. You have to like wait.
I can't. And my money's been in there for like almost 6 weeks, which is kind of crafty and illegal at the same time for them. Like, of course they don't want everybody to pull out at the same time. That sounds so wrong at so many levels. But
we know what you're getting at.
They don't want everyone to Jesus Christ.
Withdraw.
I can't think of a different word.
Withdraw.
Yeah, there we go. Withdraw. Of course, they don't want everyone to withdraw at the same time, right?
Yeah. There's a reply on there that says, the reply on here goes, it's worse than you may realize. 1,000 daily limit, and you ask for a withdrawal until a previous, which can be 1 to 2. I mean, and some people have like cards on there that were worth like 200 grand. So if they can only pull out $1,000 of that daily, I mean, I know how I'd feel, but I'm not gonna,
Right. I'm pretty pissed about it because, it's just sitting there and they're crypto plays that I could have put that money on, and definitely like it's been sitting in there for like a month. I definitely could have doubled the money that's been sitting there. I could have done that, and I can't. But sort of like as a person who like invests in the things around it, like Flow blockchain and stuff like that, it's smart because it's keeping the price of the cards and the NFTs high. So I'm torn about it. I'm torn about it because it's keeping the product and the price of the NFTs high, but at the same time, it's like I can't get my money out. So I'm a little torn about it.
Well, hopefully you'll be able to get it out eventually, and we'll be able to make, you'll be able to make moves with that, keep it liquid. Because yeah, no one. I mean, people wanted to trade on Top Shots, and now I think some people are upset that their money's kind of illiquid, that they can't touch it, whatever. So we'll see what happens there. That'll be an interesting story to watch.
It really will, but I think eventually, and I think what they're doing is like this whole like rotating 6 week thing. So if you signed up for Top Shot 6 weeks ago, then you're more likely to be someone who can withdraw your money right now. But if you just found out about it like a week ago and you went on there and you managed to lucky enough to like get a pack, you're not going to be able to get your junk out for like 6 to 8 weeks. You got to wait the whole amount of time. So I think, honestly, I think they would be fine either way if they just let people take their money out right now, because a lot of people do like really like lock in and like earn money and try to like time like people the buying trends on there. So I don't think that like if everyone had access to take their money out, it would just like make NBA Top Shot not the top NFT anymore. It would, but it would be an impact for them for sure.
Mm-hmm.
What do you think about the Top Shots, Luke?
Not a fad. I think it's here to stay. I think it's going to scale to every single industry in a big way, or every single sport at least in a big way.
And I honestly think that every other sports team, like the NFL, NHL, who else am I missing? MLB, they should really follow this blueprint. And I think Topps and the MLB made some deal today, or
Who did? Oh, Topps in the MLB.
Yeah, so Topps
Okay.
is the stock muds. If they don't follow this blueprint, I really don't
And that's
think.
a SPAC deal, right?
Yes, and I don't know what, like, people got all excited that Topps was like doing something with them. Topps is already, they have NFTs out already. Like, remember the site that I was showing you guys, NFT Hive? Topps has NFTs on here already. Like the Garbage Pail Kids. I don't know if you guys remember them. This is Topps IP right there. Can you see it? Topps GPKIO. Guys?
Yep, we can see it.
Yep.
Okay. So I mean they already have NFTs out, but as far as like, but that's the thing, right? The marketing. That's why I was saying like NBA Top Shot, their blueprint has really been great because they've been marketing the crap out of it. You got YouTube. They like their marketers really understand how to market today. They're having YouTube influencers do this. In fact, I think they even created some influencers that just specifically talk about Top Shot. That's all they do. And you know, they have the NBA players on there. They're streaming on Twitch on every pack drop. Like they understand how to market to people today. And I'm not sure that Topps does, or the people that run Topps. I'm not sure they understand.
Yeah, but I would imagine that they would find that expertise though.
Yeah, they
I mean,
need
I
to
don't
do
know
that.
that.
They really need to do that.
But I would expect it.
Because no one knows the Street Fighter, like Street Fighter's out there and people know about it, but no one knows that they're really doing the Garbage Pail Kids. No one knows that they're really doing the Godzilla stuff. They're failing. Not that they're failing, but they're not they're not getting the most bang for their buck, and they really need to do that. There's no not excuse for them not to have these things marketed properly. And one that we've talked about before on here, Ecomi, they did a really good job. They followed that same blueprint. They had YouTube influencers talking about them, and they have tons and tons of different IP that they sell on these apps. There's great IP, like Batman. They have Powerpuff Girls. They have Ghostbusters, as you can see. So Ecomi's, they're doing it right. They have Ultraman, and they're really making they're following that NBA Top Shot blueprint to a T. And if we're to go onto their Twitter, you can see 64K, which is pretty good. No drops this week, but last week they dropped like the DeLorean, Back to the Future, some scantily clad little girl there.
Yeah, but okay, so it's creepy.
And
the Back to the Future thing is not hot, in my opinion. It's like a cool gimmick. It's like a pop on One Day and Die type scenario, I think. I think that's great about Top Shot, right, is the content is always being created. Every year there's a new star. And even more importantly, there's new speculative stars, right? Like, oh, this is going to be the next LeBron. Every year you've got 18, the next LeBron, the next Kobe, right? Back to the Future, I mean, they're not making Back to the Future 4. Maybe they will. They're sure as shit not going to make Back to the Future 8. Right? Where you're speculating, oh, shit, Doc's going to have a bigger role in number 6.
Is Christopher Lloyd still alive? I have no idea. Guy's has to be pretty old at this point. Well, by CoinGecko's top 30 trending coins, Eternity, we've talked about them before. We haven't talked Shopping.io yet. Ecomi is third. We've talked them. Anybody else we've talked on here? Audius, we've talked them. We've talked Engine. We've talked Rarible. We've talked Decentraland. Who else? We've talked Harmony. Oh, Harmony! That reminds me of something. They just opened their own NFT site. It's called Da Vinci Gallery. And I was actually able to post my NFT on there. And it cost me nothing because it's on the Harmony One network instead of the broke down Ethereum network. All opinions are my own, not Benzinga's. So One, which is actually, we talked about One on this. Okay, that's a stock, not crypto. We talked about One on this very show at about 2 cents. Ran all the way to 24 cents, only to come down here to about 14 cents. But now that they seem to be bouncing off of this support here. So let's go like an hour. So they got down to like 12 cents and bounced off here, then back down to 14, bouncing. So seems like they're on the bounce back, especially now that they have this NFT marketplace here. And if we go on their galleries, you can see that since it really doesn't cost you that much to post anything, let's explore. The quality of stuff on here is a little bit lower, as you can see.
Yep.
And there's still some fancy things, but I was on here a couple of days ago, and you can see like at least my picture has something. Like it took some time there was just like straight like a family picture on here. I was like, what? Like they did nothing to it. They just posted a family picture. God, I'm not gonna be able to find it now. So, but it seems like, oh well, isn't that just the kitty?
All right, Ruel,
So,
and it is officially 9 o'clock, which means that I've been at the Benzinga office for more than 15 hours now today. So give us some final words of wisdom.
all right, so check out this Da Vinci gallery. I think if you really want to be a person that is posting NFTs and trying to see if there's anything there, you can go on here and actually post it. All you have to do is get a one wallet. It's really easy to get one, and you can kind of post on here for free. The only thing is when I tried to post, I had a problem. I had to do it this way. I had to go through my profile, through my creations, and then post it that way. All the other ways didn't work. Because I think, of course, they have some bugs in this site because it's only about it's less than a month old. Really high on Senso and Anarchy. You can buy Senso on KuCoin. You can buy Anarchy on Who, HOO. And next week, I'll hit you guys with Nano. I want to do some research on that. And let me know if there's anything you guys want to see next week. I'm hitting up NFTs because they're still hot. There's still a lot out there. Like when I found Senso, I was really blown away that they had all these different partners, and they're still, they have less than 20K people on Twitter. But the it's there. The use case is there. The future's there. Yeah. Let me know if there's anything you guys want to see. Be it stock or
Boom.
crypto, we can talk about it.
I like it.
Beautiful. I'm excited to get your DD on Nano next week.
For sure. I really
And
want
let's
to know
talk
their
about
use
the
cases.
stocks too, because we're going to be coming off a Coinbase IPO. I want to 100% talk about Coinbase next week. I'm probably
For
going to talk
sure.
about Coinbase in the midday show plenty, but not with you. And then you're a better conversationalist than just standing there by myself.
For sure, right? But on that note, Muds, I'm really high on them. Tops, even though I just sat here and said they need to market better, but they have a lot of IP, like the Garbage Pail Kids, the MLB, all of that. Tops has been around for a very, very long time, but I think they need to market a little better. But that doesn't make me not high on them. I am high on those guys. And yeah, so maybe next week we go into just NFT stocks. And since
And
the whole
crypto
Coinbase
stocks.
is coming,
I'm
like,
over NFT stocks. Are you still into NFT stocks?
yeah, I'm in NFT stocks. And which ones? The three I'm in is Muds, Leaf, and Genius. Now, Genius people need to really watch out for, because there's, the way Joel says it, I think there's a whole bunch of pain, because there was one day the stock went up to like $12 and went right back down to like $2. So you definitely there's a lot of pain here. Let me just reset this. And Leaf, I'm into them because they have a whole bunch of IP that could be NFT'd as well. And they just got bought by a company, Graham Holdings. But they had a investor that was a hedge fund that owns 25% that said, hey, I think selling for $8.50 is grossly low. So they're saying that they think that Leaf is worth like $15 a share.
Wow.
So and when you look into it, the LP, the IP that they have Live Strong under their belt, and they have a couple different art galleries. that they can make use of to do NFTs if they wanted to, which is probably why Graham was interested in them. So I'm high on Leaf. This is, I guess it's just not going to load. I'm high on Leaf. I'm high on Muds, and I'm high on Genius, of course, because Genius, they recently signed a deal with Marvel, with Stan Lee, Marvel Studios.
Yep.
And they have shows with Arnold Schwarzenegger and Shaq. If they NFT any of those shows, if Shaq wants to come out of retirement, do a little rap right quick, put it on NFT, who knows? Maybe we get Arnold and Shaq rapping. You know what I'm saying?
Yeah, that'd be a sight to see.
Oh my God, that would be a sight to see. I would buy that NFT just on a joke factor to just have it. That would be awesome. Make that happen. But Grass knows everybody.
All right, Ruel.
Gonna make a call.
Well, we will be back next Monday. Looks like we got some other Cardano fans in the chat. Shout out Neville's. All right, y'all. Well, we'll be back tomorrow. Pre-market prep, 8 a.m. Eastern. Be there, or be square, as they say. And then, of course, we'll be back for another episode of Ruell's Report next Monday. Can't wait. Any last words? Any last thoughts?
Let's go Coinbase. Come on, baby. If Coinbase screws up, and when I say they screw up, if the share price trades for 1 second below where the stock opens, we are all screwed. All of us that are in these crypto stocks, whether it's your miners, it's your brokerages, it's your NFT stocks, we are all screwed. That's the line to watch on Wednesday, guys. I'm going to be watching it like a hawk. I've got a lot of these stocks. I've been the Voyager bull forever, Ruel. I'm telling you right now, if Coinbase shows trouble on the day that it opens, I'm dumping the whole stake. Boom. Market order out the window. I've got my 5,100% return. I'll take it. If Coinbase rocks, right? And when I say rocks, it needs to have a high valuation before it trades. And then the shares need to be up 25, 30% on day one from the open print, which is already going to be run up. Then we'll have some room to run. Okay.
Oh,
that's my last note.
One last thing, I forgot. I totally forgot to hype up the channel. Check out my channel, guys. Black Rue Investing.
Andrew Ruell's Twitter, Aaron Bree's Twitter, and mine are in the comments.
Yep.
Show us some love for this late night sesh.
I do tons of crypto videos, and I love it if you guys check out my channel. I go deeper on Veracity, a coin called Vidi, which we didn't go over today, and I'm missing one. And also, another video on Senso. So check that out.
That's when you got to go. You got to go to the channel to find out what the last one is.
There you go. That's
all right. Well, I threw it in the chat. So go there. Go subscribe to Ruell's YouTube page. He just needs a couple more to 200. So let's get him up there. And all right, y'all. Thanks for hanging out with us tonight.
Peace.